So we're going to go to Introduction to Cost and Management Accounting. In your book, it's page 3. It is going to be page 3 in your book. Just give me a minute. Okay. Now coming to the introduction chapter, here initial session, we're just going to understand various terms which are there in cost and management accounting. I'm going to explain certain terms. You are not required to write any notes, any running notes you want to make it. Any notes which I want to dictate, I'll tell you when to write it. So if I'm telling you certain notes to be written, write at that time. Otherwise, focus is more on understanding or listening. Okay. Running notes is your wish. You want to write it in the reverse order. That's purely your wish. Now, okay, let's first understand. You tell me what do you mean by the term cost, because at least this term you would have heard many times. I want you to participate. People in live, online as well as physical, please participate. What is cost? Whatever name, whatever, don't see in the book and all, whatever comes to your mind. What do you mean by term cost? Price, expenses. Okay. Anything else comes to your mind? Value of some product. Okay. I think broadly it is covered there. So basically cost refers to the expenditure. Cost refers to the expenditure, or cost refers to the price you pay for a product. Price you pay for a product. Cost refers to the value of a product. You can say in different words, but normally we say cost means expenditure. Cost means expenditure. So entire cost accounting focuses only on expenditure, not on income. We are not bothered about the income part of it. We're only bothered about the cost part of it. But some question will ask you to calculate profit also. So there you will have to consider sales. Sales is the only income we consider. There are other incomes like you have dividends received, you have miscellaneous income. All that do not come in cost accounting. Cost accounting is not bothered about all these miscellaneous income and all. Costing is only bothered about the expenditure. Focus is calculating the cost of a product or service. So here I'm not bothered about. Only thing is, if you want to calculate profit, then this cost needs to be compared with the sales. Cost needs to be compared with sales. For that one purpose alone, I'm going to record sales in my costing data and calculate the profit. But I'm not bothered about other items which are there. So miscellaneous income, your other income, non-operating income, all that is costing not bothered about. Costing is only bothered about the core operations of the company. So cost refers to the amount of money that a company spends on the creation or production of goods or services. It could be for a product, it could be for a service. Focus is just on understanding things. If I want you to write something, I'll let you know. Running notes you can make, that's your wish. You want to write in the book, you want to write separately, that's all your wish. Then what is costing, what is cost accounting, what is cost accountancy? Technically there is no difference between the three. Okay, technically there's no major difference in the three. Sometimes I'll use the word costing, sometimes I'll use the word cost accounting, sometimes I'll use the word cost accountancy. Though they have given separate names to it, there is a definition which is available, but broadly all the three are same. Basic thing is costing is process of ascertaining cost. I want to adopt costing for CA inter classes. Now what I'll do, first expenditure we are going to incur is electricity. So I'm now trying to determine how much electricity expense I'm going to incur for conducting CA inter classes. Second, rent expenditure. Third, faculty expenditure. Fourth, some other expenditure could be there. So understanding every expenditure and ascertaining it is what costing is all about. So I'll have to understand what are the various expenses I'm going to incur to take CA inter classes. Cost accounting is the process of accounting for cost, which begins with recording of income and expenditure are the basis on which they are calculating, and ends with preparation of periodical statements and reports for ascertaining cost. Very simple. Cost accounting is also recording your various items to identify the cost or to ascertain the cost. You are required to calculate the cost. So how are you calculating the cost is what cost accounting is all about. You see the term here, income. Income means only the sales part of it. Income is only the, just let's wait for 2-3 minutes. So let's continue. So what we are trying to do in cost accounting is basically trying to find out the cost of a product or service. It says periodical statement. This periodical statement is called cost sheet. Cost sheet is a statement where you calculate the cost of a product or service. In financial accounting, it was called P&L and balance sheet. Here it is called cost sheet. Cost accountancy is the application of costing and cost accounting principles, methods, and techniques to the science, art, and practice of cost control and ascertainment of profitability. Ultimately, you'll have to find out the cost of a product or service, calculate the profit based on that. Along with that, you do something called as cost control and cost reduction. These two terms I'll touch upon as we proceed. Management accounting, application of principles of accounting, financial management to create, protect, preserve, and increase value for the stakeholder. In simple words, management accounting is concerned with providing information to assist decision making. Focuses only on the decision making part. Cost management. What is cost management? Is managing the cost of a company. For example, Bharadwaj Institute did CA inter costing calculation. They said cost of CA inter classes. We found that to one student, our cost is 80,000. For one student, the cost for us is 80,000. Our fees itself is not 80,000, but the cost is 80,000. So now I'm in a problem scenario because cost is 80,000. Fees which I'm charging is 70,000. So my cost is more than the fees which I am charging. I cannot increase the fees because that is what the market is charging. So now I have to find ways to reduce this cost, control this cost, manage this cost. If that does not happen, then I'll start reporting losses. So cost management focuses on how do you manage cost. Application of management accounting concepts, method of collection, analysis, and present to provide the information needed to plan, monitor, and control cost. Plan, monitor, and control cost. Somehow I'll have to bring down the cost. I'll have to bring down the cost. So how can I bring down the cost is the focus of your cost accounting. One is controlling cost and second is called reducing cost. Difference you'll understand in some time. I'm going to touch upon that. Now write notes. Write notes. Chapter 1, Introduction to Cost and Management Accounting. Chapter 1. Maybe you can go to a fresh page. Just give me a minute. Just 1 minute. Okay. Chapter 1, Introduction to Cost and Management Accounting. You can write point number A or question number 1. Question number 1, underline that. Question number 1. I'll give simple explanation only. Point number A, cost equal to expenditure incurred. Cost equal to expenditure incurred on product or service. Expenditure incurred on product or service. Incurred on product or service. Point number B, costing. Costing. Method used to ascertain costs. Method used to ascertain cost. Method used to ascertain cost. Point number C, cost accounting. Cost accounting. Cost accounting. Preparation of periodical statements. Preparation of periodical statements for ascertaining and controlling costs. for ascertaining and controlling costs. Technically, there's no difference between costing, cost accounting, and cost accountancy. ICA material has given three definitions, so I'm writing them. Cost accountancy. Cost accountancy, application of costing and cost accounting principles. Application of costing and cost accounting principles. Costing and cost accounting principles. Management accounting. Management accounting. Having relevant information for decision making. Relevant information for decision making. This is more related to the decision making area. Having relevant information for decision making. Last one was cost management. Planning, monitoring, and controlling costs. Cost management is otherwise managing costs. Cost management is how do you manage the cost. Planning, monitoring, and controlling cost, otherwise called as managing cost. Clear? This is the first question. This is a small summary note which you can use it for whatever notes I dictate will be useful for revision purpose. So this summary notes is going to help you in doing the revision. Clear? Any doubts on this? Done. Let's move to the second question. What are the objectives of cost accounting? That is, why are we learning the subject of cost accounting? First thing I've already explained, cost ascertainment. What is cost ascertainment? Is getting to know what is the cost of a product or service. Without having this in place, I'll not be in a position to take other decision. So if I get to know Bharadwaj Institute is spending 80,000 per student for CA inter classes, based on that I can take certain important decision now. So first is getting to know the cost. Second is determination of selling price and profitability. Now what is this is, if you know the cost plus profit, cost plus profit is the selling price. I know the cost, I add the profit margin and fix the selling price. This approach was working some time back. When I say some time back, it's some 15 years, 20 years back. Organizations were calculating the cost, adding the profit margin, they were fixing the selling price. This approach is not working in the current scheme when the market is very competitive. That is, there are two types of market. There's a seller's market and there's a buyer's market. When sellers are more dominant, you will see the pricing to be cost plus profit. I have the cost, add the profit margin and then fix the price. Now price is mostly determined by the market itself. That is, today if somebody wants to get into a field of let's assume I want to sell one toothpaste, my pricing would be closer to the price which is there in the market. It can't be based on the cost which I incur. If a normal toothpaste is getting sold in the price of 50 to 60, that is the price at which I also need to sell. I cannot randomly price it very high just because my cost is on the higher side or cost is on the lower side. But still, without knowing the cost, you will not be in a position to fix the price. Though it is market driven, because if I don't know the cost, I cannot take a call of not continuing or discontinuing the CA inter classes. If my cost is 80,000, I want to fix 1 lakh, students are not ready to give. If students are not ready to give, I should discontinue the classes. What is the point of introducing the classes where I am going to suffer losses, and students are also not in a position to pay. So there could be some challenge with my cost structure. There is some problem in my costs. I'll have to rectify them. So cost accounting department helps in determination of selling price and profitability. Though in a competitive business environment, selling prices are determined by the external factor, but cost accounting system provides a basis for price fixation and rate negotiation. So you can try to do something, but ultimately it is a market driven thing. It is a market driven aspect. Next comes cost control and cost reduction. Both are interrelated. Let me explain them together. This is a very important term in this area. For doing cost control or cost reduction, first thing is cost ascertainment. What is cost ascertainment? Is getting to know the cost of a product or a service. So you'll have to first calculate the cost of a product or service. After that is calculated, after the cost of a product or service is calculated, the next step is to do something called as cost control or cost reduction. Now what is cost control is, Bharadwaj Institute has told me we spend 40,000 rupees per student. This is the limit I have given you. So we start taking classes. As we start taking classes, in the first month we have spent 10,000 per student. Next month we have spent another 10,000. We have reached 20, we have reached 30, we have reached 40. Moment you reach 40, you put a stop, saying that you cannot spend more than this, because the limit for you is 40,000. If you are spending more than 40,000, it's a problem. So here in cost control, what I do is I give a limit and I keep regularly checking whether I'm exceeding that limit or not. So assume you are going on a trip. For the trip, your parents have told you 20,000 rupees is what I'm going to give you. Whatever you want to do, please manage with 20,000 for the next 5 days. First day, you have spent some money. Now you know you need to survive for another 4 days. You will alter your expenses in such a manner that you're able to manage with the 20,000 rupees. So cost control is ensures that expenditure are in consonance with a predetermined set standard. I have given you a standard. Please don't exceed that standard. Please don't exceed that limit which is given to you. And any variation is noted and reported on a continuous basis. So I gave you 20,000. First day, you send me a message saying extra 2,000 has been. You send a message to your parents saying that I've spent extra 2,000 than what we had thought of. 20,000 was given to you. In the first day, you are planning to spend 3,000 rupees. You spent 5,000. So you report that to the management. You report to your parents saying that you have spent more. Your parents say next day, please cut down these expenses. Please cut down these expenses so that you are there at that 20,000. You are there at that 20,000. So you will be doing a regular monitoring. In a regular monitoring, what will happen is you don't miss out on cost. So basic thing is, what is cost control is planned way of incurring cost. When you don't have any proper plan, no, you will incur expenses on items which are not needed also. When you have a proper plan in place, when you are going to be questionable to your parents for every expenditure you incur. Then you also know that you cannot randomly spend money. If you are not questionable, you ask 20,000, they give you 20,000. Suddenly you ask another 10,000, they give you 10,000. You ask 5,000, they give you 5,000. You are not going to have any control on your expenses. You are going to randomly spend money because there is nobody questioning you. In a corporate management is going to question. My shareholders are going to question the management. So they want the cost to be under control. Cost to be under control. For that, what they are doing is they are doing a continuous comparison. So determine what I want, 20,000. Measure actual performance. Every day I want you to report. Then I compare the actual with the set target and analyze the variance. Why variance happened, and take some corrective action. This you do, you'll be able to cut down on the cost side. Then what is cost reduction? Cost reduction is analyzing your manufacturing process and doing a real and permanent reduction. What is real and permanent reduction is, I gave you a budget of 20,000. You said, let us do this and we are going to spend 20,000. On day 1 or day 2, you are planning to incur some 5,000 rupees as some expenditure. You are planning to do something and you are to incur 5,000. Now you have found out that there is another way of doing the same thing. That is, you wanted to go to some place. You are planning earlier to go in a cab. Now you found out another way of going to that place, and that's a public transport, and you're able to cut down on the cost. So in a manufacturing company, this is not a very good example, but in a manufacturing company, I'm manufacturing a product. When I manufacture a product, I do 10 steps to manufacture the product. Step 1, step 2, step 3, step 4, step 5. So many steps are done to manufacture the product. Suddenly I find step 6 and step 7 is not needed itself. We don't know why we are doing step 6 and step 7, but still everyone was doing, we were also doing it. You removed step 6 and step 7. No change in the quality. But cost came down. Cost came down. Real and permanent reduction in the unit cost without impairing the quality. Without impairing the quality. So if you are in a manufacturing company, you are doing 10 steps to manufacture the product. Suddenly you put a stop on 1 or 2 steps. Nothing changes and company is able to reduce the cost. Each activity within an entity is segmented to analyze and identify value added and non-value added activity. All non-value added activities are eliminated without affecting the essential characteristic of the product or process. For example, for your classes, we conduct something in the class. We tell you that some MCQs tests are there. We keep some tests. We do some 10 activities for student. We ultimately find out that student are not valuing this test activity. Let's just take an example. Test activity is not adding any value to the student. No student is bothered about whether we keep test or we don't keep it, which is not the reality. But I'm saying just assume that we are keeping test and we get to know that from student. Whether you keep test or don't keep the test, it does not matter to us. If that is the answer, that is a non-value added activity. It does not matter to my students, then what is the point of doing it? What is the point of doing something which is not even mattering to the student? No student is valuing that activity. Eliminate it, cost will go down. Eliminate that activity which is of no value to the student. There are multiple activities we do. If at all something is not adding value to a student, ideal thing is to cut down on that activity. So in a manufacturing company, if there are multiple activities happening, please identify what is value added, what is non-value added. Conducting continuous research and study to know the most optimal way to manufacture a product or render a service. The next is decision making. Decision making is very simple, related to your management accounting. Cost accounting will provide all relevant information. That is going to assist management in planning, implementing, measuring, controlling, and evaluation of various activity. A robust cost and management accounting provides internal and external information to the industry, which will be relevant for decision making. Ultimately, I'll have to take decision. For decision making, some information has to come from the cost accounting side. Clear? Any doubts in this? Go back to the notes, right? Objectives of cost accounting. In bracket, question 2. Objectives of cost accounting in bracket, question number 2. Cost ascertainment plus cost ascertainment, cost control, cost reduction. I'm just giving those headings here, that's all. Cost control, cost reduction, determination of selling price, ascertainment of profitability, determination of selling price, ascertainment of profitability, decision making. Now what we are doing is I'm telling you to write notes in the class. Ideally, this is something I had told students to on their own, but many students were not doing it, so I am forced to do it in the class. Now whenever you write notes, one thing you need to take care is the notes are specific to a student rather than a faculty giving a notes, because I understand this really well. When I read my notes, I understand it better. When you read your own notes only, you will understand it better. So in case you want to write some extra points on any question, please leave space, because I have given only this. Somebody may want some explanation on what is cost ascertainment, cost control. You want to write it, leave some 2-3 lines and then fill it later at home. If at all you want to add some extra points in the notes, you can leave some space when I give the next question, so that you can fill it if at all you want. You don't want to write anything extra, because in the class you will not have time to write on your own, because I'll be moving to the next question. So in case you want Want to write something extra, leave space so that you write it later. Now I've already explained cost control and cost reduction. Let's quickly go through the differences. Cost control aims at maintaining the cost in accordance with the standard. That is, I have told you, I have given you a limit. Please don't exceed the limit. The limit is given to you. You will have to ensure that the cost is within that limit. Cost reduction is concerned with reducing cost. In cost control also focuses ultimately reducing cost, but focus is in a slightly different manner. I have told you 20,000. Why I told you 20,000? Because I don't want you to spend more than 20. So that is also a way of controlling or reducing cost only. But here I told 20. Now you can ask me why 20? Why can't it be 15? Why can't it be 10? Why can't it be 5? Because cost reduction says the cost can continuously keep going down. Cost reduction recognizes no condition as permanent, since the change will result in lower cost. Why 20,000? Why can't it be 19? Why can't it be 18? Why can't it be 17? Why can't it be 16, 15, 14, 13? You will have to continuously keep reducing the cost. Cost control, 20,000 limit given to you. As long as you are within 20,000, I will not cross question you. You exceed the limit, you are going to get questioned by the management. So cost control seeks to achieve the lowest possible cost under the existing condition. That is, I've told you the scenario, 20,000 is what you need to achieve. And in this scenario, in cost reduction, you are trying to find out some different ways, going by a cab, vis-a-vis going by public transportation, looking at some other ways of doing the manufacturing, so that you're able to cut down on the cost side. Emphasis is on past. Why emphasis is on past is, I look at the past data. You did one trip last year. You spent 20,000. Please spend another 20,000 this time also. Don't exceed that limit. Here, my focus is more on the present and future. Normally, we say preventive function is good, but only in this context, preventive is not a good function. Corrective is good. What is preventive function here is, in cost control, what happens is, I tell not to spend more than 20,000. I prevent you from spending more than 20,000. In cost reduction, what will happen is, you already spent more than 20,000. I understand what went wrong and take a proper corrective action. Take a proper corrective action so that we don't spend more money. So it is more of a corrective control where I'm trying to eliminate some errors which have happened in the company or some issues which are there in the company. So cost control is a preventive function. Cost reduction is a corrective function. Cost control ends when targets are achieved. Cost reduction has no visible end, because 20 was the starting part. You said 20 is achieved. I say, why not 19? You achieve 19. I say, why not 18? You achieve 18. I say, why not 17? You achieve 17. Why not 16? Why not 15? Why not 14? Why not 13? So, though I cannot keep continuously reducing it, but you will have to keep doing this process on a continuous way. There were 10 steps in manufacturing. You eliminated 2. Understand the 8 also. Is there a need to reconfigure some of the step? It's not necessary to eliminate everything, but step 1 I was doing differently. Can I do it in another manner so that I cut down the cost? Quality is not changing. So there is no end for cost reduction. It's basically like saying nobody can say that he's perfect. What is cost reduction is, you are never perfect. Cost reduction basically assumes company has never achieved the perfect cost. You can keep reducing the cost. There's always scope for improvement. Nobody can say he's perfect, because always there is a scope for improvement. Cost reduction basically says always there is a scope for improvement in the company. Clear? Just give me a minute. This is not given to you as of now, but see 5 and 6. This is a MCQ which is still under preparation. You see this and know the answer. We'll discuss it. These are 2 questions. I've discussed this, but MCQ will come like this. This book is under preparation, so once it's completed, I'll give it to you. What is the answer to 5? All of the above. 6. Which of the following is true about cost control? We have discussed cost control, cost reduction. Tell me which one is there. Is cost control preventive function or corrective function? So first one is wrong. So MCQ you will have to eliminate. You do a job of elimination. It challenges the set standard, that is, it does not agree to a standard, which is wrong. Cost control works with a set standard. Cost control works with a set standard. Third one is true. It ends when the targets are achieved. Exam question will come like this. No need to remember what is cost control, what is cost reduction. You have to understand all the points so that you are able to ultimately choose the right one. Let me see if anything else I can. What does this tell me? A lot of things look similar there, so see and tell me what should be the answer. What is the answer? Minimizing all expenses to the lowest possible level looks to be an objective, but I don't think so. That is what cost control does. It tries to achieve the lowest possible cost, but there is nothing like I can keep reducing. Maintaining cost at a constant level, it's not necessary that the cost has to remain constant. It can go up, it can come down. Somewhere I feel this should be the answer. Managing and regulating cost within a predetermined range. A is also more related only, but to me C looks to be the most correct answer. Fourth one, eliminating all non-essential costs from the budget, is also related to cost reduction. That is related to cost reduction, also related to cost control. But ultimately, answer should be managing and regulating cost within a predetermined range, because there's a range at which I want to work with. I want to work in a specified range. That is what we do in cost and management account, or that is what we do in cost control. So important focus is not by hearting things. Important focus is understanding the concept so that you're able to apply it in an MCQ. Clear? Go to the theory notes. Question 3. Cost control versus cost reduction. Cost control versus cost reduction. Cost control hyphen achieve cost as per set standard. Achieve cost as per set standard. Preventive function. Preventive function. Focus on past. Focus on past. Ends if target is achieved. Ends if target is achieved. So I'll have to achieve cost as per the set standard. If I've achieved that, cost control is over. No need to worry about it. It's a continuous exercise. Next period, you'll have to continuously keep doing it. But the objective is to achieve the cost as per the set standard. Cost reduction. Real and permanent reduction in cost. Real and permanent reduction. Real and permanent reduction. Real and permanent reduction. Corrective function. Corrective function. Focus on future. Focus on future. No visible end. No visible end for cost reduction. There's nothing like perfection. You never achieve perfection, so you never get the lowest possible cost. Perfection is never achieved. So here it says you can never achieve the lowest possible cost. Nobody can say that he has reached the stage of perfection. So same is what this concept is saying. You can never reach the stage of perfection. That is what cost reduction is trying to explain indirectly. I'll give you a minute. You can go through your entire 1, 2, 3 question theory and all. You can read the book, read your book. Let me know in case you have any doubt. In case you have not got the book, you can just refer the screen here. Live online friends also, if you have any doubts, let me know. Okay, I'll move to the next question. What is the scope of cost accounting? Now, what is the scope is where is the utility of cost accounting going to come into? Scope is where is the place or application of this costing needed. In that again, they first come to what is costing. Costing is the technique and process of ascertaining cost or of a product or service. Getting to know what is cost accounting, these two I've already explained to you. Cost accounting is the process of recording all transactions and ending with a periodical statement. Now, what is the use of all this is these things: cost analysis, cost comparison, cost control, cost reports, and statutory compliance. These are the 5 areas where the utility of cost accounting is going to come. What is cost analysis is, you went on a trip. I asked the report saying that please give me your expenses you have incurred. You have given me some 20 expenses which you have incurred. Now I'm analyzing all those expenses and understanding why is there a deviation in the expenditure. Why is there a deviation in the expenditure? Because I told you to spend 20,000, you ended up spending 40,000. You ended up spending 40,000. So I took out all the expenses which you did and understood the factors which are responsible for the variation, and accordingly I'll fix some responsibility. So fix responsibilities, I'll tell you that you should not spend money on these areas, you should do this, you should do that. In an organization, the cost which you incur is arising out of material cost, labor cost, overhead cost, other expenses. For every cost, there is a person who is responsible. Material cost, there is a person called purchase manager, he is responsible. Labor cost, there's a manager called HR manager, he is responsible. So every cost which is getting incurred, there is some responsible person in the company. So I will tell him that why did you deviate? He will give me a reason. If it's a logical reason, I can't do anything. But if there is a problem in the reason, then we have to take corrective action. Sometimes what can happen is you are planning to spend 20,000, but when you went to that place, you are planning to go to an amusement park. The entry in your budget was 1,000 rupees per person. You get to know that the entry charges is 3,000 per person now. So now you can't do much about that. That's a reason for variation in the cost. Now, if I had known this earlier, maybe I wouldn't have planned a trip to that place, because 3,000 per person is not in my budget. I don't want to get into that place where the amount is 3,000. So one, that is a planning error which has happened, because when you did your planning, you did a mistake of estimating 1,000 rupees. So I'll first ask the planning head, why did you do this mistake? Please be cautious. We have unnecessarily spent more money. So I'll have to take some corrective action first by comparing this performance. So cost analysis is a subset of cost control. It is a subset of your cost control, because under cost control only you do this. It involves the process of finding out the factor responsible for variance in actual cost from the budgeted cost and accordingly fix responsibility. This is also known as standard costing, which is one of your chapter. In one of the chapter you learn about standard costing. This is one of that chapter. Cost comparison. What is cost comparison? Is comparison of cost from alternative course of action. For example, going to Bombay by train vis-a-vis going to Bombay by flight vis-a-vis going to Bombay by bus. There are three options available. What is the cost I'm going to incur in each of the three options? So different technology for production, cost of making different products and activity, cost of the same product or service over a period of time. You need to compare. So whenever you compare two things, they should be somehow logically connected. There should be some logical connect between two items which you compare. Now your score in CA Foundation, I can logically compare that. I want to do a correlation between your score in CA Foundation vis-a-vis score in plus 2. People who are scoring more in plus 2 logically are expected to score better in CA Foundation. That's a logical connect I'm trying to establish. So if you have two items which are logically related, you can do a comparison of that. So how they are saying can be done comparison? One, same product, January month what is the cost, Feb month what is the cost, March month what is the cost, April month what is the cost. I want to do a comparison like this. Same product, let's take an example of Pepsi and Coke, very similar product. So cost of Pepsi can be compared with cost of Coke. If you get to know the data, you can compare the cost of Pepsi with the cost of Coke. So it's a different product, but comparison can be done because it's logically connected. It is a logically connected. Our cost of Pepsi in Jan month, Feb month, March month, April month. Our cost of Pepsi through method 1 of manufacturing, method 2 of manufacturing, method 3 of manufacturing. You are not a technical person to know the methods of manufacturing and all, but different ways of doing manufacturing. I also will not know how you manufacture and all, but if you can do comparison, this will again help you in decision making. How will it help in decision making is, January we were spending 10 rupees. Feb we have spent 9 rupees. March suddenly it went up to 12. Something has gone wrong. Something has gone wrong. You'll have to understand this and then take. Pepsi is manufacturing at 10 rupees. Coke is doing at 8 rupees. Something is wrong in Pepsi. Something is wrong because it's a very similar product. It's a very similar product. So you will have to do this comparison to understand if something is going wrong in the company, or you can take some corrective action based on that. Cost control I need not explain. Cost is not exceeding the budgeted cost. Cost reports. What is cost reports is ultimately what needs to be done with the help of cost accounting is, I want to take decision. For taking decision, you cannot be randomly telling facts. I need some records. I need some information. That information can come in a form of a cost sheet. The information can come in the form of cost sheet. There are other ways of providing the information. Helps in planning and control, performance appraisal, managerial decision making. So without, if I want to know how is the performance of Tata Consultancy Services in this year, please open their balance sheet, please open their profit and loss account, and you'll get to know how is the performance. Now, if you don't have this profit and loss account balance sheet, you will say TCS has done a very good performance. I ask a reason, you're not able to, because it becomes very subjective. So whether you have done a good performance or not, ICA gives you that by giving you marks in every subject. So if ICI tells you that you write your test, we'll give you a subjective answer saying that you are pass fail. Only thing I'm going to tell you is pass or fail. No marks, nothing will be given. Then it will not be a right way of analyzing your performance because you are also not sure what is happening. So without having proper records or proper reports, I cannot take proper decision. Statutory compliances. Financial accounting is more like mandatory. There is an income tax act, there's a companies act which makes it mandatory. Costing is optional for many companies. It is optional. It is mandatory for some of the manufacturing companies, mandatory for few manufacturing companies. So for those manufacturing companies, you will have to maintain cost accounting records. You are left with no choice. Bharadwaj Institute may or may not maintain cost accounting because it is optional for us. It is optional. We may maintain because there are certain benefits of the cost accounting data, but it is optional. Whereas financial accounting, preparing trading P&L is mandatory for most of the companies, and for company or for people who are paying income tax, it becomes mandatory. At your end, every day you spend money. Every day you spend money, but you are not maintaining a record of it. Some of you could be doing it, but very rarely people maintain record. If I ask you last 1 month, what is the expenditure you incurred? You don't have an answer. On what did you incur? Again, you don't have an answer. You may tell an approx amount, but in your home, maybe your parents, some of them could be maintaining the records because they feel that there is a benefit which comes out of it. I at least need to know where am I spending money. So one is costing can be optional, that is you have benefits, you want to implement it. Second, there's a mandatory angle. The mandatory angle is related to this company's cost records and audit rule 2014. Because of this rule, there are specified companies who are mandatorily required to maintain cost accounting data. That is a mandatory for them. They don't have a choice. So if I tell you mandatory, it is mandatory for you to maintain your expense records. Unless you maintain expense record, next reimbursement will not come from your parents. Your parents give you every week some money. They say give the last month expense detail, so I'll give you more money. If you don't give expense detail, they'll not give you money. You'll be forced to maintain the records. You'll be forced to maintain the record. So it can be a mandatory one. It can also be an optional one. Costing is more optional for a lot of companies. There are few companies where it is mandatory. Now, right, scope of cost accounting. Question 4. Scope of cost accounting. Scope equal to utility of cost accounting. Scope is nothing but where is it to be utilized. Utility of cost accounting. Cost analysis. Analyzing cost and understanding deviation. Analyzing cost and understanding deviation. Cost comparison. Cost comparison. Comparing cost of different product or same product at different time. Same product at different time. Cost control. I'm not giving a note on this. Cost control, we have already seen what is cost control. Cost reports to provide information for planning and decision making. To provide information for planning and decision making. The cost reports will help to take appropriate decision. Cost reports are cost records. Statutory compliance. Statutory compliance. Mandatory for specified companies. Mandatory for specified companies under companies cost record and audit. Cost record and audit rules 2014. Mandatory for the specified companies. As per this rule, it is mandatory for some of the companies to maintain it. Clear? Next, differentiate between cost accounting and management accounting and financial accounting and cost accounting. Let me explain them together. But broadly, we have discussed these differences in different places. When I was explaining over the last 1 hour, I would have told certain points at different places. Cost accounting and management accounting. Management accounting is a decision making area. When you take decision making area, you cannot just go by numbers. You will have to take a lot of qualitative information or qualitative aspect. Example, a company is thinking whether to shut down its factory. Whether to shut down its factory. That's a decision you will take in cost accounting. Cost accounting will say calculate how much money you will save because of shutting down the factory, how much losses you are saving, you will say shut down the factory. But if before taking the decision, management has to consider what will happen to the customers, because customers were buying the product, now the product is not going to be there. What will happen to employees in the company? You will have to think about the employees. What will happen to the brand strength or the goodwill of the company? Because suddenly one factory is closed, will it impact my brand strength? Will it impact my goodwill? Will my employees be impacted? Will my customers be impacted? So before taking a decision just based on numbers can't work. You will have to take a lot of qualitative aspect before taking a decision of, or before taking any decision. So here we are bothered only about quantitative aspect. Here you will have to do qualitative and quantitative. Objective, getting to know the cost of a product or service. Getting to know the cost of a product or service. Here you will have to provide information to management for decision making, planning, coordination. Here only cost ascertainment. Here you see budgeting, tax planning, financial management, everything will come. It is wider in scope. It is going to include all the subjects which you learn at CA Inter and CA Final. Anything can be learnt as part of management accounting. Rules and regulations is in cost accounting. As we do, I'll explain that. There is a rule that you classify something as direct material, something as direct labor, something as direct. There are certain rules which are there in, not in your syllabus, but there are in your CM. There's another course called your CMA, cost and management accounting. There we have something called as your cost accounting standards. Like you have accounting standards, there are also cost accounting standards. It's not part of your syllabus, but so there are certain rules for following costing. When you take decision, you do not have anything like a rules or regulation. You cannot put any rules and regulations for decision making. Today I give you a problem statement. I tell you to take a decision. You will give one answer with your logic. I will give a different answer with my logic. Someone else will give a different answer with his logic, because there is no set rules and regulation. The decision we are planning to take is, should we shut down the factory? I say yes, we should shut down the factory because these are the benefits we get. Employee impact is not that much. Let's not worry about the goodwill and all. You say no, we should not shut down the factory, though we are going to lose money. But if employees get lost, it will have a huge impact. Customers will not be happy with us. Our brand strength is going to be impacted. So you give a different conclusion, I give a different conclusion. I have my logic, you also have your logic. That is what management accounting is all about. Management accounting is lot of subjective element will be there, lot of qualitative element is there. Give appropriate logic. It is past and present information. In costing, you're going to use the past and present. There is some amount of futuristic angle which comes, but that futuristic angle is more related to management accounting for decision making purpose, because cost accounting is also a subset of management accounting. Cost accounting is also a subset of the management accounting. It is focused more with the future. It is more focused with the future, related to industrial revolution, related to the need of modern business world. Now, what is the differences? Sometime back, that is 20 years back, 25 years back, 30 years back, when companies were developing, when manufacturing was developing, at that time the focus was getting to know the cost of a product or service. Because if you know the cost of a product or a service, what you will do is you'll fix a price accordingly. Because 30 years back and all, today if I tell that you need to buy some product, first thing people do is they do an online search, they check what is the price at different portals and then go ahead and buy. 10 years back or 15 years back, when I wanted to buy a mobile phone, I just went to a shop, he showed me the mobile phone, I picked one, and then today if you want to buy a mobile phone, you check reviews, you check online reviews, you check prices at multiple portal. So increasingly what has happened is the business environment has become more competitive. When you are highly competitive business environment, you cannot fool the customer. Earlier, if I was inefficient, if my cost was higher, I was able to sell it at a higher price. Now if my cost goes up, customer will not pay. Customer is saying I can pay you only 70,000 for CA inter classes. You can provide for CA inter class at 70,000, I'm okay. Just because you are spending more, don't ask us more money, we are not ready to pay you more money. So earlier, when industrial revolution happened, the focus was only getting to know the cost of a product or service. Because now it has become more and more competitive, it has become more and more competitive, it is very difficult for us to do this estimation, for us to just work with costing data. You will have to focus on the management accounting. I'll give you 2 3 minutes. I want you to write summary note for question 5. You write whatever notes you want to do. Just write your notes so that you use it for revision. Just one question I want you to write on your own. Question 5, cost accounting versus management accounting. Whatever points you want to write, that's your wish. Cost accounting versus management accounting. I'll not give the points for this. You can write whatever makes sense to you. Your summary notes can't be very lengthy, so that alone you have to take care. You cannot keep writing so many things. Every question I have written very small, some precise notes. So think about it, how you want to summarize this so that it is useful for day before exam. Because if you write very lengthy notes, you'll not be able to revise it. I have written some summary note. This is what I felt is fine, but everyone will have your own notes. So just unless you practice, this is not only for my subject. Till now, so many classes of accounting has got over, some classes of law has got over. If the teacher gives you summary notes, great. If not, you should make your summary notes, because imagine you have to cover this entire costing subject one day before exam. So how are you going to cover that? Also needs to be at the back of your mind. So for that to happen, only useful tool is your summary notes. If you have detailed summary notes, you will be in a position to use that day before exam, because otherwise you'll have to run through so many pages. Seeing two workbooks, so many questions is kind of impossible for us to do day before exam. So summary notes will be very, very critical. You want to increase the number of lines, all that is fine. This is just my notes, but it cannot be exactly copy pasting that. You cannot exactly copy paste that. How much space you want to take? You want to write 2 lines, 3 lines, 4 lines, 5 lines, 6 lines? That's your wish. I just leave it to you. But important part is have the summary notes ready before exam, because before exam this is the only useful tool you're going to have. Any doubts? Let's quickly discuss this question and then end the session. Financial accounting and cost accounting. Again, these two should be very easy for you to understand, because this is something you see on a, or something which you have seen already. Financial accounting is focuses getting to know the financial performance. What is financial performance? Is getting to know the financial position of a business, which is through your balance sheet, and financial performance, which is through your P&L and trading P&L. Here the focus is ascertaining the cost. Ascertaining the cost is getting to know the cost of a product or service for the purpose of cost control and decision making. More users of information, that is the financial accounting data is useful mostly for external user, mostly for the external user. That is, external user is shareholders, creditors, financial analyst. You want to know what is the profit of PepsiCo, you can get their balance sheet and P&L and get to know, but nobody can know what is the cost of producing 1 unit of Pepsi, because that information is only available for internal management. Nobody can get information on what is the cost. Even if you are a shareholder, you will not get that information. They will not give you that information, that what is the cost of producing 1 bottle of Pepsi, what are the various expenses, because they incur a lot of other expenses and also marketing, all that is there. So every cost will get, when you look at annual report, what will happen, or the financial statement, there's a PepsiCo, there are other products, so everything will be clubbed together and you will get one information. Costing will separately prepare for every product. This information nobody will get access, it's only available to the internal management. These are usually prepared for a year. Here what happens is, whenever I want, I'll suddenly prepare a cost sheet for a single day, I'll prepare it for a week, I'll prepare it for a quarter, I'll prepare it for a month. Now even financial statements have got started preparing for a quarter and all, because there are listed companies where you'll have to do quarterly results and all. So companies have started preparing quarterly. A lot of companies do a monthly P&L and all. Internally they prepare it, they don't declare it outside, but monthly also they do it. Format, this is not a very big difference. Set format is there for presenting financial information. Set format is your final accounts, there is some order to be followed, there is some Schedule 6 in Companies Act, all those rules are there. Here I do not have something like a set format except for cost sheet. Cost sheet has one format, but apart from cost sheet, you're going to learn a lot of things. So there's no, one challenge in costing is there is no separate format in which you can solve problems. So some question I'll solve in format 1, some in format 2, some in format 3. So students sometimes find it difficult to move around so many formats. I try to make in such a manner that we are able to use a consistent format across many questions, but still the challenge will be there in the subject, because there are different formats and different questions. Analysis of cost and profit, it shows profit or loss of the organization either segment wise or as a whole. It provides cost details for product, process, job, operation, contract. These are nothing but those 5 methods of costing I was talking about. So basically here I'm trying to find out only the cost, and PepsiCo will have 16 different cost records, but PepsiCo will have only one financial statement. Only one financial statement will be there, but costing records can be prepared for Pepsi, can be prepared for its other product, Aquafina can be prepared, Lace can be prepared. So many other products are there. You can prepare separate product wise, separate location wise. Bharadwaj Institute can prepare costing records for CA inter classes. CA foundation classes, CA final classes, CMA inter classes, CMA foundation classes. We can prepare a cost sheet for this location, the other location which we have. We can prepare it for January month, Feb month, March month. So I can keep doing in different manner. Recording of data, it records historical data. Here there's something called as predetermined cost. What is predetermined cost is not related to your the cost control part. What is predetermined cost is I wanted to analyze your cost. So for the future, what is the cost I'm going to incur? Some cost it's easy for me to ascertain. For example, the cost incurred on the faculty. The cost incurred on the faculty can be easy to ascertain. But what is the cost I'm going to incur on electricity? What is the cost I'm going to incur on some admin charges? All this, what normally organization does, they say we'll put a predetermined cost. How this predetermined is calculated, you'll understand in overheads chapter. But I'll say every student 5,000 rupees is overhead cost. What is this 5,000? It includes a lot of things, all miscellaneous expenses, electricity expenses, administration expenses, all this put together 5,000 rupees per student. And other expenses like faculty and all, I can directly identify faculty cost or the material cost, the books which we are giving you, all that I can identify. But some cost I cannot identify specifically. Those are called overheads, where we use a predetermined cost. Let's write the difference. Question 6. Financial accounting versus management accounting. Financial versus management. Financial accounting. Financial performance. Historical data. External users. Historical data, external users. Set period / format. What a set period is, you will usually prepare it for a year. You will usually prepare it for a year, and there's a set format which we follow in financial accounting. There's a format for your trading account, P&L account, and balance sheet. Cost accounting, cost ascertainment, historical / predetermined cost, historical and predetermined cost, internal users, no specific periodicity or format. I can prepare it for a month, prepare it for a quarter, prepare it for a year. I don't have a specific periodicity which I have or a format. You want to add more points, that's up to you. You can add it later at home. But broadly, this is the summary notes I wanted to give for every question. I'll try to give this so that you're able to revise this day before exam. Clear? So I think we just started with the introduction part of the subject. I'll continue with the advanced set of areas as we proceed. First chapter, more of theory. Second chapter onwards, that is cost sheet onwards, you will see more of problem solving. I'll end with this. If there are doubts, you can let me know. Good morning, friends. Good morning, friends. Okay, let's continue with our discussion. In the last class, we had started with the introduction to cost and management accounting. I'll just summarize what we did in the previous session. As a brief introduction we got to the subject. We understood that cost accounting primary focus is on cost ascertainment along with cost control and cost reduction. Management accounting is more related to the decision making area. So we learned difference between cost ascertainment and cost reduction. We also learned about differences between cost accounting and management accounting, cost accounting and financial accounting. Objectives of cost accounting was also done, where we learned that the objectives are: one, determination of cost and the selling price, determination of profitability is one area, cost control is one area, cost reduction is one area. So cost ascertainment, these are the places where the applicability of cost and management accounting will be there. Also, we saw about scope of cost accounting, where we learned cost analysis part, cost comparison part, cost as control part, statutory compliances. Today also predominantly it's going to be theory discussion. First two classes alone theory is going to be there. I'll complete mostly this chapter 1, where balance part of the theory we'll discuss in today's session. We'll see if we can complete this. Once this is done, beyond this all chapters are practical based chapter. It's only problem solving which will be there. Theory will also be there, but predominantly problem solving. Let's come to question 7, which is in page 5 of your material. What are the roles and functions of cost and management accountant? What is role and function is? What is exactly the duty of a cost and management accountant? What does he do in a company? Now, primary part, he has to take care of this. That is, he has to provide the relevant information for management decision making. Apart from that, cost analysis, cost comparison, cost ascertainment, cost control, cost reduction, that is one major purpose. Assist management in planning, measuring, evaluating and controlling of business activity. Helps in allocation of cost to products and inventories for both external and internal user. You will have to ascertain the cost. Allocation of cost is basically ascertainment of cost. Allocation of cost is something you learn in overheads chapter. Allocation is nothing but overheads chapter discussion. So helps in allocation of cost to products and inventory for both external and internal user. Assess management for planning, measurement, evaluation and controlling of business activity. Functions of cost and management account include, functions is what does he exactly do. This is where I was talking about. Predominant part is one, cost reduction area, and second is management decision making. This is what cost and management account needs to do. Collection and accumulation of cost, assigning of cost to cost objects. What is cost object? You'll learn in maybe some 20 minutes. To ascertain cost. Cost and management account sets a budget for a particular period and the actuals are compared at the end of the period. So sets a predefined budget and comparison. This is nothing but an area called as cost control. In cost control, you will set a predefined budget and then keep comparing it with the actual. Provision of relevant information to the management for decision making. Decision like cost optimization, price fixation, implementation of plan related to process, product, process, marketing. Responsibility center performance evaluation. What is responsibility center also you will learn in today's session. But there's something called as performance evaluation which needs to be done. For example, I want to evaluate my performance, or Bharadwaj Institute wants to evaluate my performance. Now how can they evaluate? One, they can get feedback from students. Based on the feedback from the students, my performance can be evaluated. That is a subjective way. Objective way is based on the passing rates of my subject. If students are passing, more students are passing, it means my classes are more effective. Students are not passing, then there is some problem with my class delivery. So I can evaluate my performance in an objective manner as well as in a subjective manner. Responsibility center performance evaluation will be done by this cost and management accountant. What are responsibility center? We'll understand in some time. Clear? So role and a function of a management accountant is very simple. He has to focus on the cost side of it, which is cost ascertainment, cost control and cost reduction. He also need to assist the management in decision making, which is the management accounting part of it. Now write the summary notes. Question 7. Role and function of cost and management accountant. Role and function of cost and management accountant. Role and function of cost and management accountant. Role of cost accountant. Role of cost accountant. Providing information. Providing information. Providing information. Cost allocation. Providing information. Cost allocation. Cost allocation. He has to provide information for the purpose of decision making, cost allocation, which needs to be done, and as well assist management in planning, evaluation and control. Assist management in planning, evaluation and control of business activity. This is role of cost accountant or management accountant, whatever name you want to use. That's technically same. Cost and management accountant is the word we use. Function. Function. Both are more or less similar only. Role and function of a cost and management accountant. Function means what exactly is he doing. Role is basically what end result he is going to get or what end result he contributes in an organization. Function, cost, collection, cost allocation, cost ascertainment, cost collection, cost allocation, cost ascertainment, performance evaluation of responsibility centers. Performance evaluation of responsibility centers. Clear? Any doubts on this? Role and function of cost and management accountant. Okay, next I'll move to who are the users of cost and management accounting. The primary users are only internal users. Only internal people will get access to cost and management accounting data. But ICA Metral also talks about certain external users. When I say certain external users, they are not going to get access to entire costing data, but a part of costing information. There are certain information which can go in both financial accounting and cost accounting. Those information may also be available to an external person. That is, when you're accessing financial data indirectly, that is also called as a cost data. Some information, not everything, but some information which is there in financial accounting is also part of cost accounting. So they are saying there are internal user as well as external user. Now, who are the internal user? Policy maker. Now, who is a policy maker is a person who is going to formulate strategy. A person is going to formulate strategy. Now, there are multiple types of strategy in an organization. There's a top level strategy, there's a middle level strategy, and there's a bottom level strategy. We call it as strategic level, operational level, and tactical level. 3 levels we normally say. So, the strategy can be formulated by mostly the top management. So, this top management would want information from costing to formulate that strategy. Now, what kind of a strategy they may formulate or what kind of decision they take? One simple decision: at what price the product is to be sold. At what price the product is to be sold. Who is going to decide? The managing director is going to decide this. So, for the MD to decide, he would want costing information. At what price the product needs to be sold. He is now deciding whether the Chennai plant needs to be closed or not. There's a plant, manufacturing plant, which is there in Chennai. They're thinking whether to temporarily or permanently close it down. In order to decide this strategy, I want information from. So the top management are the people who formulate strategy to achieve short and long-term goals, position them in the competitive market, and design organizational structures for policy implementation. This is top management. Managers are the people who are kind of in between. These are the people who are kind of in between. There is an operational level staff and there is a manager who is kind of in between, and there's a top management who is at the top. Managers may use the information to know the cost of a cost object, price for a product or a service, measure and evaluate performance, profitability analysis, and decision making. This measure and evaluate performance is called responsibility center evaluation. I'll explain responsibility center in today's session only, but you'll have to wait for some time. to know the cost of a cost object or price for its product. Ultimately, they are also going to take certain decision making. Some decision making would be there in their hand. Operational level staff, these people are not going to have any major decision making ability. They do not have any major decision making ability. They'll have to follow what the top management is saying. So their job is to just follow what is being said. Operational level staff such as supervisor, foreman, team leader can use it to know the objectives and their goal, product and service specification, performance parameter, divisional profitability. See, I am going to evaluate your performance. I'll say that we are going to look at how is your performance. Now, you wrote a test. Now, after writing a test, if I don't tell you how I'm going to, before writing a test, if I don't tell you how I'm going to evaluate the performance, you don't know what needs to be done. So, ICI has told every student need to score more than 40 in every subject, more than 50 in an aggregate level. Then you will be clearing the group or not clearing the group. That is a specification they have given you. Similarly, I want product specification. I want service specification. I want what are the performance parameters which are expected out of me. If Bharadwaj Institute tells me that, okay, you take your classes, the performance parameters for you is, will take a student satisfaction score. If the score is more than 8 out of 10, it means you are scoring well, you are okay, good to go. 8 out of 10 is a good performance. Second, passing rate should at least be 70%. Third, people when they're writing their operation, when they're writing, or you need to keep 25 tests for the 6-month period. So certain parameters could be given to me so that I try to achieve those parameters. Practical world parameters would be given. You achieve those parameters or not achieve it, based on that bonus would be paid. There is some bonus payout which will happen in a practical world. So these foreman, supervisor, team leader want to know what is expected out of them. Maybe what is expected out of them is performance parameter. The whoever is manufacturing department, to them it is told that product which you manufacture should not have more than 5% rejection. There should not be more than 5% rejection, not more than 2% customer complaint. So certain specifications are given. The assessment of that performance will happen through costing records. The costing records will tell how much rejections are happening, how many customer complaints are coming, all that I can assess. Employees, you learn this in labor chapter. Employee salary payment, when you pay salaries to the employee, you pay them based on the number of hours worked. So time and attendance information, they want to know how many hours they have worked. Incentives would be given, that is the bonus which I was talking about. Performance standard is what is expected out of the employee. So policy maker is the managing director. If you take Reliance Industries Limited, Mukesh Ambani and the top management will form part of policy makers. Managers are the mid layer. Operational level staff is the next layer. Employees are the layer even below that, because foreman will have certain people reporting to them. Team leader will have certain people. So if I take an audit firm example, there is a partner who is at the top. Below partner, there will be some managers in the audit firm. Below managers, there could be some seniors in an audit firm. So partner, manager, senior, and then the article assistants. Then the article assistants come into picture. All of these people would want access to information. Some access to, some not. The employee may not get access to what is the cost of a product or service, because that's a very confidential information. They'll not get access to that. So top management will get access to every information. Manager will get access only to his division. Assume an audit firm has 5 divisions. Division 1 you are heading, please get information only on division 1. I'll not give information. ITC, if you take an example, ITC has multiple divisions. There's a division for tobacco, there's a division for paper, there's a division for hotel, there's a division for FMCG. So different divisions are there. If you're manager of a division, you'll get information only for that division. You will not be given information for all the division. So you will get access to your own divisional information. Operational level staff, within a division there could be breakup, and manage employees at the lowest level. External user, regulatory authorities, you can't help it. Regulatory authorities can get access to any kind of information they want. Some of the information is used for something called as subsidies. I'll give you an example. Fertilizer industry. In fertilizer industry, what happens is, if the cost of fertilizer is 100 rupees, government tells every company to sell it at 30 or 40 rupees to the farmer. They'll say, please sell it at a lower price to the farmers. So you will sell it at a lower price. Who will pay the balance? Government will give a subsidy. So government may want to know what is the cost so that they can fix the subsidy. Rate fixation. You are a company who is manufacturing electricity. You are in the generating electricity and giving it to a lot of people in India. Sorry, in Tamil Nadu, it is only single player. Tangentco does it. But if you look at across country, there are also private players who are there in the uh, in the in electricity industry. So if you are a private player and you start what to say exploiting customer, so government can have certain restriction there. So they'll say we want to fix the rate. So for that, please give your cost records. Let me look through your cost records, understand what is the cost of generating 1 unit of electricity, add some profit margin, and then fix the tariff or fix the price. Auditor. Auditors may have to certify your financial statements. So when they certify the financial statement, even in your financial accounts, some cost related data is needed, and they may also do a cost audit. They may also do a cost audit. This is for specified companies. So if you do a cost audit, again they will need the information. Shareholders do not get any information of costing, but what they are mentioning is they may get information like new order received, product expansion, market share. If you have looked at, for example, at home, try downloading a listed company, any listed company annual report, big company. There will be a section called management discussion and analysis. So when in the management discussion analysis, they'll report all of this. Some new orders which the management has received, some product expansion, what is the market share, how are we growing, how we will grow. All this information will come partly from costing data, partly from the cost records. This information is going to come. Creditors and lenders basically want to know whether this company would be able to repay the loan or not, whether to repay the loan. For that, you need something called as net debt position and stock balance. What is net debt? Is whatever amount of borrowing you have, adjust with cash. Borrowing minus cash is called net debt. This information is also there in financial accounting. So practically speaking, external users as such are not much. External users as such are not much, but ICI Material is talking about external user. So we will mention about external user, but primarily it's only internal users who are there. Primarily it's only the internal users. Any doubts on this? Now, right. Users of cost and management accounting information. Question 8. Users of cost and management accounting information. Users of cost and management accounting information. External users. External users. Sorry, internal users. First, internal users. Internal users. Top management are policy makers. Policy makers. In bracket, top management for formulating strategy. Policy makers, top management for formulating strategies. Policy makers is one set of people. Managers. Managers managers will have information about cost, price of their division. Cost price of their division. Operational level staff. Operational level staff. Performance metrics. What is expected? Performance metrics. That is basically what you expect from the operational level stuff. I'm just giving broad items. There are a lot of other items. You can look at that later, and this is just to revise things. Employees. Hours, working hours. Working hours incentives. These are internal users. These are the internal users. Apart from that, we have external users. External users, regulatory authorities. Regulatory authorities. The regulatory authorities may want it for subsidies, rate determination, for determining subsidies and rate, auditors for completing financial audit, cost audit. They are required to do the audit, so they'll need information for completing the audit, for completing financial audit and cost audit. Shareholders, new order received, product expansion, and I think ultimately you will also need to give lenders slash creditors. Basically, these people are interested in knowing whether you will repay the loan or not. Lender and creditor wants to know whether the loan which is being given would be repaid or not, because that's a concern which they may have. Lender and creditor can have a concern whether the loan would be repaid or not. Lender slash creditor, they would want to know net debt position, net debt position, stock balance. No. So what is internal user and external user is internal within the company. External is outside the company. So it's not primary or not primary. External user is someone who is outside the company. So auditor is not a person who's an employee. All these four you see are the employees of the company. Policy maker is also an employee. Managing director is an employee of the company. Managers are employees of the company. Operational level staff are employees of the company, and employees are employees of the company. All these are external people. They are not within the company. So it's not primary or not primary. It's external vis-a-vis internal. Primarily internal users. It's primarily internal users. Auditor will obviously get access to the data and all. So among the external user, auditor and regulatory authorities have more power to get information. Shareholders and lenders may not have that much power. Similarly, in the internal users, policy makers will get maximum access, manager will get little less access, operational staff little less, employees the lowest level of access. So the access will be given as per the requirement. Any doubts on this? Let me know if there are doubts. Clear? Can I proceed? Okay. What are the essentials of a good cost accounting system? Now, any system which I'm going to implement, not only in cost accounting, but in general, I want to implement something. For example, at my home, I'm planning to buy something, some machinery I'm planning to buy, or some product I'm planning to buy. Whenever you're planning to buy a product or any system you want to implement, at least it should fulfill certain condition. Now, what are the conditions they say is, one, it should be simple in nature. Very critical. If the system is very complex, people will not follow it. It should be a very simple system, informative and simple. That is, whatever requirements I have, please meet it, but don't make it very complex kind of a system. So you will, if when you start your articleship, you will work around Tally. Tally is a software which some of you could have worked on, but that's a very simple software. People use it extensively. But if the same software is very complex in nature, what is complex is I'm not able to use it properly. There are a lot of confusion among the user. So if you have too much confusion which is getting created, because ultimately I want all employees to use it in a smooth manner. So Tally is one software which is used in a smooth manner. But if it's very complex in nature, I don't want to implement that. Second, accurate and authentic. You have used the information, you have used the software, but software is giving wrong results every time. It is giving wrong results every time. I don't want such software. If I'm implementing, this is not only for good cost accounting system, this is good financial accounting system also. If you're planning to implement a financial accounting system, it should be informative and simple. It should be accurate and authentic. Next is uniformity and consistency. What is uniformity and consistency is, whenever I'm passing a journal entry, because what you do in a system is you'll just pass the journal entry. When you pass the journal entry, the classification should be uniform. Some items should be classified as direct material, some as direct labor, some as direct expense, some as indirect material. You learn about the classification, but uniformity should be there in classification. For example, in Tally, when you pass a journal entry, you'll have to classify them as direct income, direct expense, indirect expense, asset, liability. So you need proper classification and uniformity should be there. Integrated and inclusive. Now, what is integrated and inclusive is, many a times in practical world, I want a system which interacts with other system. Now, what is which interacts with other system? I pass a journal entry in cost accounting. Automatically this journal entry will also get posted in financial accounting. Automatically the journal entry will get posted in the financial records. Let's take an example. In a practical world, organizations implement ERP system. Now what happens in an ERP system is, when you have information in one department, it should go ultimately to all departments. For example, a new order comes. Who got this information? Sales team. Moment sales team gets this information in the update in system, production will automatically be intimated. Why production needs to be intimated? Because they need to produce the product. Production intimation, automatically purchase team will be intimated. Why purchase team intimation? Because they have to buy raw material. Stores will be intimated because they have to issue the raw material to the production. HR will be intimated because they have to recruit employees. So every data which comes in an organization can impact so many systems. So I want an inclusive system which is integrated with other systems like financial accounting, taxation, statistics, operational research. Any organization, when you prepare your financial records, at the end of financial records, you'll have to file tax returns. When you file tax return, there is a tax P&L needed. So from the financial records, automatically a tax P&L will also come, where there are certain allowables, certain disallowables which are there. So organization wants it very clear that one information, once it comes in one system, it has to keep going in the other system. Flexible and adaptive. Adaptive is, it should be able to adapt to the changing requirements. Trust on the system. This is one of the most important aspect. What is trust on the system is, I tell you that work on Tally. As a senior management, I tell and go it. You guys are not ready to implement it. Reason is, you are not having trust on the system. You somehow feel that the system will not work well for us. The system is not going to work well. Many a times when an organization implements a system, if employees are not comfortable using it because of multiple reasons, one, complexity could be a challenge. Simplicity versus complexity. Second, it is not accurate. Third, it is not consistent. Fourth, it is not integrated. Fifth, it is not adaptive. If any of this fails, you will lose the trust on the system. You lose the trust on the system. You are not ready to implement it. If you are not ready to implement, because senior management can only tell you what ultimately needs to be done is by the mid layer or the lower layer. They have to implement it in their workplace. People are not ready to implement because of multiple reasons. Clear? Any doubts on this? All right. Essentials of good cost accounting system. Essentials of good cost accounting system. You can kind of just write the heading alone. Informative and simple. Informative and simple. Accurate and authentic. Integrated and inclusive. Flexible and adaptive. Uniformity and consistency. trust on the system. Clear? If a system is able to fulfill all these requirements, an example tally system, tally can kind of meet all these requirements, people would be ready to implement that system. If you are not confident on the system, you will not implement it. You will avoid implementing a system where you are not confident. Clear? What are the factors to be considered before installing a cost accounting system? That is, what should I keep in mind before implementing a new system? I want to implement a new cost accounting system. So what are the factors to be kept in mind? Objective. Now what is objective? Is it cost reduction or is it fixing prices? An organization objective could be to fix prices, determination of selling price, could be to reduce cost, which is cost ascertainment, cost control, and cost reduction, or could be combination of both. Could be combination of both. Next factor is nature of business or industry. What is nature of business or industries? Different industries have different methods of costing. Some place you'll use job costing, some place you'll use batch costing, contract costing, some places you'll use joint and byproduct costing, process costing. So every industry has its own peculiar feature. Cost accounting records are based on this information requirement. Depending on the industry, you will have to maintain the records. Organizational hierarchy. I was saying about that there is a top management, mid layer, and operational level management. Different people have different information needs. So information needs of all these three people will have to be fulfilled. Top management, whatever they want, please give them. Middle level, what they want, please give them. Lower level, what they want, please give them. An employee wants to know how many hours he worked. The system should be able to give that. At the foreman wants to know what is the objective for him and how is his performance. The system should be able to give. The top management wants to know what is the profit of this division, what is the cost of this division, what is the profit of Chennai factory, what is the cost of Bombay factory. So you want multiple information. All that information based on your organizational hierarchy, based on the hierarchy, you should be able to give. Knowing the product and nature of the industry, and all these are interlinked. What is knowing the product is, nature of product determines the type of costing system. Nature of product is based on what? Type of industry. For Bharadwaj education industry, the type of product is education service. For a manufacturing company, the type of product is whatever is there in the industry. So technically these are not two separate items. These are only one item. Nature of business or industry and knowing the product is same. Knowing the production process. What is production processes? How are you going to manufacture the product? Are you going to do it through 10 steps, 15 steps, 20 step, 5 step, 6 step? Because at every step some information will arise. Every step some information will be there. Do you want to record that information or not? Because sometimes you may want to record it, sometimes you may not want to record it. At every step I may want to know what is the loss happening. That is possible to calculate if I record that data. You started with 100 kg of raw material. Every step some wastage will be there. Some wastage will be there. I want to know that wastage without knowing the production process. So good costing system can be established with complete knowledge of the production process. Information synchronization. This is what I was talking about. Example, a new order came. A new order came. So when a new order comes, this information has to go to everyone in the system. Information needs of various departments should be taken. You want to maintain monthly stock statement to the lender bank. Monthly stock statement needs to be submitted to the bank. So the storekeeper would be maintaining something called as ledger. With this ledger, you will get the information on to give it to the lender. When you file your tax returns, you want to know what is the closing stock. So quantity wise stock is needed. For the bank, I don't want quantity wise stock. Bank just wants the overall number. I'll give him the overall number. When I file my tax returns, I'll give quantity wise. Top management would want quantity wise as well as value wise. So I'll give them value wise. So what information is needed for different people, everything will be taken care of from one input. One input should give me all information. I don't want to separately maintain for giving the requirement to bank, separately for top management, separately for tax returns. I cannot keep recording 3-4 times. Method of maintenance of cost record. There are two methods of maintaining. One is called integrated method. Second is called non-integrated method. Integrated method means costing and financial is maintained together. You learn this in chapter 7. You learn this in chapter 7. Non-integrated means you're maintaining it separately. Statutory compliance and audit. That is, you should be able to meet the requirements. You should be able to meet the statutory requirements. Information attribute. What is information attribute? Is any information you give has certain characteristics. What is characteristic? Is I want accurate information, I want authentic information, I want complete information, I want valid information, I want correct information. So whatever information you are doing, it should be complete, it should be accurate, it should be timely, it should be confidential. You should be able to meet those characteristics. You are giving me some information of 5 years back, no use. I want timely information. Today I want information about today's performance, everyday basis. Practical world, companies can get a daily P&L also. Companies can get a daily profit and loss account if they record all transactions on a daily basis. So a daily P&L will happen. It is not a separate preparation. Moment you record the journal entries in the system, automatically the system will give you a P&L. So daily P&L is also possible. So if I want a daily P&L, the system should be able to give me timely information, accurate information. I don't want a wrong information. So all this needs to be taken care. That is, whatever system you are implementing, check whether that the system can meet the requirement of the industry, requirement of the product, requirement of the management, requirement of the different people in the company. Can it fulfill the information attributes which are needed? All this I need to take care before implementing or thinking of implementing a new system. Clear? Any doubts on this? Now, right, factors to be considered. Factors to be considered before implementing a new system. Factors to be considered before implementing a new system. Objective, in bracket, cost reduction, SP fixation, selling price fixing or cost reduction. Cost reduction, SP fixation, selling price fixation. Nature of industry, nature of industry, nature of product, nature of product, understanding of production process, understanding of production process, of production process, information needs of multiple layers of management, information needs of multiple layers of management. There are multiple layers which are there in management, so I should take care of the information needs of all of them. Information attributes, in bracket, complete, accurate, timely, confidential. Information attributes, method, integrated, non-integrated, method, whether you want to implement an integrated system or a non-integrated system. I think this should take care of most of them. Statutory compliance and audit. Statutory compliance and audit. Statutory compliance and audit. Information synchronization. What is synchronization? A single entry should give information to everyone. With a single entry, all departments, relevant departments should get the information. If a new order has come, this information should not be with only sales team. It should go to production, it should go to purchase, it should go to manpower team, it should go to stores manager. So everyone should get this information. Clear? Any doubts on this? And can you proceed? Next, what is the impact of IT on cost accounting system? What is information technology? Is basically the way I'm taking my classes now has undergone a change. Historically, what used to happen is there was a board in which I used to write, students used to copy. The impact of IT is there in every sector. People are connected live online and I'm taking classes from here. That's because of the information technology. So because of IT, what happened is you learn in your financial accounting that there's a ledger, there's a journal entry, there's a ledger, there's a trial balance, there is a P&L, there is a balance sheet. Practical world, there's nothing beyond journal. Moment you pass a journal entry, ledger is automatically done, trial balance is automatically done, P&L is automatically done, balance sheet is automatically done. So everything is automatically done, ratios are automatically calculated. So IT, information technology, has a huge impact in every sector. So you learn something called as in your accounting, you have learned about error rectification. This rectification of errors, you will learn about some calculation based errors and all. That and all cannot happen in practical world because you are going to pass the journal entry in the system. Earlier it used to be manual records. When it used to be manual records, all these challenges were there. So because information technology has come, one, I'm able to integrate the different divisions, integrate different functional activity. What is function? Is production is a function, sales is a function, purchase is a function, HR is a function, R&D is a function. All these could be integrated together. And one example which I said you for integration is a new order has come in. When new order comes in, everybody gets information. Earlier, when it was manual system, the sales team will get the information. They have to manually inform the production. Sometimes they will inform it, sometimes they may forget it. Production has to manually inform the purchase. Sometimes they will do it, sometimes they'll forget it. But now with the system in place, everything is automatically integrated. We have moved to something called as a paperless environment. In fact, during COVID times, even the invoices were paperless mode. Invoices, nobody was able to give invoice from, because you were not able to send it. So invoices also went into a paperless mode. Payments went into a paperless mode. So there was something called as a e-procurement. E-procurement is electronic procurement. E-payment, electronic payment. Your payments also happen in an electronic mode. Your procurement also happens in an electronic mode. That is because of information technology. So we can move towards a paperless. You will understand about these documents in material chapter, but all of this now will be in a paperless mode. I'm not going to print them and keep it. With the help of, can help in resource procurement and mobilization. I can procure resources. When I say procure resources, you can procure men, material, machine, money. All the four resources can be procured. That is, I can recruit employees, I can buy raw material, I can buy machinery, and I can also raise money. I can also raise money through information technology. Cost information is ascertained with accuracy. The problem of not accurate information does not come into picture unless you make an error in the journal entry. Otherwise, the information is going to be accurate. Uniformity. If you have told that this is how the report has to be prepared, every time the report will be in that manner only. You are going to, because the information technology will automatically prepare a report. Cost and revenue variance report can be prepared in real-time basis. That is, whenever there's a variation in performance, for example, I gave you that example of saying that you are going on a trip. I give you a budget of 20,000. First day you spent more, second day you spent less, third day you spent more. If there is a system in place, your parents will log into the system. You will have to update entries on a real-time basis. On a real-time basis, they'll tell you that, or they'll be aware that there is increase in expenditure or decrease in expenditure. So real-time update is possible now. Real-time update is possible. Daily P&L is possible. An organization can prepare a daily profit and loss account. Monitor each and every process closely to eliminate non-value added. Non-value added is those activities which do not add value to an organization. Because information technology has come, the most important aspect is a lot of issues with related to errors have gone out. Because earlier a lot of errors were done in the process. A lot of errors will be there in the process. All these errors have been eliminated now in the practical world. How have we eliminated these errors? Because there is a single entry that ensures that accuracy is maintained. The single entry will ensure accuracy is maintained, uniformity is maintained, consistency is maintained, integration is there. So you said that what are the essentials of a good cost accounting system? Those essentials can come only if you have information technology. Manual system, all those essentials cannot come, because manual system has a very difficult, because in manual system you'll have to pass a journal entry. From the journal entry you'll have to pass a ledger. One side you did ledger posting, other side you did not do ledger posting. So that lead to error. Those errors were happening in the past. But now all the systems are automated. All the systems are automated. Let's write this. Impact of information technology. This impact is not only on cost accounting, this impact is there for anything. Impact of information technology. Improved accuracy. I'm just writing the important points. Improved accuracy. Integration of different functions. Integration of different functions. Paperless environment. Paperless environment. Integration of different functions. Paperless environment. Improved accuracy. Integration of different functions. Real-time information. Without information technology, I cannot get any real-time update. Real-time information. I think this should take care. Okay, uniformity. Uniformity in presentation and classification. Presentation and classification. Clear? Write short note on digital costing system. Technically both are same. Okay, digital costing system is a system, a costing system where you are using information technology. A costing system where you are using information technology, or you are using technology. Digital costing system links different business function such as production, procurement, information sharing with the digital costing system of its suppliers, customers and market through data sharing and network interaction. Digital costing provides information such as cost incurred on a cost object, time spent, resource consumption, current market price of final product and raw material, lead time. Every information would be there. Now I'll give you one more example of this digital costing system where I'll explain this, linking it with supplier, customer, and market. Assume I have a supermarket. In supermarket, there are so many products which I am selling. Every time I do a billing, if my product is placed in that supermarket, if I'm a supplier of that product, that information will come to me saying that this product is sold. That is also done in a practical world. The system is linked in such a manner that I will get information that my product is sold. Now how does this help is, one, as product gets sold, I can then ask the other person that should I send you the product now, because it is going to reach a stage where the product is fully sold. So if the product is fully sold, I will tell him that your product has reached the level where you will need replenishment. Do I sell this product? In practical, that is also automated. A lot of things are automated. What they will do is they will link the system and they'll say whenever my stock reaches 5 units, you please supply one lot of 10 units. You please supply one. This is technically called as reorder level. You learn this in materials chapter. But basically, moment my stock reaches 5 units or 10 units, automatically an order will go. You will not do any manual order. Automatically an order will go. He will supply the product. This information will help me in doing better collaboration with my supplier or with my customer. Benefits, ascertainment of cost. Whatever benefit you saw earlier will be there. Ascertainment of cost with certainty or accuracy. Analysis of data on time spent on each activity to study and formulate the incentive plan. Helps in material requirement planning and scheduling the material procurement. The example which I said, I gave this information, material procurement happens automatically. Moment the stock reaches 5 units, I pass an automated purchase order. You'll have to give a purchase order that is automated. That information goes to him. He supplies the product. Product reaches. Again, it's updated in my system. System will keep showing reduction as people buy it. Once it reaches 5 again a fresh order will automatically go. Purchase will happen. And in supermarket, I can also use the information to know which are the products going to expire. If the products are going to expire, either I'll have to do a sale of that product with lower pricing, or I'll have to return it to my supplier. So all that can be done in planning with the digital costing system, because manually you will not be able to track all this. When you go to a medical, if they sell the product, in the billing they'll put the expiry date, and what happens in this way is they will get to know what are the products available in their stock and when is their expiry date. That is an information they will be able to track. So helps in material requirement planning and scheduling the material procurement. Helps to identify and eliminate non-value added activity. Non-value added activity is something I saw earlier also. Data and resource consumption in setting the standards. Estimating cost, predicting the market demand, improves the cost benefit analysis. I'll give notes on this in a minute. Go through from 7 till 12. You go through all the questions from 7 till 12. I'll give notes on 12 in a minute. 2-3 minutes for you to go through this. Okay, now write digital costing system. Question 12. Costing system using technology. Costing system using technology is called digital costing system. Is called digital costing system. We can link various functions. We can link various functions plus link our system with that of supplier slash customer. Our system with that of supplier slash customer. Benefits, certainty of cost. Technically, the benefits are same as question 11. They have given it in different manner. Certainty of cost helps in material procurement and planning. Helps in material procurement and planning. Material procurement and planning. Helps in establishing standards and measure performance. Establishing standards and measure performance. Eliminate non-value added activities. Eliminate non-value added activities. Non-value added activities. Estimation of cost. Okay, this is not needed. I think this is sufficient. Eliminate non-value added activity. This is same as impact of IT on cost accounting system, but they've given us two separate areas in your ICI material. So I just thought I'll cover them. Clear? What are the limitations of cost accounting system? Now, limitation is one, any system you want to implement, there is a cost attached with that. I cannot implement a cost. See why most of us do not maintain records of the expenses we incur. Reason is there is a cost attached to maintain that record. When I say cost attached, you'll have to spend daily 5-10 minutes. You're not ready to spend that 5-10 minutes on a daily basis to maintain records of the expenses you are doing because you don't see any benefit out of it. So one expensive, what is expensive is I need people. So additional manpower, additional money. I need additional manpower. Bharadwaj Institute does not maintain cost accounting records. We are not maintaining cost accounting records because we don't see a major benefit out of it. But companies which see benefit, they will maintain it. But for maintaining, you will have to require additional people are needed. Requirement of reconciliation. What is requirement of reconciliation is you will understand that there are two methods of maintaining account: integrated system and non-integrated system. If you maintain non-integrated system, costing is separate, financial is separate. Like bank reconciliation statement, you maintain a cash book, bank maintains a passbook, there is a difference. Similarly, costing will show some profit, financial will show some other profit, there is a difference. That difference needs to be reconciled. Duplication of work. What is duplication of work is because you are maintaining two separate set of accounts. One is costing separately, financial separately. You have to maintain two separate books of accounts. you incur extra costs. So duplication of work can also happen. Duplication and reconciliation will come into picture only when you have non-integrated accounts. What is non-integrated is maintaining costing separately and financial separately. If you maintain single set of books, then you will not have this need for reconciliation, or the duplication of work part will not come. Clear? Let's write limitations of cost accounting system. Limitations of cost accounting system. Expensive. I'm not giving any explanation. These are self-explanatory. Need for reconciliation. Duplication of effort. Expensive, need for reconciliation, and duplication of efforts. Chapter 2, material cost. What is material cost and explain its importance. Now, the term material cost is very simple. Material cost is nothing but the physical item which goes into the making of a product. It is basically the physical item or something which you can touch, which can be touched, that goes into the making of a product. There are two types of material cost. One is called direct material, another one is called indirect material. Indirect material is technically a factory overhead. Now, we have already done a lot of discussion, so I will not be doing like chapter 1 where I explained so much in detail. In chapter 1, the theory discussion was very extensive. Here, we have already solved problems. We already know what is cost sheet, so I will not focus too much into theory discussion, but still I want to give the important points. So it can be a direct material or a indirect material. Our objective is that to ensure all the three happens: economy, efficiency, and effectiveness. Economy in procurement. Economy in procurement means when you're buying the product, you're able to buy at the economical cost. Economical cost means lower price. Efficiency in handling and processing the material. What is efficiency in handling is when you are handling your material, avoid wastage to the extent possible. Because when people are storing the material and using it, there can be some wastage which can happen. So efficiency is to ensure no wastage happens. What is effectiveness is getting the right result. For example, let's assume you're going to cook something. So for cooking something, you have to first buy the raw material. So you go to the market and buy. You'll have to ensure that you buy at the lowest price. That is called economical buying. After that, it is there in your home for 10 days. In the 10 days, please ensure that there is no wastage happening of this product. Whenever you are trying to use it, take it, ensure no spillage happens, no wastage happens. Effectiveness is when you use it, ultimately the end product which you manufacture, or the whatever you are cooking, it should be a properly cooked so that you are getting the right product. If you're getting a bad product after you're cooking, then you have wasted everything. You ended up wasting everything. So effectiveness is producing the desired output. Effectiveness means getting the right result. Effectiveness is always getting the results. Effectiveness is, for example, in our classes, effectiveness is finally you are passing or not. That is the effectiveness. Efficiency is, can I complete my classes within the lowest possible time but giving you the best. So I am giving you everything, but I am trying to completing it in the lowest possible time. Because if I keep taking for 400 hours, 500 hours, students will not be interested in the subject. So I will have to ensure that I'm efficient in my teaching, as well as finally ensure effectiveness. Effectiveness is finally you will have to pass. You cannot compromise effectiveness by focusing on efficiency. Efficiency is needed, but finally effectiveness is needed. I say that I'll complete your batch in 20 hours, but finally students are not passing. That cannot be compromised. So effectiveness is very critical. Efficiency is also critical, but effectiveness is more important than efficiency. Now, why is this critical? First is garbage in, garbage out. What is garbage in, garbage out? Is if you are using bad quality raw material, you're going to get bad quality end product. Quality of your finished product depends on what are you doing with the raw material. Second, price of the final product. In my manufacturing cost, raw material is going to be a significant part of the total cost. It's going to be a significant part of the total cost. So if my raw material cost goes up, if I'm not economical in my buying, if I'm not efficient in my usage, I'm going to incur extra cost. Extra cost may or may not be paid by the customer. Production continuity. We learn about something called as buffer stock maintenance. Why buffer stock is needed? Because you want to continue with production. You don't want production to be stopped. Cost of stock holding and stock out, you'll have to balance between these two. That is why I wanted to first do discussion practical area. Now a lot of things will be easy to understand. Stock holding comparison and stock out comparison. Wastage and other loss, try to reduce your wastage and other losses to the extent possible. That is, be efficient in your handling. Regular information about resources. What is regular information about resources is, uh, when I want to control my material cost at home, I want to buy rice. I decided to buy rice, but I never know that at my home rice is already available. That is, in my home it is stored at 3 4 places and rice is already available, but I kept on buying rice. So you need to have proper records, information about availability of material, and store should be continuously available so that I can do my proper planning of production as well as procurement. At your home, your parents or your mother, when she is cooking, she knows what product is available at home, what is not available. She plans her procurement looking at what is available. She plans her production. What is production is what to cook, depends on what is available at home. If something is available, that is what I'm going to. So my production planning and my procurement planning is very much dependent on what is there at home. If you don't know what is there at home, then you'll randomly keep buying things and you'll randomly think of cooking something, and then you get to know at last stage that product is not available. So you cannot keep doing random things. So you need proper control. So let's start. Let's write note on this. Whatever notes we are giving is for the theory area. So whatever notes earlier given was for practical area. Now for the theory area. The same chapter. It's for the same chapter only. Theory areas.
Sir,
Material. Yeah.
your screen is too blessed.
Okay. I've changed the internet, so it should be fine. You check for 2 minutes and then let me know still if you face an issue. Material. Material means right material, right material. Physical thing, physical thing which goes into making of a product. Physical thing which goes into making of a product. Material is physical thing which goes into making of a product. Types: direct material and indirect
Blessed,
material.
sir.
Sorry.
Still it is very blessed, sir.
Okay. Wait. Two types: direct material and indirect material. Direct material and indirect material. We should ensure we should ensure economy in procurement, economy in procurement, efficiency in efficiency in storage and you whatever term they have used, efficiency in storage and processing, and effectiveness in production. Effectiveness in production.
Sir,
Yep.
sir, whatever you're typing is not getting displayed, like it is getting delayed, sir.
I don't know, friend. If now others are facing an issue with delayed,
Yes, sir.
Yes, sir.
I don't know what to do now because I've changed every possible thing. Better now. This is the only choice I have as of now. Hopefully, it becomes better. Hopefully, it becomes better. You can check now. Uh, Okay, material is physical thing which goes into the making of a product. Two types, direct material, indirect material. I should ensure that economy in procurement, efficiency in storage, and effectiveness in production. Why material cost is important? Why material cost is important? We'll write those points. Quality of finished product, whatever points are there. Quality of finished product, price of the final product, price of the final product, production continuity, cost of stock holding and stock out, wastage and other losses, wastage and other losses, regular information about resources available. Just write it as resources available. Regular information about resources available. Live online guys, I hope it is fine now. I just hope that whatever I'm typing and whatever I'm saying is there's no lag.
Yeah, sir, it's better.
Yes, sir. Now it's done.
Clear? This is as far as why we are learning about material cost, because it has a huge impact on the quality, price, production can get stopped, stock holding needs to be managed. So because of this, we are ensuring that we do certain techniques. What are the techniques you have learned? We did EOQ, we did inventory levels, we did ABC analysis. All those techniques came into picture because somewhere you wanted to have some control on the material cost, or considering the importance of material cost, we had to find some ways of reducing or controlling the cost. Any doubts on this? Okay, next point. What is material control and explaining its objectives? Now, there are different ways of giving an objective of material control. The main objective is ensuring balancing of two items. What is balancing of two items? Is one, I don't maintain very high inventory. I don't maintain very high inventory. On the other side, I don't go out of stock. I don't go out of stock, because if I go out of stock, I'll have to incur stock out cost. And if I maintain very high inventory, I'll have to incur carrying cost. Somewhere a balance needs to be done there. Inventory control is defined as the function of ensuring sufficient goods are retained in stock to meet all requirement. Requirement means to meet all production without carrying unnecessarily large stock. So I'll have to somehow create a balance. I'll have to create a balance. One of the way of creating the balance was that buffer stock or inventory levels, because these are my objective. Minimal interruption in production process. I don't want production process to be stopped at any scenario. Optimization of material cost. What is optimization of material cost? Is ensuring that I have the lowest cost. What is lowest cost? Total of ordering, carrying, and your inventory cost. Apart from that, there can be other cost also in your manufacturing process. Materials are procured at the lowest possible cost while ensuring adequate quality, economy in procurement, reduction in wastage, efficiency in handling. When you handle the material, please ensure that there are no wastage happening. Adequate information, it is just copy pasting of the earlier one. What is adequate information? Is having adequate information about available material, if you don't have adequate information, you will end up buying items which are not needed and not buy items which are needed, because I wanted something but I have not bought it. I did not want something and I bought it. This can happen at your end also, at a personal end. If you do not know what items are available with you, you may end up buying something which is not needed, and you are not buying something which is needed. So maintenance is ensure that reliable information is available, which would help in detecting losses and pilferage. What is losses and pilferage? Because you never knew that these items are there, you did not do a fast moving classification, slow moving classification. Moment you find slow moving items, you will try to take some action on that. So all these can happen only if you have adequate information. Completion of order in time is linked to this, minimizing interruption in production process. If there are no interruption in production process, I'll be able to fulfill my customer orders in time. If there are continuous interruption in production process, when can interruption happen? Because you do not have the material. If material is not available, interruption will happen. So I want to ensure no interruption and meet the customer orders in time. Next, material control. Material control or inventory control. Ensuring minimal, or ensuring there are no stoppages in production, no stoppages in production while not carrying large amount of inventory. I don't want to carry large amount of inventory, but I also don't want any stoppages in production. I don't want any stoppages or carrying large amount of inventory. Objectives: minimal production stoppage. So I talked about no production stoppage, but when we did your buffer stock problem, we were okay with some stockouts happening, because objective was to minimize the total of stockout cost and carrying cost. So some amount of wastage was okay, I cannot help it. Minimal production stoppage, economy in procurement, or you can call it as optimization, whatever term they have used. Optimization of material cost, reduction in wastages, adequate information, completion of order on time. Minimal production wastage and completion of order on time is interlinked. If production wastage is not happening, then only you'll be able to complete the order on time. Otherwise, will not be able to complete it. Completing order on time depends largely on no production stoppage. Clear? Done? Okay, next things, what are the requirements of material control? Now, for a material control to work smoothly, there is a need for a lot of coordination among various departments. I'll first explain what are the departments involved. I'll be discussing this in another question later, but I'll first explain what happens in a company. Now, for procurement, I have a purchase team. They are going to buy products. Apart from purchase, there is a production team. These guys are going to use the raw material. So production team should somehow coordinate with someone called a sales team. Why they should coordinate with sales team? Because based on sales only they'll decide what to produce. Once they decide what to produce, this information should go to stores, because stores will check whether raw material is available or not. For the next 15 days or 30 days, there's a continuous planning which will be done. So production team has to coordinate with stores and check whether inventory is available or not. When I say coordinate in the practical, there are ERP systems. They will automatically log in and check whether it is there or not. If inventory is there, okay. If inventory is not there, stores or the production will have to tell the purchase to buy this. Stores or the production will have to inform purchase team to buy this. After purchase happens, there should be an inspection team. They have to inspect that raw material, whether the raw material which has come in is right or not, because you need a good quality raw material. So inspection team should check it. Inspection checked, it will go to stores. Stores will send it to production. Production will tell purchase, please buy some more product. Purchase will give it to inspection. Inspection will give it to stores. Stores will go to. So this is a continuous cycle which will keep happening. So this coordination is very critical. If this coordination does not happen at home, my mother is cooking, she knows what needs to be buy, so she is the production team, she is the purchase team, she is the stores team, she takes care of everything. But in a practical world, you have different departments. If coordination goes wrong, somewhere the problem will happen. That problem will ultimately lead to production stoppage. So proper coordination is the most important thing. Proper coordination of all departments involved. Proper coordination of all departments involved. Beyond this, you will see the same thing. Determining purchase procedure. Determining the purchase procedure. That is the first segment. Purchase is the first segment. Using of standard forms for receipt of goods, placing an order, issuing of material. You will learn about the names for this. When you receive goods, there is a document called goods received note. When you place an order, there's a document called purchase order. When you issue material, there's a document called material requisition. You'll learn about all of this as we proceed, but I need standard forms for this. Preparation of budgets concerning material supply and equipment. That is for the next 15 days. Please tell which material you want. Next 15 days, next 30 days. Operation of system of internal check. Proper storage. Perpetual inventory means, what is perpetual inventories? There should be a continuous check on. See, you maintain records. Records will tell inventory is 200 units. Physically, inventory is only 180 units or 170 units, because what can happen is so many buyings, so many purchase will happen, so many receipt will happen, so many issue will happen. Sometimes some clerical errors will happen, that the entry would not have been done properly. Or the person who picked the material, he said 50 units, but he ended up picking 55 units or 52 units. So that continuous stock taking will happen. There will be something called as physical verification. You have a stock in your books. Physically, is it available or not? We did problems on PSL where at the end of the month you found some shortage, normal shortage, abnormal shortage. That will happen only by doing this physical checking. By doing this checking. Let's write requirements of material control. I'll not write all the requirements. I'll write only the important ones. Okay. You want to do detailed reading, you can do from this material, or you can leave 2-3 lines if you want to make extra notes. I'll only talk about the important points. Requirements of material control. Proper coordination of all departments, in bracket purchase, stores, production, inspection, sales, all have to coordinate properly. Proper coordination of all departments. Standard procedures and standard forms. 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 That is, I need to have a standard procedure as to what needs to be done, and there should be proper forms for that. There are multiple forms which are there. You will learn about as we proceed. Budgeting. 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 I think for me this is sufficient. And internal checks. Internal checks. Beyond this, you want to write something else, please leave space, and want to write extra points, that's up to you. I've just written what makes sense for me, what are the critical points. I cannot write the entire points. So this is what is requirement of material control. In your case, I believe ICI may not ask direct theory question. It could be more of MCQs. MCQs means you need clarity on concept and not by-hearting powers. So you'll have to understand these terms and accordingly produce in exam. That is an MCQ form. I don't know what will happen, because as of now I'm expecting it will be MCQ, but you'll get clarity only one model test paper ICI releases. That will come only closer to your exam. Any doubts on this? Next question, I've already discussed it. I am going to again say the same thing. What is element of material control is what are the items in material control. As I said you the procedure: purchase, receive, inspection, storage, issue, maintenance of record, and do a physical check. This is the procedure. You purchase material, it comes to your factory, you inspect it, you store it, the storekeeper will issue it to production, and there will be a records which is maintained. What is record is PSL, price stores ledger, and a physical audit will happen to check whether inventory is there or not, because physically inventory may be there, may not be there. So in the end I want to check whether that inventory is there or not. Next, elements of material control. Elements of material control slash procedure. What is the normal procedure? Elements of material control slash procedure. Purchase. Purchase is the first thing which will happen. That is, you will place an order. Receipt. Purchase of material, receipt of material. After receiving inspection, after inspection storage, after storage issue. Parallelly, when you receive, you have to maintain PSL. When you issue, so that is a parallel thing. Inventory records in bracket PSL. There are other form of inventory records also, but as of now you can just understand PSL. Inventory records PSL and stock audit. This is to check whether inventory is really there or not. I want to check in reality whether that material is there or not, because may be there, may not be there. So a stock audit needs to be done. Now I want to talk about certain documents which happens in this process, in your manufacturing process. This can come in MCQ. Now whatever I'm going to talk is going to come in MCQ. Next is documents associated with procurement. This can come in exam. Documents associated with procurement. First document I'm going to discuss is bill of material. I'll explain the document. First document is bill of material. I expect ICI testing at least one MCQ from documents associated with procurement. Now, what is bill of material is, whenever you cook something, there's an ingredient list which is given saying that these are the ingredients needed. That ingredient list is bill of material. That ingredient list is called bill of material. For example, I want to produce product A. To produce product A, I need 1 kg of raw material B, 50 liters of product C, 25 liters of product D. Some ingredient list is needed. That is, what do you need to produce a product? Why is this bill of material critical? Because manufacturing team has said that we want to produce 1 lakh units of this product. Then what we do? 1 lakh into input by output. Where will this input output come? It will come from bill of material. It will come from your bill of material. This is a standard document which could be prepared by the production department or by the engineering department or by the production end. Somebody will prepare this, and this will tell what inputs are needed to produce a output. What inputs are needed to produce a output? What is the utility? Without having the ingredient list, how will you start cooking? So same thing this is going to do. Without knowing what are the items needed, how will the manufacturing happen? So bill of material, it is a detailed list specifying the standard quantity and quality of material and component required for producing a product or carrying out any job. There can be other extra information, but this is the main crux. I'm not going to give anything beyond this. This is the main crux. What is the utility of this? You think about cooking without having ingredient list. How will you do cooking? So the same thing is here. It is useful for production team. It is useful for procurement team. It is useful for stores team. Production team to know what items are needed. Stores can check whether it's needed. Now procurement in a practical world, what happens is production team will just put an information in the, or the sales team will put an information saying that we are going to sell 1 lakh unit. ERP will automatically tell production you have to produce it. ERP will automatically tell to the stores, check whether this material is available based on BOM or not, based on bill of material or not. And your procurement team will automatically procure it if it's not available. So it is prepared by the product development team, commonly known as engineering or planning department, in a standard form. This is shared with marketing team, production team, stores team, cost accounting. Why it goes to cost accounting? Because they have to calculate cost of product or service. They have to do the cost of product or service, and cost has to be calculated before production, not after production, because I have to calculate before production. After production we will do, but before production I have to calculate and accordingly fix the price. So purchase department procures material on the basis of specification. Production is planned according to the specifications such as nature, volume of material. Accordingly, material requisition list are prepared. What is material requisition list? Is production will tell what is material requisition. This is the next item, but this is an information by the production to the stores saying that I want this material. I want this material. Stores department will use as a reference document for issuing the material. Cost accounting department is going to use this to calculate the cost of a product or a service. Clear? Now I'm just going to give important point. I'm not going to give everything here. Now, right, bill of material. BOM is a standard list, is a standard list, or is a detailed list. Let's use the word whatever they have used. Is a detailed list specifying the standard quantity and quality, of material required. Standard quantity and quality of material required. Quantity and quality of material required. Prepared by engineering department. Prepared by engineering department. Next point, technically, prepared by engineering department. Prepared by engineering department. Useful for stores, production, purchase, cost accounting department. Beyond this, I'm not giving anything. Useful for stores, production, purchase, and cost accounting department. Useful for so many people. This is going to be used by so many people in the process. So bill of material is that ingredient list which I talked about. Clear? Any doubts on this? This is what has helped you in doing EOQ calculation, into input by output. That into input by output came only from here. Clear? Next document is material requisition note. What is material requisition notice? In your PSL, you kept on recording issues. You kept on recording the issue entry. That issues will happen from the stores to the production. From the stores to the production. Now, how will the stores issue this? Stores will issue this only when production request. Production has to request to the stores. That request will come in the form of a material requisition note. It will come in the form of a material requisition note. I have seen in practical world, this is also called as material issue note, MIN. Material issue note or material requisition note. From ICI point of view, the term is material requisition note. Now, write material requisition note. Document used by production department to request for raw material from stores. I want to request for raw material. That request is going to come through material requisition note. This is a material requisition note will go, and I'll ask for raw material from the stores team. I'm going to ask for the raw material from the stores team. Practical world, it's a standard form. It has to be signed by someone. All those rules will be there, because stores cannot just randomly issue it. So you need the head of the department to sign, just to ensure that everything is going fine, because otherwise randomly people will keep getting the material. So MRN is an authorization to the storekeeper. I'm authorizing the storekeeper to issue material. This is an acknowledgement for receipt of material and forms the basis for material accounting. We did one problem where at the homework problem where issue was there. I said W16 and W17. The W16 and W17 will be recorded in that, saying that which job are you using this material? Which job are you using this material, because I want to know where is it getting used. So accordingly, I'll do my costing calculation. Purchase requisition. Next is purchase requisition. Now, what is purchase requisition is, I wanted the material. I told the stores, give the material. Stores is saying material is not there. So you'll have to plan for purchases. For planning for purchases, purchase team will be issuing a purchase order to the supplier. They'll be issuing a purchase order to the supplier. You'll learn about this term also. But before that, purchase team wants some intimation that saying material is needed. That intimation will come in the form of a purchase requisition. Who can give this intimation? Stores can tell. Sometimes production can also tell. Stores can also tell, or the production can also tell. Something which is regularly used by the company, stores may give this intimation. When will stores give intimation? Stores will say reorder level has come. So stores will put an information saying, please buy this. All this happens in ERP. Okay, automated orders are also possible. Automatically purchase requisition can also happen. Purchase requisition is basically a communication to the purchase team saying that please buy raw material. So the requisition will tell how many units to buy and when to buy. All that information will be there, and he will decide from where to buy. All that is his headache. You can just tell what you need. You can just tell what you need. Purchase requisition. Purchase requisition. An MCQ can come from this area in exam. Purchase requisition. Formal request by production department. Formal request by production department to the purchase department. To the purchase department for purchasing. To the purchase department for purchasing raw material. I'm making a formal request saying that please go ahead and buy this. Please go ahead and purchase raw material. Full stop. For our next point, for regular items, the request can be from stores department to purchase department. The request can be from stores department to purchase department. If it's regularly used item, stores know it. Irregular usage, very less required, purchase can coordinate with production can coordinate with purchase, or they can do it through stores also. Clear? Okay, once this is done, practical world, if needed as per the policy of the company, I have got a request. I may have to do something called as tender. What is tender is, I am inviting a tender or proposals from multiple people saying that I want 10,000 kgs of this product. Who is ready to supply this product? Who is ready to supply the product? It's not mandatory. Many companies follow it. Many companies don't follow it also. When you want to do some material purchase, some purchase worth 1 crore, 2 crore, you may go through a tendering process. Otherwise, what you will do is, you know the supplier from where to buy it, you will directly buy it. So inviting tender or requesting for proposal. Here, material purchase department has to know what to purchase, when to purchase, how much to purchase. Purchase department makes an inquiry into the market. I'm basically, if you have in newspapers, you could have seen some ads which will say we are requesting for tenders, or we are requesting for people to tell us or to supply 10,000 kgs of raw material A at this price, or the price will not be saying 10,000 kgs of raw material on December 31 at this location. Whoever is interested will put their quote. There will be a tendering process. In the tendering process, multiple people will quote for it. You will select the quote. After the quotation is done, you will be selecting the quote based on the lowest cost. Lowest cost is one rule. Apart from that, you also need to check whether the other person is credible. All those other challenges need to be taken into consideration. So next part is, here no need to write any notes. Inviting tender slash requesting for proposal. This is part of my procedure. Inviting tenders or requesting for proposal. This basically is a communication to general public, or it can go as a communication to 100 suppliers of mine saying that I want this product, you please tell what price. So many people will, there will be something called as a bidding process. In the bidding they will put their bid. It could be a sealed bid, it could be an open bid. There are a lot of ways of doing it. So once these bids have come, I'll open all the quotations, and then decide which quotation. So selection of quotation or proposal. I'll be doing a comparative assessment. Price is important factor, but I only need to consider quality, quantity, delivery commitment, and then select the best quote. I'm selecting only based on price, but that guy is not credible. He's not supplying the product. That can also become a challenge. Next, selection of quotation slash proposal. Selection of quotation slash proposal. After the selection is done, I'll be placing a purchase order. What is a purchase order? Is a communication by, you understand the flow is very good. It's a communication by the purchase team to a supplier to supply some product. This is a communication from a purchase team or from the company. It's not from purchase team, it's like from the company to the supplier. So purchase order will issue a formal PO. It's a return request to the supplier. To supply certain specified material. So request, you can say purchase order, request or formal request from purchase department to the supplier to supply raw material. Nobody else can issue a purchase order, in the only it can be issued by the purchase department. Random people cannot issue it. It has to be issued by the purchase department. Purchase department should issue this. Any doubts on this? After the purchase order is issued, supply of material is going to happen. There's going to be a supply of material. So once the material is received in the factory, we prepare a document called as goods received note. This is once the material is received by the company. Just give me a minute. I think okay, got stuck. My screen has got stuck. Just give me a minute.
Hi friends, so I am recording this video from home today because in between our class, when we were doing, a part of the section got rejected or it was not recorded properly. So I'm recording this section so that we can merge it with the main video, and that's how you can watch the video. In the class at some stage my recording got stuck where I had explained what is a purchase order and I was explaining goods received note. So I'm continuing with that explanation. I'll explain goods received note again, then give the notes on that and go on till some more items, I think till some question 17 or 18, and thereafter the regular class recording is there which can be merged and you can continue watching the video. So till now what I had explained is, we initially understood what is a bill of material. That is basically something which is giving the ingredient list of a company, then ingredient list of a product or a service. Then material requisition note. This is a document for issue of material because you want material to be issued. That's called material requisition note. Then we also learned about purchase requisition, which is a request by the user department or the stores department to the purchase team saying that please purchase some raw material. Then we saw something called as a tendering process and selection of quotation. Purchase order is placed by the supplier telling the purchase order is placed by the purchase team telling the supplier to supply the raw material. Goods received note is a document which is prepared once the material is received by the company. So you will be checking this. This is usually prepared by the stores department. You will check whether the material is in line with what you have ordered. Is prepared by the receiving section, which forms the basis of entries in the stores ledger. If it is in order, you will place a goods received note. So this is to tell that the material has been received by the company. This is a very important document for passing payment to the supplier, because when you have to give payment to the supplier, you will have to check what did he supply. So that is going to be checked with the goods received note. You're going to compare the goods received note with the purchase order and then ultimately pass the payment. Now what can happen is when you receive the material and when you do inspection, some of the material may get rejected by us. For that, a material returned note may have to be prepared. This is for returning the raw material from the company to the vendor. The company may return it to the vendor. This material returned note may happen after preparing GRN, before preparing GRN. That is, in the GRN itself, you are not updating it. If an entry is not recorded in goods received note, then automatically it will not get recorded in price stores ledger. So it will be lesser purchase and return may not get recorded in the price store. If the return takes place before the preparation of receiving report, such material would not be included in the report and hence not shown in stores ledger. It is not going to be shown in stores ledger, so no adjustment is needed. But if you have returned it after passing the receiving report, then you will have to pass this entry for return of material. We did see accounting of return of material when we were doing price stores ledger. And ultimately you will check and pass the bills for payment. So goods received note is prepared to check what material has been received by the company. Some of them, if you don't like it or if there is a problem, then you will need a material returned note that is prepared by an organization to record the return of material, and then ultimately the bills you will check and pass the bills for payment. So you can write notes on this also. This I had given during the class, but because that recording got missed out. Goods received note. Goods received note. Goods received note. Document prepared. Goods received note. Document prepared on receiving the material. Document prepared on receiving the material. This is usually prepared by the stores department. Document prepared on receiving the material. Materials returned note. Document for recording return of material to supplier and checking and passing bills for payment. So write this part of it. This will take care of this question fully. GRN, document prepared on receiving the material, usually prepared by stores. Materials returned note, document for recording return of material to supplier and checking and passing bills for payment. Complete writing this. Don't write the next one. I'll explain that and then you can write it. GRN, MRN and checking and bills, passing bills for payment. Okay. Now the next question we have is difference between bill of material and MRN. That is something you can manage on your own. It is more of a theoretical discussion. Whatever we did on BOM and MRN, that comparison will be done. You want to make some notes, please leave some space. Government e-marketplace. Let's first understand what is marketplace. Marketplace is an example of a marketplace is Amazon. In Amazon, there are large number of buyers and large number of sellers who are trying to buy and sell material. So whenever I want to sell something, I'll register in Amazon and try to sell it. If you want to buy something, also you can register in something called as Amazon Business. There you can pass some customized requirements saying that you want 10,000 kg of some product. If you are buying in the normal Amazon app, 10,000 kg may not be available. But if you do it through Amazon Business and put an order saying that you need 10,000 kg of some product, this inquiry will go to so many people and somebody will opt for, somebody will pass, or after looking at your order, they'll be giving a quotation saying that I can supply this material for so much. There'll be a quotation which will come, which will tell I can supply this material for so much. So government e-marketplace is critical because in case of public procurement, what is public procurement? Is procurement by government organization or departments or PSUs. There is a need for transparency, efficiency and speed, because if there are no proper checks and balances here, there are possibility of bribe or other issues happening in procurement. Lot of scams keep happening in the practical world. If you just Google about it, you will see a lot of procurement scams which have happened in government departments. So in order to remove this government e-marketplace has come GEM, which is basically a e-market for multiple goods and services procured by. It is in fact mandatory for all government users by Ministry of Finance. Ministry of Finance has said very clearly that it is mandatory all your procurement happen through government e-marketplace. It is like Amazon, where large number of buyers and sellers are there. Here large number of sellers will be there. Buyers can be government organization, department, PSUs. Even private parties can also use. What are the charges? I'm not sure, but private parties can also use this. So let's write note on this. Write this. Dedicated e-market, government e-marketplace, dedicated e-market for procuring different goods and services, for procuring different goods and services by government organizations or departments or PSUs, by government organization or departments or PSU. This is mostly for public procurement. When I say public procurement, procurement by public limited companies or procurement by public departments or government departments. As per Ministry of Finance, it is mandatory for them to follow this. It is mandatory for anyone to follow this, all government companies. For government companies, it's mandatory. Whenever they are doing any kind of procurement which is material in nature, you would want that the procurement happens through government e-marketplace, GEM, government e-marketplace. In case you have not been able to note down, you can just pause the video and then please note it. So because I'm doing a recording at home, so I cannot check the students' feedback. So you can just pause the video and then write this. This is for government e-marketplace. Rules for valuation of material receipt, nothing to be discussed now because we have already covered this when we are doing the practical portion. I noted down multiple items to be added, items to be deducted, items to be ignored. All that we did there. Why should a company ensure proper storage of raw material? Now, proper storage of raw material is very critical because if you are not storing the material properly, the material will deteriorate in quality. Deterioration in quality, that will lead to loss. Also, garbage in, garbage out. That is, if you use a bad quality raw material, you're going to get a bad quality finished product. Using a bad quality raw material will ultimately lead to a bad quality finished product. So it's very critical that an organization ensures proper storage. Who is going to do this? The storekeeper. He has to ensure that there is a proper custody, safe custody, as well as proper storage is there. If proper storage is not there, quality will deteriorate, which will ultimately lead to revenue loss because bad quality product has been produced. Also, cost will go up because you are wasting raw material. Proper storage of raw material by storekeeper is necessary for ensuring good quality. Storage of raw material by storekeeper is necessary for ensuring good quality. Okay, what are the duties of storekeeper? Storekeeper is the person who is in charge of the store. Stores is basically warehouse where inflow of material comes, outflow of material goes, sometimes returns come, sometimes you have to return material to the vendor. So he has to ensure that there's a proper control over stores. He ensures that safe custody, there is proper custody of material. You have to maintain records, initiate purchase requisition, maintaining level of stock through ROL, minimum level, maximum level, issue of material, and ultimately doing something called a stock verification and reconciliation. So storekeeper is a person who is in charge of the stores. He has to maintain control over stores, ensure safe custody of material, recording receipts, recording issues, initiating purchase requisition, issue of material, maintaining stock. All this is the duties of a storekeeper. So duties of storekeeper: control over stores. Duties of, these are the important points. You want to write extra points, you can please write it. I am just mentioning the important ones. Control over stores, safe custody, maintaining records, issue of material. In fact, you note till this. Go ahead and note till this. This is the area I had missed out in the class. Till this I missed out. The video got deleted. So just note down all of this and wait for a minute or two. Duties of storekeeper: store records just in time. Just note down this aspect. Balance, I think the video is regular, proper video is there. The class video is there, which I'll merge and then give it to you. But just note down till just in time. No need to understand what it is. Store records and just in time, just note down so that then I'll start explaining it. I'll wait for a minute. Keep doing this. Store records and just in time. Keep noting it. Store records and just in time. Please note down this aspect. Bin card, stock control card, and stores ledger, and then just in time. Just quickly note down this. Till this only we got the video got some issues. After that it got sorted out. I'll wait for another 30 seconds. Quickly write this. In case you are not able to complete this in 30 seconds, then you can just maybe pause the video and note down this fully. In case you are not able to complete it. If you are able to complete, then great, but otherwise please just pause the video and note down this aspect. After that, I think in the regular video everything will be noted. Okay, I will now explain this. What are the forms in which store records can be maintained? What is store records? Is recording, receipt, issue, return. All this is called store records. Material receipt, issue, and return. There are three ways of doing this. Two approaches are maintained by the stores department. Store ledger is something which is maintained by the cost accounting department. Now, what is bin card is? This is the stores. Now, you are storing some material here, storing some material here. storing some material here. So next to this, next to the place where you store, you will keep a card. This card is called bin card. This card is called bin card. In this bin card, you're going to record receipt of material, issue of material, return of material. So bin refers to a box or container where materials are kept. Card is placed with each of the bin to record material receipt, issue and return. Because this card is kept next to the place where material is there, there will be very less chances of mistakes. Because as and when you are receiving the material or issuing the material, you will immediately write in that bin card. Immediately write in the bin card. So mistakes chances are very less. Control over stock can be more effective. You can identify different items of material with this bin card. The disadvantages, if I want to know how much inventory is there, I have to go and check one bin card here, another bin card here, another bin card here, another bin card. So in order to check the raw material inventory, I'll have to check so many documents. That is a slightly time consuming area. Store records are dispersed over a wide area. Another main disadvantage is because you keep the card next to the material, from the material, sometimes oil will be there, some grease will be there, some damage can happen. With cards are liable to be smeared with dirt and grease because of the proximity. So the card can get damaged. This is the main disadvantage of bin cards. The main disadvantage is there is a possibility of cards getting damaged. Then other option is stock control card. What a stock control card is? Similar thing, but every record is maintained here. Here the storekeeper sits. He sits here. He is going to maintain record at one place for all the material. For all the material, the record is going to record, the storekeeper is going to record receipt of material, issue of material, return of material, everything will be recorded, but it will be kept at a single place, not kept at multiple places. You will keep it at single place. It is a record keeping document maintained by the stores department, recording receipt, issue. Records can be kept in more compact manner. Damage and all will not happen because you're keeping at one place. I can get an overall idea of the stock position. This has disadvantage. The disadvantage is, you saw this advantage here, no? This becomes disadvantage because you cannot do this comparison. You cannot do this comparison. Also, there's a possibility that there can be variation in the stock. Variation in the stock. Why the variation happens? Because bin card is kept next to the material, so that every time you issue or receive, you pass an entry. Here, the storekeeper issues one material from here, one material from here, one material from here. So many places he issues the material. He thinks that he will pass an entry later on in the store records, and sometimes he misses out. So that can lead to discrepancy. Stores ledger is nothing but the price stores ledger, which is maintained by the cost accounting department. It is going to use the information either from bin cards or stock control cards. Use the information from bin cards or stock control cards. And using this information, that is the bin cards or the stock control cards, he is going to prepare a stores ledger. The ledger will have both quantity as well as the value. This is the only thing which is going to have quantity as well as the value. So both are going to be there. So this is document which is going to maintain both quantity as well as value. And you have learnt about how to maintain PSL. We have done so many problems. Distinguish between bin card and stores ledger is not needed. It is something you can manage. What is inventory control? I don't know why this came again, but we did check here. If you see here, material control or inventory control. I don't know why it has come again. Ensuring there are no stoppages in production while not carrying large amount of inventory. That is what is inventory control. Function of ensuring that sufficient goods are retained in stock to meet all requirements without carrying unnecessarily large amount of stock. Basically, you will have to have a trade-off between stock out and overstocking. That is how much buffer inventory you want to maintain as compared to the stock out possibility. EOQ, we have seen it in the theory part. That is in the practical part. In fact, beyond this, a lot of things we have seen in the practical part. Inventory levels we saw. Safety stock we saw. Just-in-time approach. This is one thing which is new. Just-in-time approach was not seen in the theory, was not seen in the practical part. I've told you to write the notes. Now let me first explain what is just-in approach. There are two types of just-in-time approach. One is called the JIT production, and second is called JIT purchase, just in time. Just in time means you're going to produce just in time, that is produce only when demand is there. Production should be equal to sales. Production should be equal to sales, so that you do not maintain any FG inventory. Zero FG inventory. Production should be equal to sales. Objective is to have zero finished goods inventory. JIT purchase purchase only when we are going to consume it. Only when we are going to consume it. Only when we are going to consume. Objective is zero raw material inventory. This is a basic thing, is I should produce my product based on actual demand. I do not want to maintain any finished goods inventory. Production should be equal to sales. That's a target. It's not that I'll wait for the actual demand. I'll anticipate or do a forecasting of demand and try to do the production in such a manner that I don't maintain just in time production. Just in time purchase is purchasing the raw material when we are going to consume it. Objective is to have zero raw material inventory, with an approach to have zero inventory in stores. Material should only be purchased when it is actually required for production. You should buy the raw material when you're going to actually consume it. Produce goods only when it is required. You should produce the product. JIT production. This is JIT purchase. This is JIT production. Produce goods only when it is required. Product should be delivered to the customers at the time only when they want. This is also known as demand pull or pull through system of production. Demand pull, that is, you are producing based on the demand. You are producing based on the demand. Demand pull or pull through system of production. As you would have seen this in EOQ, I first decide demand, based on demand production, based on production raw material consumption, and based on that raw material purchase. Know the demand for the final product, then production needs to be started to process the demand. Material consumption is decided, purchase of the material is done, and then the material comes for the purpose of production. So just in time approach is to have zero inventory. Objective is to have zero inventory. Beyond this, I think you are going to continue with the regular video where I have covered the balance question. This was just an in-between 20-25 minutes video which got missed out. So I've covered this. I just hope you have noted down these notes, in between notes. In case not, then you can just put a pause at this stage. This is the notes which I could not dictate in the class, from goods received note till just in time. So maybe you put a pause here and note down all of this in case you have not noted it. Store records and just in time. So that alone you put a pause, and then now you can keep watching the video. Thank you.
Okay, next is what is ABC analysis. Nothing for me to explain in what is ABC analysis. We have already done this in the ABC analysis, something we have already discussed in the class, so nothing needs to be done as far as ABC analysis is concerned. Okay, what are the various other ways of doing inventory classification? There are other methods of also doing inventory classification. Just give me a minute. Okay, what are the other ways of doing inventory classification? We learnt about ABC classification. We have something called as HML classification. What is HML? Is high cost, medium cost, and low cost. ABC is based on quantity into rate, that is value. This is only based on rate, only based on the rate of the product. HML classification, inventory is classified on the basis of a cost of an individual item, unlike ABC where it's classified on the overall value. Values, you are multiplying the quantity into rate. VED classification, which is called vital, essential, and desirable. Vital, essential, and desirable. Here you are going to classify the item into three categories. Vital are the most important one, essential is the next one, desirable is that. So on the basis of criticality. FSN, we have done FSN in the problems: fast moving, slow moving, and non-moving items. So you can do a classification of fast moving, slow moving, and non-moving classification. Next, right? Other ways of inventory classification. Other ways of inventory classification. Other ways of inventory classification. HML, high cost, medium cost, and low cost. High cost, medium cost, and low cost. High, medium, and low. Classification on the basis of price of individual item. On the basis of price of, this can also get tested in MCQ, okay? Classification on the basis of price of individual item. HML classification is high, medium, and low cost. VD, VD, vital, essential, and desirable. Vital, essential, and desirable. We'll just keep it there. Vital, essential, and desirable. Classification on the basis of criticality of item. Classification on the basis of criticality of item. That is, how important is that item for production. Classification on the basis of criticality of item. How critical is that for producing the product. Next is FSN, fast moving, slow moving, and non-moving. Nothing to be explained here. Fast moving, slow moving, and non-moving. Okay, I'll take a break of 10 minutes and then resume. Okay, let's continue with the discussion. Just to summarize what I did till now, we initially started with what is material control. We understood that material control, or why material is very critical, is material is the most important cost for an organization. It can stop your production, it can impact the quality of the product, it can impact the price of the product. So to ensure all this, material control is needed. Material control is ensuring there are no stoppages in production while not maintaining very high inventory. You cannot be maintaining very high inventory. Then we learned about various documents which we maintain. The first document was bill of material, which is basically an ingredients list. Then based on bill of material, we saw material requisition note, where is a request is coming from the production to the stores to issue the material. Material is not available, a purchase requisition will go to the purchase team. They are going to go for tender process. They'll compare the quotations, select the quotation, issue a purchase order. Material will be supplied. You will receive a goods received note. You may return the material, which is called material returned note, and then you will pass it for payment. This is what we learned. And then we saw different types of maintaining your stock records, which is either through a bin system, or you go through a stock control cards, or you go through a price stores ledger. Next, what is a two bin system? Okay, this is a system which an organization, I'm not seeing much happening in the practical world. Now, what is two bin system is, we learned about reorder level. Reorder level is the level at which an order needs to be done. So what is two bin system is, here what we are going to do is, an organization, let's assume you are maintaining inventory. You'll be maintaining inventory like this. There's a single bin, there are two bins. You will keep using material from this bin. Moment you reach this bin, it means you have reduced your inventory level. Please pass a order. Pass an order for purchase of material. So you have two bins. From one bin you will be using the material. Other bin, when you start using it, it means you do not have material now onwards. So you pass an order. So then this bin will go down, this bin will be the up. So this will continuously keep happening. So you will continuously keep doing this way of working. Under the system, each bin is divided into two parts, smaller part and bigger part. The smaller part should stock the quantity equal to the minimum stock or the reorder level, and the other to keep the remaining quantity. Issues are made out of the larger part, but as soon as it becomes necessary to use quantity of smaller part, fresh order needs to be placed. I'll have to place a fresh order. That is a two bin system. practical world, this is not needed because I have sophisticated controls called as reorder level, where I'll know when an order needs to be placed. So now write 2 bin system. Two bin system. Bin is divided into two parts. Divided into two parts. Smaller bin and our smaller part and bigger part. Smaller part and bigger part. Smaller part will have minimum quantity. Smaller part will have minimum quantity. Will have minimum quantity. Bigger part will have remaining quantity. Will have remaining quantity. Issue of material is done from bigger part. Issue of material is done from bigger part. Is done from bigger part. Fresh order is placed. Fresh order is placed when we are required to use smaller part. Fresh order is placed when we are required to use smaller part. If I'm forced to use the smaller part, then I'll have to go to a fresh order. That's technically reorder level. That's technically like a reorder level. Clear? Next is, how can budgets help in inventory control? It's not only in inventory control, budgets have a lot of utility. You'll learn that in budgets and budgetary control chapter. But when it comes to inventory control, an organization prepares certain budgets. The first budget is called sales budget. Based on sales, you prepare production budget. Based on production, you prepare raw material consumption budget and raw material purchase budget. These two are very critical. Raw material purchase and raw material consumption budget, because this is going to tell me how many units of raw material is needed, when should I buy it, at what price am I planning to buy. This is an information. See, planning, a budget is always a document which will tell what is going to happen in future. Without having budget in place, it's very difficult for somebody to plan their operations. For example, next week I have given you a schedule saying that this is what we are going to do in class. That is which day which class is going to be there. If I don't give you a schedule and we tell you that you come on Monday, we will randomly decide which subject we want to teach. Tuesday we will randomly decide which subject we want to teach. You will not be okay with that. As a student, you are not okay with that because you want some plan. You are asking us to give a plan of what we are likely to do. So budget is very critical in practical world. Not only for this, for your CA inter preparation, you should have a plan in place as to how we are going to complete everything. We are trying to guide you. We are keeping test, all that we are doing it. But you need to have a plan in place as to how you are going to complete your preparation so that you can write your exams in the month of May 24 and clear it in that attempt. So plan is basically going to tell what is the likely action in future. So inventory control can be done with budgets because this will tell how much raw material will be needed in future. My mother does the budgeting for the next 1 week, saying that this is what she wants to cook, this is her plan, and based on that budgeting she decides what she wants to buy in the market. So she buys certain vegetables she doesn't buy, she buys certain fruits, because all this is a planning which is being done. You are not going to randomly buy things. Always there is some plan which is there. Some random purchase may happen at personal end, but at a company's end those random purchases are not allowed. So budget will tell me, the raw material purchase will tell what are we going to buy. Raw material consumption is going to tell what are we going to consume. So when you have these two budgets, it will help us in having adequate control over material cost. Adequate control over material cost. Now right. Role of budgets. Role of budgets in inventory control. Role of budgets in inventory control. Raw material purchase budget and raw material consumption budget. Purchase budget and consumption budget can help in inventory control. Can help in inventory control. It will tell us what quantity to purchase, and same can be used to optimize material cost. Optimizes ensuring your material cost is lowest. Ensuring that the material cost is lowest. I'll have to ensure optimal material cost. Clear? Okay. Now till now we learnt about different things. That is what we do for purchase, we learnt what we do for storage, we learnt what are you going to do, budgets, all that we learned. The end part of the chapter focuses on storing material or having adequate inventory or something called as verification of available inventory. So now our focus will shift to price to ledger. Our focus is going to shift to price to ledger part. In that, the first thing you're learning is perpetual records. What are perpetual records? Perpetual record represent a system of record maintained by the stores department. It can be in the form of bin cards or stores ledger. Perpetual is you keep recording inventory on a continuous basis. You keep recording on a inventory on maintaining stores ledger, maintaining stock control card, reconciling between the stores ledger and stock control cards, daily checking of quantity, between stores ledger and stock control cards, identify reason for discrepancies and record the same. Now, what are we trying to do is you have maintained inventory. All this is, I think, practically redundant because everything is now automated. So automatically all these things will happen. What we are trying to do is the stores guy is maintaining bin cards. Are the stores not stores ledger, stock control card. Bin card are a stock control card which is going to be maintained. This entry has to go to stores ledger. In the practical world, it's automated. Who's maintaining stores ledger? Cost accounting department. Bin card and stock control card is maintained by the stores department. So this information has to go there. He has to record both quantity and amount. If there's any discrepancy between these two, that has to be reconciled. Also, you can reconcile any physical balance. Physical balance can be checked and reconciled on daily basis. Quick comparison of P&L due to prompt availability of stock figure. Today, if you ask many companies or if you ask Bharadwaj Institute, can I have what is the profit we have made till now? Because no, because we don't maintain on a daily basis, entries are not updated. Or on a daily basis, I'm not going to maintain how much stock of inventory I have. But a lot of companies would be maintaining stock on a daily basis. That's called perpetual record. When you maintain stock on a daily basis, at any point of time, if you ask what is the value of closing stock, they'll be able to give. In your trial balance, closing stock does not come. Closing stock is a item which is outside the trial balance. So if you don't know what inventory is there, how will you calculate the profit or loss? So to calculate profit or loss, I have to value inventory. I have to physically check inventory. When you maintain perpetual system, you can continuously have records of this, and this will ensure that you get an up-to-date information of stock figures. Anyway, this information is I need for doing material control, because when I said material control, I told initially that records need to be maintained on a consistent basis or on a regular basis, because without knowing what material is there in stock, how do I decide whether to buy a material or not? So maintaining records is very, very critical, and that is going to be done through perpetual system, perpetual inventory system. Now, right, perpetual records, perpetual records, perpetual records, maintaining daily records, maintaining daily records of receipt, issue, return of raw material, in form of bin cards, stock control cards, posting this information in price stores ledger, posting this information in price stores ledger, posting this information in price stores ledger. You'll have to put this information in PSL on daily basis. Helps in up to date information about inventory, up to date information about inventory, daily physical verification can be done. It will not be done on a daily basis, but you can do. When you have proper records, you can go ahead and do the physical verification on a daily basis. Daily physical verification can be done. Let me see if there's anything else. Comprise of bin ledger, maintaining stores ledger, stock control, reconciling, daily checking, physical balance can be checked, quick compilation. Okay, this is kind of done. Now, if you maintain perpetual records, then you can go for continuous stock taking. What is continuous stock taking? Is this continuous stock taking is something this, that continuous means you can do it on a daily basis or at some specified intervals or at some, but if you are not maintaining perpetual record, what is perpetual record? Is not maintaining on a daily basis. So if my books of accounts does not have the daily data, then how will I check the physical inventory? If you're maintaining, so what can happen is somebody asked for issue of material, you issued the material, you did not pass an entry. Somebody received the material, you did not pass an entry, you kept on maintaining all those records and you thought by 15th of the month you will write everything. So when you do that, that is not a perpetual system. That's not a perpetual system, because you wanted to accumulate and then do it at a single stage. In that system, you cannot do daily physical verification, because books will give some number, physical will be some other number. Practically, perpetual records is there for most of the manufacturing company, and it is automated in the system. That is, in the system, you'll automatically pass the entry. For example, somebody asks for material request. That material requisition note goes through system. It goes in the system, no physical. When it goes in the system, the approval is also done in the system. Stores, moment he issues, he'll say I've issued, automatically the entry will get passed. Automatically the entry will get passed, raw material will go down, everything is automated in the practical world. There are proper checks and balances to ensure that these things are taken care of. What is continuous stock taking is, system of continuous stock taking consists of counting and verifying the number of items daily throughout the year, so that all items of stores are covered 3 or 4 times. That is, a company has 400 variety of raw material. Now, checking everything on a daily basis is not possible. So what they are saying is, out of the 400, day 1 you will check 4 items, day 2 you will check the next 4 items, day 3 you will check the next 4 items. But this is also possible only if you maintain perpetual record, because if you maintain perpetual record, then only you can do daily verification. So daily verification here, what you are trying to do is counting and verifying the number of items throughout the year so that all items are covered 3 or 4 times a year. You are not going to check every item on a daily basis. It's impossible. And it is a wasteful activity. Doing checking of every item on a daily basis is wasteful. At my home, so many products are there. So many groceries are there. My mother is not going to check daily basis saying that this item, how much is that, this item. It's not possible. Doing randomly, maybe one item I want to check on day 1, another item I want to check on day 2, another item I want to check on day 3. Stock verifiers are independent of the stores. What is independent of the stores is who maintains record. The records are maintained by the stores keeper. If you give him this duty saying that you check whether physical inventory is there or not, he may not be a proper person to check it, because if he has done some fraud or some issue has happened, it will not come to light. Practical world, most of the time auditors will be doing physical stock verification. When you go for audit, sometimes they'll ask you to do physical stock verification. This is one of physical verification. But continuous verification, within the company itself, they'll appoint some auditor saying that you are part of the audit team and you will have to check every day 4 items or 5 items. So there will be an independent person, and the store staff will have no knowledge of this being done, because if you tell the stores person that he is going to check this item, he will ensure that everything is proper. So normally audit is done or verification is done like a surprise. It's like a surprise visit. This surprise visit will throw away some challenges which are there in the company. So closure of normal functioning is not necessary. Stock discrepancy can be brought to notice and corrected much earlier. Movement of store items can be watched more closely by the store's auditor. Stores auditor, so that the chance of obsolescence buying are reduced. Few companies don't do continuous stock taking. They'll say on March 31 we're going to do physical verification. If you have to check all items, no, you have to stop manufacturing. You'll have to stop manufacturing, or you'll have to do closure of your normal functioning, because what you are planning to do is one day everything needs to be checked. So you are putting everybody in the company on only one job, saying that let's not do anything else, only do physical verification. So closure of normal functioning will happen in case you are not doing continuous stock taking. Normal stock taking, so most of the times when auditors are coming, they will tell that auditors are going to come, they are going to do physical verification. Don't issue any raw material, don't accept any new material. Production may be going on, but no raw material can be issued, no raw material can come inside till the verification is done. So till that time, if production wants some other material, it is stuck. You're kind of in a stuck situation. System discrepancies can be brought to notice. That is, we did PSL. No, in the PSL, what used to happen is most of the time on the last day there will be some shortage. Most of the time you will see on the last day there will be some shortage. If you do continuous stock taking, every day you can find if there's a shortage or not. So you will be able to correct those issues at a faster pace. And what can happen is, when you are trying to correct, you may get to know that there is a fraud getting done. So that fraud can be rectified, or the fraud can be prevented at a earlier time. Obviously, continuous stock taking means you need more money. Why you need more money? Because you need more people. See, anything needs to be done. Perpetual records. Why companies don't maintain perpetual record? Every day maintaining records means I need one person dedicated for that. So I am saying let's not maintain on an everyday basis. Accumulate everything, and one day one person will come and pass the entry. So anything you want to do, there are benefits, but along with it there are going to be costs attached with. All right, continuous stock taking. Continuous stock taking. System of daily verification and counting of inventory. Daily verification and counting of inventory such that all items are covered 3 to 4 times in a year. This 3 to 4 times is just ICI way. It can be 2 times also, it can be more times also, depending on whatever the company wants to do. Advantages. Normal functioning will not be impacted. Normal functioning will not be impacted. early reconciliation early reconciliation of early reconciliation of physical and book inventory. Early reconciliation of physical and book inventory. So whatever discrepancies are there, I'll be able to correct them on a daily basis. When I say daily basis, it's a periodical basis, because one item would be covered once in a month or once in 45 days, whatever the company wants to follow. Any doubts on this? Again, only thing is, you want to maintain continuous stock taking, perpetual records are mandatory. You can just write, it's not there. Continuous stock taking is possible only if perpetual records are maintained. Only if perpetual records are maintained. If you're maintaining perpetual records, you can go through continuous stock taking, else it's not possible. 24 is already discussed. Input output ratio and inventory turnover ratio I've discussed. What is input output ratio is also indirectly discussed. Every problem I used to do this production into input by output ratio. So this is a ratio of quantity of input of material to the quantity of output. Using this also I can control my material cost. How can I control my material cost using this? If your input output ratio is 4:1, if you have produced 1000 units, you should have used only 4000 units of raw material. 4:1 is the input output ratio. If you're using more or less, it means there is a favorable or adverse variance. You will learn this in standard costing. But if you're using more or less, there is a variation which has happened. Go ahead and analyze why is the variation happened. Go ahead and analyze why the variation has happened. Inventory turnover ratio is used for categorizing the item into fast moving and slow moving. Fast moving are those items which have higher inventory turnover ratio and lower inventory days. All these two are covered in the theory part. Next, explain material issue procedure and the associated documents. Now, what is material issue procedure is, the manufacturing team has asked that they want some material. I've already told you what document needs to be given for that. You have to give a document called material requisition note. This is a document which is an authorization to the storekeeper to issue the material. MRN should clearly specify the job for which the materials are required, because ultimately I'll be using this to know in which place this material was used and ultimately recover this money from the customer of that material. That is, whoever is going to I'll use this material for job number 12, job 13, job 14. Job 12 is for customer A. So ultimately customer A has to pay this. You'll learn this in job costing, but ultimately the customer has to pay this. Material transfer note, I discussed this when I was doing PSL. Sometimes what will happen is, one production team will transfer that material to another production team. One production team will transfer the material to another production team. This is not going to impact basically store's ledger, but it will impact my cost records. Because earlier I thought this is the cost for job 12. Now I am saying it is not job 12, it is job 13 or job 14. So surplus material of a job or few can either be transferred back to stores or transferred to some other job. If you are transferring it to some other job, then it is called material transfer note. Okay. When you are returning, what will happen? I'll explain. When you are transferring it to some other job, you are going to use material transfer note. When you are returning it back, you are going to use shop credit note. You are going to use something called as a shop credit note. The surplus material, when it is returned to the storeroom, should be accompanied by a shop credit note, alternatively called as store's debit note. Shop credit note. What is shop credit? Shop is the manufacturing place. So they are saying you give credit for me. Credit means you reduce my cost. and take it back to the stores. Take it back to the stores. So shop credit note or stores debit note. Now write documents related to material issue. Documents related to material issue. Material requisition note. Anyway, we have already written this, but still writing again. Material requisition note. Document for issue of material from production. Document for issue of material from, say, from stores to production. Issue of material from stores to production. From stores to production. Whenever production wants something, they'll give this and get the material. Issuing material from the stores team to the production team. Material transfer note. All these can get tested in MCQ. That's why I'm discussing it. Else I wouldn't discuss all these. Material transfer note. Document used for transferring material. Issued is correct. I'm not using the word issued here. It is issued by the production team to issue material from the stores to production. Stores will issue the material to production. Who will give the document? Document will be given by the production team. I'm not written who is preparing the document. Document used for transferring material from one production department to another production department. From one production department to another production department. One production department to another production department. Next, shop credit note, stores debit note. Document for return of material from production to stores. Issue of material will happen from stores to production. When it is from production to stores, it's called return of material. They are returning the material. Return of material from production to stores. Any doubts on this? Clear? Can you proceed? Okay, now comes what are the various methods for valuation of material issues. I'll first discuss each of the method. I think ICA material has some 10-12 methods. So let me discuss. Three methods I've already told you: FIFO method, LIFO method, and weighted average cost method. These are talking about other methods. First method is specific price method. What is specific price method is, I have purchased some raw material only for job 112. It will not be used for any other job. I'm going to use this only for job number 112. So it's very easy to do the recording, because of whatever price you purchased it, please record it at that price itself. The issue of material will be recorded at the price at which the purchase was recorded. So this method is used when materials are purchased for a specific job, and these materials are issued against the specific job. Example, job 112. I've just given an example. I'll give notes on this in some time. Let me first complete full discussion. Cost of material are issued for production purpose to specific job, and hence will determine the correct cost. Method is difficult to operate when purchases and issues are numerous. That is, you keep on doing multiple purchases and multiple issues. Sometimes it becomes difficult. It becomes difficult because you purchase lot 1, then another lot 2, lot 3. In between, when you consume some units from lot 1, some units from lot 2. So what price to take? So specific price method can have this challenge. Next is very well known method, first in first out method, kind of very simple for you to understand, where you are going to issue the material on the basis of first in first out principle. Simple to understand, easy to operate. Closing stock will be represented very closely at current market price. These are MCQ question which can come. Under which method the closing inventory will be closer to current market price? Something like that can ask. Now listen, what they are trying to say is, when you are buying under your FIFO method, you bought lot 1, lot 2, lot 3, lot 4. This was purchased at 10, 11, 12, 13. The price kept on going up. Under FIFO method, my closing inventory will mostly be from this lot. My closing inventory will mostly be from the latest lot. Lot 1, lot 2, lot 3, you kept on buying it. So they are saying whatever closing inventory you have, it will be very closer to current market price or very closer to the current price. Whereas LIFO method is the opposite. LIFO will be 10 rupees. Whereas your FIFO method is very closer to the current price. So closer to the current market price. Frequent fluctuation can lead to clerical errors, doesn't really matter. This is not from a practical point of view. System is going to do the calculation. System is going to do the calculation. Each issue of material is related to a specific purchase price. The cost charge is likely to show a deviation from period to period. That is true. That is what happens is, in first month, let's assume I buy this material, 10 lots I've purchased and kept it. I've not purchased anything extra. 10 lots purchasing. First lot or the first issue you will record at 10 rupees. Next issue you will record at 11 rupees. Next issue, because first in first out, you follow that principle. So you purchased all of this. Now you want to consume raw material. For first month you said 10 rupees. Next month you did not buy anything extra, but now you're saying 11 rupees. Next month you're suddenly saying 12 rupees, because the price will keep fluctuating. The price will keep fluctuating. This fluctuation will not happen in weighted average method. In the weighted average method, if you're not doing any new purchases, your weighted average price will not change. Your weighted average price will not change. So the same issue price will be there. So each issue of material is related to the specific purchase price. The cost charge are likely to show a deviation from period to period. Next is LIFO method, which is the method is known to you. Last in first out method. This is based on the assumption that whatever you purchase is consumed first, and here what is going to happen is the earlier lots are going to be there. Cost of material issued will be nearer to or will reflect the current market price. Understand the difference. In FIFO method, your closing stock will be equal to current market price. In LIFO method, what will happen is, if you are issuing something, you will say it is issued at 13 rupees, then at 12, then at 11, then at 10. That is what LIFO does. LIFO says issues happening at 13, 12, 11 and 10. FIFO method is the opposite. Issue happening at 10, 11, 12 and 13. So under LIFO method, whatever material I am issuing, they will be closer to the current market price. They'll be closer to the current market price. Whereas in FIFO method, my closing stock will be closer to the current market price. Closing stock will be closer to the current market price. Frequent fluctuation, same issue. Each issue is specific. That's obviously known fact. This method is not acceptable to income tax authority. That is why we don't follow LIFO method. We normally follow FIFO method or weighted average cost method. LIFO method is practically not followed because this has this challenge. It has a challenge of this. Base lot method. What is base lot method is, you have inventory, in that there is a minimum inventory or safety stock. Let's take an example of safety stock or a buffer stock or a minimum stock. This is always held at a fixed price. Minimum quantity of stock under this method is always at a fixed price. If you have 1000 units, in that first 100 units will always be 10 rupees. Balance 900 under FIFO method, LIFO method, weighted average cost method. That's your wish. So base stock of material is valued at original cost, whereas material other than the base are valued using FIFO, LIFO, weighted average, practically again not followed method. Though it is there in your theoretical, I'm discussing that, but again not something which is critical. Next is simple average price method and weighted average price method. Weighted average, you know what is weighted average method is, you take the amount, divide by the quantity and get the rate. Simple average method means, take a simple average of 10 and 11. take a simple average of 10, 11, 12 and 13. Simple average can work when the quantity you buy is the same every time. For example, 10 into 1000, 11 into 1000, 12 into 1000, 13 into 1000. Can you tell me the total of this? 10 into 1000, 11 into 1000, put a total. 10 into 1000, 11 into 1000, 12 into 1000, 13 into 1000. Same quantity. Divide that by 4000. How much? This 11.5 is called weighted average because you multiplied the quantity and then divide. Tell me average of 10, 11, 12 and 13. Just an average of 10, 11, 12 and 13. It will be same 11.5. So when you buy the same quantity every time, simple average and weighted average is same. When you buy the same quantity every time, technically simple average and weighted average is going to give the same number, because in weighted average you want to take weights. Weights is what? 1000, 1000, 1000, 1000. Simple average does not take weights, it just takes a simple average. So here it doesn't really matter. When you're buying the same quantity every time, simple average and weighted average is going to give you the same result. So simple average, this method is calculated at the average price, which is calculated by dividing the total of unit rate by the number of purchase. Simple to understand, easy to operate. Material issue does not represent wide fluctuation of prices. If there's a wide fluctuation of prices which is happening, it can lead to incorrect result. According to me, this is one of the best method, weighted average price method or WAC method, because it smoothens the price fluctuation. Issue cost need not be calculated unless new lot is purchased. If you are not buying a new lot, the issue price remains the same. Again, they are talking about difficulty in computation. Difficulty in computation is not a practical challenge. It's not a practical challenge because you're going to use systems to. When you do weighted average cost method, it takes away a lot of time because there is too much of calculation to be done. So that is the difficulty they are talking about. But this difficulty has no utility in the practical world, because systems, when I do it in Excel, I don't find it difficult. But when you do it manually, you will find it difficult because it takes away a lot of time. Replacement price method. Under replacement price, what does replacement price means is, if you were to buy the material today, if you were to buy the material, what price you purchase, I don't know. If you were to buy the raw material today, at what price will you buy is called replacement price. If you were to buy the raw material today, at what price will you buy is called replacement price. Material issued are valued at the replacement cost. Replacement refers to the price at which it is possible to purchase an item which is being consumed. You purchased it at 15, but in your consumption you will write 17. Why are you writing 17? Because today if you want to buy, you can buy only at 17. So product cost will reflect only the current market price here. Product cost will reflect the current market price. Why will it reflect current market price? Because you are saying you are going to record them at the today's price. You're going to record them at the today's price. Again, all this is not possible. Practical will not allowed, because it will lead to a lot of issues in your book entries. Realizable value means at what price can you sell the raw material. Replacement cost means at what price can you buy the raw material today. The price at which you can buy and the price at which you can sell can be different. That is, if I want to go and buy sugar in the market, let's assume I want to buy sugar in the market. The shopkeeper is saying 15 rupees. I go to the same shopkeeper and say, I want to sell sugar to you. He'll say, he'll give me only 12 rupees. He'll give me only 12 or 10 rupees. The realizable value is different and replacement cost is different. Replacement cost is the cost at which you can purchase. Realizable value is the price at which you can sell the product, at the price at which it can be sold in the market. Standard price method means predetermined rate. I'm least bothered at what rate you buy and all. I'm going to use a predetermined rate irrespective of the actual purchase. Again, not allowed. Again, these are not allowed methods, because you are using predetermined method. How will you do it in accounting? Income tax authorities are not going to allow this. So using a predetermined rate, because you are saying I want to account it as 15 rupees. You purchase that at 12. Income tax will say purchase only at 12. You cannot record it at 15 rupees. So all notional items will lead to challenge. Inflated price method. This is something we did in few places. What is inflated price method is, if you remember, when we are doing your calculation, effective good units is equal to goods received minus provision for some loss was there. This provision for loss, when you do, you're inflating the price of the material indirectly. You're inflating the price of the material. How are you inflating? Your cost is 1 lakh. You received 10,000 units. You should say 100 per unit. But you are saying, no, not 10,000, do 1 lakh divided by 8,000. Why 8,000? Because you are provisioning for another 20% loss. Another 20% loss. And you say 125. So, in case of material suffers loss in weight due to natural or climatic factor, evaporation, issue price is inflated. Issue price is inflated. Don't record 100, record it as 125. Record it as 125. Reuse price method, because your ICA solution has a lot of methods. I'm discussing all of them. I'll give notes on this in some time. What is reuse price method is, sometimes you will be rejecting. When materials are rejected and returned to the stores, or a processed material is put to some other use, you have rejected some material, or you have a material which is put for some other use, then what will happen is, such material are priced at a rate quite differently from the price paid for purchasing them. There is no proper procedure, they're saying. For example, if some material got rejected, you purchase that at 20 rupees. FIFO will say record that at 20 rupees. Reuse price method says 20 and all is not logical, because this material got rejected. It is a bad item. I cannot record this at 20 rupees in my cost. So at what rate can you record? Maybe 2 rupees, 3 rupees, 4 rupees, 5 rupees. That is reuse price method. They are saying this is only for items which are getting rejected. I'll wait for 2-3 minutes. I also want to take some rest. So you go through all the points and then I'll give you theory notes. Go through every method. 2-3 minutes of waiting. Go through this. I'll give notes. Okay, let's start writing notes. Methods for valuation of material issues. Specific price method. Material is issued at the specific price paid for purchase. Whatever price you paid for that purchase, you can kind of do this. FIFO method. Material is valued under first in, or material issue is valued under first in first out principle. First in first out principle. I'm not going to talk about all disadvantages. The important point alone I'm going to say here, because some simple to calculate, all that I don't want to say. Here one thing I want to say, closing stock would be closer to current market price. Closing stock would be closer to current market price. Would be closer to current market price. LIFO method. Material issue is valued under last in first out principle. Last in first out principle. Last in first out principle. Value of material issued. Value of material issued would be closer to current market price. Value of material issued would be closer to current market price. The last lot would be consumed first is the assumption here. Closer to current market price. Base lot method. Minimum inventory is called as base lot. And same is valued at fixed price. Minimum inventory is called as base lot and same is valued at fixed price. Balance inventory can be valued under FIFO, LIFO, weighted average, etc. You can bring others also. FIFO, LIFO, weighted average, etc. Balance inventory can be valued under FIFO, LIFO, weighted average, etc. Simple average price method. Issue price equal to simple average of different purchase price. Simple average of different purchase price. Simple average of different purchase price. weighted average price method, issue price equal to weighted average of different purchase price, weighted average of different purchase price. This method smoothens price fluctuation. What is smoothens is it takes an average of different prices, smoothens price fluctuation, and can be used can be used when there are and can be used when there are when there is huge variation in prices. When prices fluctuate a lot, it is good to use weighted average because it will smoothen out the fluctuations. When there is too much of fluctuation happening in the price, it is good to use weighted average cost method because it will smoothen out the fluctuations which are there. Huge variation in prices. Replacement price method, issue price equal to replacement price, replacement price in bracket, price at which raw material can be purchased today, price at which raw material can be purchased today, that's called replacement price. Price at which raw material can be purchased today, realizable price method, issue price equal to realizable value, a realizable price, realizable value method, issue price equal to realizable price, price at which raw material can be sold today. MCQs can come from this, so be a little clear on this. Raw material can be sold today. Standard price, issue price equal to predetermined price. Whatever price you buy doesn't matter, I'll be putting a predetermined price. Issue price equal to predetermined price. Predetermined price. Inflated price method. Issue price equal to price inflated to account for price inflated to account for loss in quantity due to issues such as evaporation. This is just an example. Such as evaporation, to account for loss in quantity due to issues such as evaporation. Just give me a minute. Next is reuse price method. Useful when there is rejection of material. When there is rejection of material, the only thing it says is issue price should be different from the original purchase price. Issue price should be different from the original purchase price. Only thing it said is my price has to be different from the original purchase price. What price they did not say. It has to be different from the original purchase price. Clear? Okay. Now, treatment of special item, material return to vendor, I've explained in PSL. We wrote notes on this. Material return to stores also, we have written notes on that. So I'm not discussing those two things. Material return to vendor, material return to stores. Both we have already written the notes also. I've already discussed them. Notes are also written. Valuation of shortage. This also I've discussed it, but I'll discuss again. There are two types of shortage which can happen. One is a normal shortage and second is a abnormal shortage. For normal shortage, you are going to indirectly write the amount as 0 and quantity will be there. Quantity will be reduced, amount will be 0. Abnormal shortage will be transferred to costing P&L. So they say normal shortage is technically transferred to something called as overhead control account. Sometimes what few people say is normal shortage also you put an amount. You put an amount, no need to ignore the amount. When you do your issues entry, normal shortage also put an amount, abnormal shortage also put an amount. No need to inflate the price of the balance material. Put an amount for normal shortage, put an amount for abnormal shortage. Abnormal shortage will go to costing P&L. Abnormal shortage will go to costing P&L, which means it will not form part of the cost of production. Normal shortage will go to an item called as overhead, which means it will form part of cost of production. So there are two ways of treating. Normal shortage, you inflate the price of remaining material. That's what I told you in PSL. But theory also says that you can go ahead and increase or move to overhead control account. Move this to overhead control account. This approach, moving this to overhead control, will be critical when you follow FIFO or LIFO method. Because in FIFO or LIFO, what will happen is you cannot inflate the price of the material. Because in weighted average, you can inflate it because it is a single lot. Weighted average has a single lot. FIFO and LIFO has multiple lots. It has multiple lots. So inflating the price of the remaining material is not possible in FIFO and LIFO method. So there, whatever problems you would have done that inflating the price, you check, all those would have been weighted average method. All those would have been weighted average cost method. Because in FIFO and LIFO, if you put a 0, from which lot you will say the first lot. So first lot will have a value difference, other lots will not have any value. No change can happen in the other lot. So that is the challenge with FIFO method. So whenever you are following FIFO or LIFO method, you will have to go ahead and move to overhead control account. Accounting says both are acceptable. Inflating the price of the remaining material. When you inflate the price of the remaining material, it will form part of cost of production. When you move to overhead, again it will form part of cost of production. Now there are multiple items which are there. That is when you use your raw material in manufacturing process, there's something called as waste, there's something called as scrap, there's something called as spoilage, there's something called as defective. These are technical terms. ICI has used all those terms. Basic rule for accounting is if you have a scrap, you have two types of scrap: normal scrap, abnormal scrap. Abnormal scrap will go to costing P&L. Normal scrap will form part of cost of production. Waste, you have a normal waste, you have an abnormal waste. Spoilage, you have a normal spoilage, you have an abnormal spoilage. I'll explain the technical difference, but when you suddenly read it, you may not find much difference between the term waste and scrap. Waste means the raw material which is lost in processing, having no recoverable value. That is, you are not able to find that raw material itself. You used 1000 kgs but got output of only 800 kgs. What happened to 200 kgs? It got lost in my manufacturing process. It got lost in my manufacturing process. So obviously there cannot be any recoverable value because you're not able to find that. If it's a normal wastage, it is absorbed in the cost of production. Abnormal wastage goes to costing P&L account. The rule is same. Normal cost of production, abnormal goes to costing. Scrap means you use 1000 kgs. This 200 kgs, some residue you are able to see. We did one problem, if you remember. There, what happened is in cost sheet. In cost sheet, there was a problem where it was manufacturing of bags. There is a cotton was used as a raw material and leather was used as a raw material. This cotton and leather, some cuttings were there in the end. This is called scrap. This is called scrap. This scrap, if it's a normal scrap, it will be borne by the good units. Abnormal scrap, it will go to costing P&L. The difference between waste and scrap is waste, you are not able to see it. Scrap you'll be able to see and it can be sold. It can be sold, you'll get some money out of it. Spoilage, material which are badly damaged in manufacturing operation. Material which are, so these two are related to raw material, okay? Waste and scrap is related to raw material. Spoilage and defective is related to finished product. Material which are badly damaged in the manufacturing process and cannot be rectified. Cannot be rectified is called as a spoilage or spoiled unit. Normal spoilage treated as part of production overhead. Abnormal spoilage take it to costing P&L. Then what is defective? Defective is also a bad product but it can be rectified. Bad product but it can be rectified. We had one cost sheet problem where defectives were getting manufactured and we rectified it by incurring some 20% of the proportionate cost, something was there. So if it's a normal defective, treat it as a overhead. Abnormal defective, take it to costing P&L. Obsolescence is basically loss in the value of an asset due to time. That is, if you have a fixed asset, you're not using it, but still there will be loss in value. You have a mobile phone. In fact, mobile phone, moment you open the seal of a mobile phone, moment you open that seal, 20% or 30% value is down. The mobile phone, because moment you open it, because if you want to sell it, the other person will sell whether it is a newly fresh pack or it's a pack which you have used it. I say I did not use it, but the seal is open. Moment you have opened the seal, the value goes down. Moment the seal is open, the value is going to go down. So obsolescence is the loss in intrinsic value of the asset, which is going to happen because of multiple reasons. If it's normal reason, take it as overhead. Abnormal reason, take it to costing P&L. Let's just write some notes on this. Special items. Special items. Shortage. Shortage. Normal shortage plus abnormal shortage. Normal and abnormal. Other things is already given. Material return to vendors, all that is already done. Normal shortage is treated as overhead. Abnormal shortage is transferred to costing P&L account. Transferred to costing P&L account. Transferred to costing P&L account. Next, scrap, wastage. Treatment, I'm not going to say. Treatment is normal wastage, overhead are absorbed by good units. Abnormal wastage goes to costing P&L. Wastage, item lost in, or raw material lost in manufacturing process. Raw material lost in manufacturing process with no recoverable value. With no recoverable value. Scrap raw material residue. Raw material residue, that is after you do manufacturing, something is there, some cuttings are there, some leather cutting, something is there. Residue left after manufacturing process. Left after manufacturing process. This has some realizable value. This has some realizable value. Some realizable value. Spoilage. Finished product. Finished product. Finished product which is badly damaged and cannot be rectified. Badly damaged and cannot be rectified. Defective. Defective finished product which is damaged and can be rectified. You can rectify or you can sell it as a second hand product. Seconds can be rectified. Damaged and can be rectified. Last one is obsolescence. Loss in value of raw material or finished product. It could be loss in value of raw material or finished product. Multiple reasons can be there. Value of raw material or finished product. Clear? Balance, you can just distinguish between waste and scrap, scrap and defective, spoilage and defective. You can just keep reading them. I'm kind of done with the theory part discussion. You can revise through the theory, revise through the practical, then do the MCQ book which I've given. Just go through the MCQs. It will test your clarity on theory concept as well as the practical concept, and then obviously you're going to write a test in the next week. I'm kind of done with today's session. If there are doubts, I can take it up. Otherwise, I end the session. Any doubts, let me know. Okay, I'll come to page 73. What is labor cost and its type? Labor cost is very simple. The reward which I pay to the employees of an organization. It could be in the form of a monetary reward. It could be in the form of non-monetary reward. Monetary reward can be basic wages, dearness allowance, employer contribution to PF, employer contribution to ESI, some allowances, and non-monetary benefits can be some welfare benefits which I give, like subsidized food. All these are non-monetary benefits. So labor cost is benefits paid or payable to the employees of an entity, whether permanent or temporary, for the services rendered by them. It includes wages and salary, allowances, overtime, employees contribution to PF, other welfare funds, other benefits. This is broadly classified into two categories. One is direct labor cost and indirect labor cost. Direct labor cost is incurred on those employees who are engaged in the production of a product and whose cost can be directly and economically identified with the unit of production. Directly and economically identifiable with the unit of production. So direct labor refers to the wages paid to the employee which can be attributed in an economically feasible manner. Cost incurred who are directly engaged in the production process. Indirect, which cannot be attributed to a particular cost object, where you cannot, for example, stores. The storekeeper salary cannot be attributed to a cost object. What is a cost object? Is a product or a service which you give. So I cannot attribute directly to a product or a service. So whatever salary you are paying to a storekeeper will go as indirect labor cost. Clear? Any doubts on this? Let's start. In your theory part, labor cost. Labor cost. Labor cost represents reward paid to employees. Reward paid to employees. It includes, we have seen this in many questions. Now you'll be able to understand or appreciate these better. Basic wages, overtime, DA, other allowances, employer contribution to PF, ESI, multiple things are there. Employer contribution to PF, ESI, etc. Two types. Direct labor cost in bracket paid to employees engaged in production. Two types. Employees engaged in production and indirect labor cost. There's no definition for an indirect labor cost. Something which is not a direct labor cost becomes an indirect labor cost. Payment made to employees engaged in production is a direct labor cost and others is an indirect labor cost. Clear? Your direct labor cost forms part of your prime cost. Indirect labor cost is mostly a factory overhead. Any doubts on this? Second, I'll just discuss, nothing for me to write. Distinguish between direct employee cost and indirect employee cost. It is the cost incurred in payment of employees who are directly engaged in the production process. Cost who are not directly engaged in the production process. Direct employee cost can be identified and allocated to a cost unit. It has to be apportioned on some appropriate basis. Whatever salary I'm paying to a storekeeper, ultimately it has to be passed on to the product. It has to be passed on to the product using some basis, appropriate basis. Direct employee cost normally will vary with the production. Indirect employee cost does not vary with production. There can be some other basis. There can be, that is, storekeeper salary does not depend on, or the number of storekeeper does not depend on unit of production. It depends on how much raw material we are using, how many input, how many receipts are there, how many issues are there. It depends on various other factors. What is labor cost control and important factors for controlling employee cost? Like you had material cost control. What is material cost control? Is ensuring that the material cost is at the lowest level while ensuring no stockouts happening. No stockouts were happening. Here labor cost focuses on keeping the wages per unit of output as low as possible. I don't want the total wage cost to be the lowest. I want the wage cost per unit to be the lowest. How can wage cost per unit be lowest and total wage cost goes up? Because if people produce more, we give extra incentives. So I'm okay to pay more to my employees as long as they are producing more product. They are able to work efficiently. Every problem we were focusing on this efficiency part. We are focusing on the efficiency. So focusing on keeping the wages per unit of output as low as possible. This can be achieved by giving appropriate compensation to encourage efficiency. Factors which need consideration for controlling labor cost are: how do you ensure that labor cost is in check? There are multiple departments which work together. There's a personnel department, there's something called as a time booking department, timekeeping department. I'll explain as we proceed. So assessment of manpower requirement. What is assessment of manpower requirement? Is how many employees are needed. Control over timekeeping and time booking. I'll explain these two terms in some time. What are this timekeeping and time booking? Time and motion study. Some of these aspects I'll discuss as we proceed. Control over idle time and overtime, you know what it is. Control over labor turnover, you know. Why labor turnover control? Because if you are not controlling the labor turnover, it will lead to extra cost for the company. Wage and incentive systems, improving productivity, job evaluation and merit rating. I'll just explain these two terms in some time. Timekeeping and time booking, and time and motion study. These two explanation will come to you in some time. Now, right? Labor cost control. Labor cost control. Labor cost control focuses on minimizing the labor cost per unit. Minimizing the labor cost per unit. Not the overall labor cost, focuses minimizing the labor cost per unit. Full stop. Overall labor cost can increase, but labor cost per unit can decline if productivity improves. If there is an improvement in productivity, automatically what will happen is I may be paying extra to my employees, still the labor cost per unit can come down. Important factors. I'll just write the most important one. Control over idle time, overtime, labor turnover, time booking, timekeeping. Idle time, overtime, labor turnover, time booking, timekeeping. Clear? Now, identify the departments which can help an organization in labor cost control. Somewhere here, this time booking and timekeeping part will get clarified. There are multiple departments which are there in an organization. When we did material cost control, I had explained that there is a manufacturing department which is involved. There is a stores department which is involved. There's a purchase department which is involved. There's an inspection department which is involved. There is an accounts payable department which is involved. There's a receipts department. So multiple departments were involved in the material control. Similarly, here also we have multiple departments. The first one is personnel department. What is personnel department? Is basically HR department. Personnel is nothing but HR department. They are going to find you the required people, recruit them, give training if needed, and evaluate the performance. HR job is to recruit people, give training, assess their performance, and sometimes they may tell employees to exit also. Sometimes they may tell to exit. Then engineering and work study department. What is engineering and work study department is, within a manufacturing department, there are certain departments which is going to do this. What this is going to do is, this will tell, for manufacturing a product, I need a people with this skill set. You can work in an automobile company. The same worker may not be able to work in a steel company. The same worker may not be able to work in some other company, because the skill sets needed are different. I can teach costing, but I cannot teach other subject, because the skill sets needed for costing is different. The skill sets needed for GST could be different. Direct tax could be different. So identify what will each job need, provide training. These guys also can help. See, HR team is going to arrange training. They are going to arrange the training. They are not going to technically give the training. Who will give the training? For example, if I want to be trained, Bharadwaj Institute has a HR department. They will assist in getting this training done by maybe some senior faculties there who will teach me how to go about with my classes. So provide training, supervise production, and do something called as time and motion study. What is time and motion study is, I am going to look at, I will give, in one day, I will tell a worker that you start producing. I will monitor what is he doing on a daily basis. Every hour, what is he doing? How many units is he producing? Where is he spending time? So time and motion study will ultimately tell me what is the standard time per unit, because I will monitor what this guy is doing, how is he working. We will assume some wastage of time will be there, because that's a normal feature. So time and motion study is basically done to understand how much time should it take for you to produce a product. How much time should it take for you to produce a product? Why we need this? Without time and motion study, I will not know how much time is it needed. So one, I cannot fix the standards. If you don't fix the standards, you cannot give any bonus. That's one headache. Second is, you cannot do manpower planning. What is manpower planning is, how many employees are needed. How many employees are needed in an organization will be assessed through something called as manpower planning. Manpower planning is how many employees needed. How will you get that? That depends on how much time do you need to produce a product. Without even knowing how much time it is needed, I cannot do this planning. So then timekeeping department. What is timekeeping department is going to do is very simple thing. How much time did you spend in the factory? It's just spending. I came to Bharadwaj Institute. My admin team will do a timekeeping. What is timekeeping? They'll say, okay, I was there for 3 hours in the academy. Today, I'm in the academy for around 6 hours. From morning 6 o'clock, I had started my classes. What is time booking is, how much time did I spend on every job? So I've spent 3 hours on CA final classes. Now I want to spend 2.5 hours on CA inter classes. So time booking is 3 hours on job A, 2.5 hours on job B. Timekeeping is just spending the amount of time, just calculating. What is the use of timekeeping? Timekeeping will help me in calculating hours worked into rate per hour. Hours worked into rate per hour, because your wages payment is hours worked into rate per hour. So in order to calculate that, you need to know how much time did you spend in the factory. That will come through timekeeping. Time booking is, I need to somehow put your salary to job A, job B, job C. We did one problem where we were allocating some 30% to one work, 40% to another work. So I'll have to allocate your salary to some job. That will come through time booking. So whatever Bharadwaj Institute is paying today to me, 3 by 5.5 hours of that will go for CA in final. 2.5 hours has gone to CA inter. That is how my salary can be distributed. Payroll department is going to pay the salary. It's going to pay the salary. They are the one who is going to do the calculation which you have been doing. You will be part of the payroll department or the cost accounting department, where what you are going to do, you are going to take hours worked, multiply with the rate per hour, consider Halsey bonus, consider Rowan bonus, consider DNS allowance, consider overtime, all that you will consider, and then decide the salary. Disbursal of salary and wage payment post preparation of payroll. Post preparation of payroll. Preparation of payroll is calculating how much salary to give. Cost accounting department is going to account this, and using the time booking data, they will allocate my salary to CA inter, CA foundation, CA final, somewhere my salary has to be allocated. That is the job of the cost accounting department. So timekeeping is just noting amount of time spent by me in Bharadwaj Institute. Time booking is exactly knowing where did I spend the time. Did I spend time for CA intern, CA final, CA foundation, CA inter costing classes, CA inter FM classes? Where have I spent the time? Clear? Any doubts on this? No, right? Departments involved in labor cost control. Departments involved in labor cost control. First is personnel department slash HR department. Personnel slash HR department responsible for recruitment, arranging training and performance appraisal. Recruitment, giving training and doing an appraisal of performance. Personnel or HR department, recruitment, training and performance appraisal. Next is engineering and work study. Engineering and work study department, preparing job specifications. Preparing job specification. What is job specifications? What do you need out of a job? Provide training. Provide training. Conduct time and motion study. In bracket, this will help in computing standard time. Time and motion study. This will help in computing standard time. I'll be in a position to calculate how much time is needed. Time keeping and time booking. I'll be explaining about this later on. There are, I think, extra questions there. Time keeping and time booking. Payroll department. Payroll department. Compute wages plus disbursal. Compute wages and plus disbursal. Compute wages plus disbursal. Disbursal of wages. You have to compute whatever you have been doing in this chapter. You will have to do that computation and then disburse. Cost accounting department. Accounting of wages and distribution to various cost objects. Distribution to various cost objects. Clear? Any doubts on this? Done? Any doubts on this? Okay. What is the purpose of collection of labor cost? That is, why are we trying to calculate or understand what is labor cost? Very simple. Without knowing what is the labor cost, I cannot calculate the cost of a product or a service. Second, without even knowing the cost, how will you control it? Without even knowing what is the amount of cost we are incurring, how can I go for controlling the cost? So collection of labor cost is the responsibility of the costing department, which records separately wages paid to direct and indirect labor. Why are we doing this? Direct wages will be included in the direct cost of goods produced or goods completed, technically part of prime cost. Indirect wages will be treated as overhead. Idle time, if it's normal, I have no problem. If it is abnormal, then abnormal idle time will go to costing P&L. This so you can call this as, okay, let it be as it is. Idle time, I'll give an explanation when you write it. And abnormal loss or gain is technically abnormal idle time. Again, only the idle time part. So understanding is, without even knowing how much salary I'm paying, not knowing where am I spending the time, the gap between the time keeping and time booking is technically idle time. Is technically the idle time. Today, I've spent 7 hours in Bharadwaj Institute, but I'm taking class only for 6 hours. Balance 1 hour is idle time because of multiple reasons. There was a breakfast break I had taken. Maybe I took another break of 10 minutes in between the class. So whatever break I'm taking, or I'm just sitting idle, I'm not doing anything. So there are losses of time which is going to happen. So it's very critical for me to first keep a track of how much time I'm spending. Then only I can calculate how much time I'm wasting in the company. Once you know how much time you're wasting, you'll be in a position to control it. Now, right. Purpose of collection of labor cost. Purpose of collection of labor cost. Controlling labor cost, that's the primary purpose, though it's not given there. That's the primary purpose. Controlling labor cost. Classification of labor cost is direct and indirect. Classification of labor cost is direct and indirect. Labor cost is direct and indirect. Computation of idle time. Computation of idle time. Abnormal idle time will be debited to costing P&L. Abnormal idle time will be debited to costing P&L and not form part of cost of product. Whatever abnormal time we have wasted, that will not form part of the cost of a product. If it does not form part of the cost of the product, customer is not going to pay for this. Customer is not going to pay for this if it does not form part of the cost of a product or service. Clear? Any doubts on this? Timekeeping, I've already explained you what is timekeeping. Anyway, we will just go through it. Timekeeping refers to the correct recording of employees' attendance time. How much time did I spend in the company? It's very critical if you are following a time rate system. If you're following a time rate system, knowing how much time spent is very critical, because wages paid is equal to hours worked into rate per hour. If you're following a piece rate system, may not be very critical, but still I want to know, because if I don't have an idea, then I may not know whether he is working at a very faster pace or at a slower pace. Is he wasting time? So these are the reasons for preparation of Payroll is calculating how much salary you have to pay. For computing overtime, if you have to compute overtime, you will have to first, every problem you did in overtime, the question said 10 hours spent, 10 and a half hours spent, 9 and a half hours spent. For ascertaining and controlling cost, for ascertaining idle time, for disciplinary purpose, for overhead distribution. Now there are various methods of timekeeping. I'll quickly discuss it and then we do the write the note. In timekeeping, earlier there were manual methods. Now organizations are increasingly going to something called as a mechanical method or automated method. In manual method, the first method is very simple. Attendance register method, where moment you enter, your entry time is noted. Moment you exit, your exit time is noted. There are certain challenges with this. The challenges is it is easy to make changes in the record, or whoever is, there's a person called timekeeper. Timekeeper is the person who is keeping track of this. If this guy and the employee become friendly and he does certain adjustment, it can lead to challenges. Metal disk method. What is metal disk method is, every employee is allotted a metal disk or a token. Every employee is given a metal disk or a token. Moment you enter the factory, you are required to remove the disk or token from the box kept in the factory. So moment you remove it, the timekeeper knows that you have come to the factory. Immediately after the scheduled time for entering the box is removed, then latecomers will have to personally give the tokens to the timekeeper. The timekeeper can record the exact time of arrival for the latecomers. So there is a box in which you will have to put the disk, and by the time you leave, you will have to again submit it. All these are not practically followed system. Punch card attendance system. This is what is followed in most of the companies. What is punch card system is, there's an ID card given to you. In the ID card, there is what is it? There is a punch card, which moment you in a practical world, there will be a light, you show it against that light, your entry would be recorded and your exit would be recorded. The only problem with this is, when you wave this card near a reader, there is a reader where you'll have to wave this card. The problem is, if I give my ID card to my friend, he can also do punching for me. He can also do this punching for me. That is, he shows the ID card of mine, my attendance is recorded, he shows his own also, his attendance is also recorded, which is where this came into picture. Biometric attendance system, where no card, nothing. Moment you enter, either your fingerprint or your eye scan, something would be done and attendance is recorded. When you exit, again the attendance is recorded this manner. This way proxy is not possible. Either mostly through fingerprint they do it. I have not seen practically biometric being followed by many companies because it's a very expensive method. It is an expensive method. Many companies go for punch card attendance system. What happens in a punch card attendance system is, you are just going to show your card, assuming nobody is going to do a proxy kind of a system. This will work through. Manual methods are kind of removed. No organization follows a manual method because it is cumbersome. Why to keep noting down every time and all? In an automated system, everything is automatically taken care of. All data comes in the system. Automatically you will calculate the wages is also automatically calculated, amounts are automatically calculated, somebody will authorize it, payments will also happen automatically. So most of the things are automated in the practical world. Your job is just to verify them or check them. Let's write. Timekeeping. Timekeeping. Timekeeping refers to correct recording of time spent, correct recording of time spent by an employee in factory. Purpose or objective. Why are we doing this? Purpose or objective, whatever name you want to give. To compute wages, overtime, efficiency, control cost, Want to calculate the salary, overtime wages, measure the efficiency, standard time by actual time, controlling the cost. For all that purpose, first thing I need to know is how much time did an employee spend in the factory. Manual methods of timekeeping. I'm now going to explain the method and all. It's self-explanatory. Attendance register method, and metal disk method. Both are self-explanatory. Attendance register method and metal disk method. In case you want to write some extra notes, you can leave space to write notes on those two methods. For me, these two simple notes are sufficient. Mechanical, in case you want to write some extra notes, please leave space. / automated methods. Punch card method or biometric system. Punch card method or biometric system. Or the biometric system. Your automated methods will great extent be remove something called as a proxy and other things, but the problem is they are costly in nature. An attendance register is a very simple method of maintaining records, very easy for any small organization to implement. Just one attendance register and it's done. But your automated methods, punch card system or biometric system, are slightly costly to implement. Any doubts on this? What are the requisites of a good timekeeping system? That is, a good timekeeping system should ensure that I get to know the exact time spent by an employee in the factory. It should exactly tell me the amount of time. I'm not talking about time booking. Time booking is then analyzing how much he spent where, how much he spent where. That is different analysis. Timekeeping system is it should ensure that I am able to exactly calculate or exactly find the correct time spent. Now for that, certain issues should be there. Certain issues are there. First thing, system of timekeeping should be such that it does not allow proxy. It does not allow proxy for another worker. Moment proxy is allowed, you are not going to be able to calculate the correct time spent. Provision for recording attendance of piece worker is also needed. Why piece worker attendance? Piece worker hours worked into rate per hour is not there. But I need some discipline by this guy, and also I'll be calculating their efficiency. If efficiency is 200%, 250, 300, which means they're working very fast to increase their salary, production can be hampered, the quality can be hampered. So for that purpose also I have to record even for the piece workers. Time of arrival as well as the time of departure should be recorded. I'm not sure why this point is mentioned, but it's a self-explanatory because I want to record the exact amount of time spent by a person in the factory, for which obviously I want to know what is time of arrival and time of departure. Late comers should record late arrival, any relaxation by the timekeeper, because if the timekeeper is a person who is friendly to the employee and you are coming late by 15 minutes, 30 minutes, he says that's okay, I'll record it as normal time, then the entire purpose of timekeeping will get lost. Method should be mechanical. As much as possible, it should be mechanical. And also whatever method you follow, practically this challenge also happens. If you are having a biometric system or a punch card system, moment I punch it, it should be able to record my attendance in a second or 2 seconds and I should move. Because if I'm doing this and waiting there for 30 seconds and all, there will be unnecessary queuing which will happen in the factory, because at 9 a.m. at a single stretch, maybe 100 employees are entering the organization or 200 employees are entering the organization. When I start a class at 6:30, let's assume, if we tell that you will have to punch it and come inside, because most of the people will come exactly at that time, some 5 minutes up or 5 times. So if there is too much of queuing there, you're unnecessarily wasting the time of people. So that also needs to be ensured that there is not too much of queuing, for which only a lot of organization, if you are implementing a punch card system, you may have multiple systems so that different people can punch it at different places and then enter inside. Or a biometric system is also like that. So you will try to keep it in such a manner that there is no major time wastage, because employees have to wait for them to enter the factory. If they're waiting, obviously their productivity is wasted. Now, right, requisites of good timekeeping. Requisites of good timekeeping. Recording exact time. This is what is it? There's only one point. It has to record exact time. Recording exact time, in bracket entry, exit. Recording exact time, entry and exit. No proxy. No proxy. No relaxation by timekeeper. This timekeeper guy should not relax and say that you come late, I'll put it as normal time. Mechanical system. Manual can lead to disputes. Mechanical system. Most of the organization follows a mechanical system wherever attendance is recorded. Wherever it is recorded, they follow a mechanical system only. Moment you enter, you will have a punch card system where you punch it and then enter inside. Mechanical system. Simple and easy to implement. Any doubts on this? Clear? Can you proceed? Any doubts? Done? Then what is time booking and what are its objectives? Now, time booking is basically knowing exactly how much time did a person spend on different jobs. There are 2-3 ways of doing a time booking. One way is there is a time card for Dinesh Jain. So what the time card will say is 3 hours for CA final, 3 hours for CA inter. Today, every day I keep recording this. This is one way. That is for myself. There is a card. In that card, the entry is being made. Another option is a job card. This job card is CA inter. The heading is CA inter, where it will be said Dinesh Jain 3 hours, PC sir 3 hours. So you will keep putting the entry of different people who spend time on that job. You will keep putting. So there is a CA inter job card sheet where you will keep noting down the different time. Technically, if I want to know where did Dinesh Jain spend the time, you will have to first bring the CA inter card, check when did I spend time on CA inter, then take CA final card, check where did I spend time, then check CA foundation, check when did I spend time. That is one way. The other way is there is a card for myself. In that card, it is known clearly that where did I spend time, and automatically if somebody wants to know for CA inter how much is the time spent, you will have to now ask for card of Dinesh Jain, card of PC sir, and then keep checking it. So 2 ways of maintaining it. Either maintain employee wise or maintain job wise. Maintain employee wise. Practical, well, it's automated. It's automated. Both will be automatically taken care of. When you maintain the record employee wise, the system will automatically show the job wise also. When you maintain it job wise, system will automatically show the employee wise also. Practical, well, it's automated. Time keeping merely records the amount of time spent by a person in the factory, and the same is used for calculation of wages. Time booking helps in analyzing how the total time has been spent in the factory on various jobs and waiting time. There could be idle time, all that will be there. Where did this person spend time? Reasons for waiting time like lack of material, lack of instruction, machine breakdown, power failure. Why are we doing this? This is needed for cost accounting. This is needed for cost accounting. Second, to measure efficiency. The person is there in the factory. He's saying I was there in the factory, but you did not give me any work. What shall I do? Why are you telling I am inefficient? Without giving any work, I'll only be staying idle. So hours worked is for measuring efficiency. The hours worked is not timekeeping hours. It is time booking hours, because that is the only time you spent on doing the work. That is the only time. Salary would be paid on the basis of timekeeping. But what is exact efficiency you want to measure, that is on the basis of time booking. Because if I am in the academy for 7 hours, and let's assume Bharadwaj Institute pays me for 7 hours, the amount of time I'm in the academy. But if I have to measure my efficiency in completing CA inter classes, I can measure only by checking the exact amount I spent in the class. Whereas I was waiting before the class, I took a lunch break, I took a coffee break. All that cannot be considered for measuring the efficiency. Time booking for fixation of responsibility. Wherever time got wasted, there could be controllable reasons, there could be uncontrollable reasons of wasting the time. I want to exactly know where was the time. Without having idea of what is time booked, you may not get to know how much is the time wasted. So time booking will tell me the amount of time wasted in the organization or wasted by me in Bharadwaj Institute. Now, how are we doing it? One containing analysis of time with reference to each job. Job is CA inter, okay? A separate job card for CA inter is there, where a job involves several operations. A separate entry is made in respect of each operation. You can understand a separate entry is made in respect of each subject. I take classes, some other faculty take classes. Other with reference to each employee. Under the system, a separate card would be used for each employee for each day or for each week, and the time which is spent on different jobs would be recorded in the same card, so that the card would have a complete history as to how his time had been spent during the period. Practical world, both are automated. You put an entry, let's assume if you use Excel and you put an entry, the Excel has a lot of filters by which a job card can easily become a employee card, and employee card can easily become a job card. Both the information can automatically come in the, or can come in an automatic manner in the practical world. Clear? In a practical world, every employee, moment he enters, he will be putting something called as a, he will punch in and put the attendance. When he's exiting, he puts an attendance. Like the place where I used to work, they used to tell us to fill something called as a timesheet. This was given to employees, not for the manufacturing company, but I'm just talking about a normal employee. I was part of the corporate office, so they used to tell me to fill a timesheet. What was the timesheet is, they told me to fill every day. What did I do? Where did I spend time? That has to be updated in the timesheet. This was updated in the system. System automatically gave a result saying that on customer A, who spent how much time, on customer B, who spent how much time, or Dinesh Jain spent how much time. So all the data were automatically coming from the system. Now write time booking. Time booking. Time booking records the amount of time, records the amount of time spent by employee, amount of time spent by employee, amount of time spent by employee on every job, on every job, spent by employee on every job. Purpose to compute cost of job, measure efficiency, measure efficiency, identify idle time, in bracket normal and abnormal. Identify idle time, which can be normal as well as abnormal. The idle time part can be normal idle time or abnormal idle time. methods, job card, job card records time spent by different employees, time spent by different employees on specific job. Or job card for each employee. You can, I'm not sure if you have space for each job. This is for each job. For every job, you're going to do time spent by different employees on specific job, or it could be employee wise. This is very simple. Records time spent by an employee on different jobs. Where did he spend time? Where did the employee spend time? Or you have a job card where you note down different employees' time and then finally add them to get to know idle time and other things. Clear? Any doubts on this? So the point is, see, there is always at some stage a trust factor comes into picture. So this is not, I was not talking about a manufacturing kind of a setup. In a manufacturing setup, it is easy for to measure time. I was working as a part of a corporate office. Now, where am I spending time? My senior will have some idea, but exactly I spent 1 hour on this job, 1.5 hours on this job. It's very difficult for someone to monitor. And in a practical world, there's always a trust factor which needs to come into picture. So you will have to go by the belief. What are the procedures involved in payroll processing? Okay, this is what exactly you have been doing in every problem. First is attendance and time detail. Every question you've solved, there would have been one information saying how much time did an individual spend on different jobs, or how much time did he spend on a job. So they'll say 10 hours work, 20 hours work, 40 hours work, 60 hours work. So that's the first data you need. Once you get this data, attendance and time detail, this in a practical world will either come through the output of the punch card system or the output of the biometric system. Then bring the list of employees and other detail. In your case, there used to be one employee or maybe 2-3 employees in a problem. So every employee, you took the amount of time spent and then you started calculating basic wages, bonus, if any incentives are there, you were doing that. And you are deducting something called as PF contribution, ESI contribution. After deducting all of this, you paid the money to the employees, and balance whatever you deducted, your share, you deposit it to the EPFO or ESI. You are depositing this to the EPFO or ESI. Any problem we did over the last few questions we did, these 5 steps you were doing in a problem. You were gathering the attendance detail, the overtime problem, whichever overtime problem you did at home, you gathered the attendance detail, you got the list of employees, there were worker A, B and C. For them you calculated the wages and other incentive. You would not have subtracted PF and ESI because the data may not have been there, but you subtract that and then deposit that money to the other people and pay salary to your employees. Clear? Any doubts on this? Write this. Procedure in payroll processing. The kind of self-explanatory, nothing much for me to tell you. Exactly write the same thing. Attendance and time details. Attendance and time details. List of employees and other details. computation of wages and incentives, payment to employees, deposit to statutory authorities. I don't have technically much to explain here. Any doubts on this? Clear? What are the general deductions from payroll? I'm going to discuss it, but again, we have already done this in the problems. We have seen provident fund getting deducted, ESI getting deducted, tax deducted at source. This is more of an income tax deduction. You will learn about this more in income tax when you do. Professional tax is basically a tax which is levied mostly for at a state level for working individuals, not at factory level. I have not seen this at factory level. Voluntary contribution to provident fund. Some employees, there is a mandatory contribution. I may want to do something more, which is called voluntary contribution. Contribution to any benevolent fund, loan deduction, other advances. So if you have taken any loan from the organization, all those deductions will be done. There's no notes, nothing I'm going to give on this. What is idle time and its accounting treatment? Again, something which we have discussed it. Idle time is basically the time for which an employee is there in the organization but is not doing any productive work. He is not doing any productive work. Could be multiple reasons. It's a time which no production is carried out because the worker remains idle even though they are paid. Normal idle time and abnormal idle time. Some of the examples, this can come in MCQ. Okay, time lost between factory gate and place of work. You are at the factory gate and your office, the place where you're going to work is maybe has a distance of 100 meters or 200 meters. In a factory, that much distance can be there, so it will take you 5 minutes to reach that space. That time lost. Interval between one job to another. I did this class, I'm going to take another class. Obviously in between I'll have a 10 minutes gap or a 5 minutes gap before I start the other class. Setting up time for the machine. Before starting the class, I had to set up the laptop and get it ready. I'll spend some 5-10 minutes on that. That time is also normal. Normal fatigue. I cannot take class continuously for 8 hours. I need some gap in between. All these are normal idle time. This will be treated as part of cost of production. This will be treated as part of cost of production. Wherever you have direct workers, it is part of direct wages. For indirect workers, it is treated as factory overhead. Abnormal idle time is the idle time in addition to normal idle time due to certain abnormal factor. Lack of coordination. My class got over. I did not inform the other faculty. They were to start in 20 minutes. I did not give them any intimation, and they started the class after 15 minutes because I did not give the intimation that class got over. Unnecessarily we wasted time in between. That is a lack of coordination example. Power failure. We were taking classes, power has gone out, I cannot continue with the class, so that's one reason for your idle time. Breakdown of machine. The laptop has suddenly stopped working. Non-availability of raw material, strike, lockout, all these are abnormal idle time. Abnormal idle time is treated as part of, it's not treated as part of production cost, and this has to go to costing P&L. Clear? Any doubts on this? This can come as an MCQ, which is normal idle time, which is abnormal idle time. You will have to go by the logical way. Again, I'm not giving any notes on this. Okay, normal and abnormal idle time we have discussed. In case you want to make some notes, leave some space. Okay, because 13 is discussed, 14 is also discussed. What is overtime and explain its accounting treatment. In fact, I've given the notes on this also. Overtime is working beyond your normal working hours. The rate for overtime can be higher. Normally it is double the rate. more than 9 hours a day or more than 48 hours a week. Multiple reason where it is labor shortage, regularly inflated wage rate, where customer says I will bear the charges, charge to the customer. Sudden development has happened, I treat it as a overhead cost. Mistake of some department, that department has to make the payment. And abnormal conditions like earthquake, flood which has happened, charge it to costing P&L. You'll have to charge that to the costing P&L. These two questions are already discussed. Labor turnover methods to calculate is discussed. After that, maybe causes alone I may give some notes. What is labor turnover? Is rate of change in the workforce of a company. 5 methods, you've already written notes on this. Replacement method, replacement by average. Separation method, separation by average. Flux is replacement plus separation plus new recruitment. New recruitment is new recruitment by average. Accession method is new recruitment plus replacement by average workforce. What are the causes of labor turnover? We can write this. Broadly, they have classified into 3 causes. Personal causes, unavoidable causes and avoidable causes. According to me, there are only 2 classifications, unavoidable and avoidable. There's nothing like a personal cause and all. Okay. Personal causes, change of jobs for betterment, premature retirement, domestic problem, discontent over the job and working environment. Technically, most of the personal causes are avoidable causes. Most of the personal causes. Changes of job for betterment. Why an employee is leaving? Because he did not like the current job. He did not like the current job. I could have made it better for him so that he could have stayed with the company. Premature retirement. This is something which is like unavoidable. I can't do anything. If suddenly somebody wants domestic problems, again something we can't do anything. Discontent over the job. That is again problem of the company. Anything which is under the control of the company is called as a avoidable reason, which you could do better by giving some motivation. A lot of organizations do employee welfare activity, employee motivation activity. All that could be done. Unavoidable causes. Seasonal nature of business. My business is such that 6 months I need 1000 employees. 6 months I need only 100 employees. So seasonal nature of business, I don't have a choice. I will have to retrench employee, again recruit them. Shortage of raw material, power, slack demand. Demand is not there in the market, because of which I'm cutting down my employees. Our raw material is not there. Change in plant location. From Chennai, I'm moving to Bangalore. Obviously, labor turnover will happen. There is going to be change in the. These are kind of unavoidable costs. Company cannot do much here. Disability, making a worker unfit for worker. Disciplinary measures. Marriage can go to the personal cause also. I could have shifted that to the personal. That's why I said there's nothing like a personal cause. It's either unavoidable cause or avoidable cause. Avoidable cause, most of the personal causes can come here. Dissatisfaction with the job, remuneration or hours of work. We saw already discontent over the job. Both are same. Strained relationship with management, lack of training facility, lack of recreational facility, low wages and allowance. All these are reasons for avoidable causes which an organization can try to eliminate. Why should I reduce labor turnover? Because there's a cost to the labor turnover, which is the next one. Effect of labor turnover. When labor turnover happens, even flow of production is disturbed. My production was going in a smooth manner. Suddenly that flow got hampered because people are not there. Earlier, there was properly people who were there, who are well trained, they know what is to be done. Because some of the people are not aware of what needs to be done, the flow of production got hampered. Efficiency of the new worker is low. The new people who came, their efficiency is not good. If the efficiency is not good, cost will again go up. Increased cost of training. Why are you incurring cost of training? Because people went out. New workers cost, increased breakage and wastage. Cost of recruitment. We did one problem on cost of labor turnover. You would have seen all this cost there. You would have seen all of this cost, selection cost, training cost, recruitment cost. All this I'm incurring because of labor turnover. My objective should be to minimize the labor turnover as much as possible. What are the costs associated with labor turnover? Whatever labor turnover cost you said, there are broadly 2 categories. One is called prevention cost, second is called replacement cost. What is prevention cost is, I want to keep the labor turnover at a low level. How can I do it? I'm going to arrange for a employee offsite. What is employee offsite is, I'm going to take all my employees to maybe a resort for 2 days, kind of a welfare activity to just make the employees motivated. Many corporates do that. So I am incurring this expenditure to motivate my employees, just to give them a break from the normal routine, or I'm taking them for a lunch, a simple lunch I'm arranging for all my employees. So all these are done to ensure my labor turnover is at a low level. These are called prevention costs. Replacement cost is if labor turnover has happened, then be ready to incur recruitment costs, training costs, wastage, opportunity costs, all that are done. Sorry. What are the remedial steps to minimize labor turnover? That is, how can you have low labor turnover? Low labor turnover is possible if I have an employee force which is well motivated, which is having a lot of interest in coming to the organization and providing or doing their job. That can be done in multiple ways. For example, when I come to Bharadwaj Institute, I'm fully motivated because I like what I'm doing. So if an employee likes what he is doing, that can also lead to employee being motivated. I'm also very happy with my management here, the top management which is here. I'm very happy with them, so that also helps me. So exit interview, job analysis and evaluation, scientific system, enlightened attitude of management, use of committee. There are multiple ways of ensuring this. I'll be back in some 3-4 minutes. I want you to write summary notes for 16 to 19. You write it. 16 to 19, 15 is done. 16 to 19, write it. Hello. சொல்லுங்க. சொல்லுங்க. Hold, hold. Please write the summary notes. To keep writing whatever you write, that is fine. I'll write my summary notes, but I wanted you to write it. I've written my summary. I've written very simple. You should have written your summary. Any doubts? I don't want you to copy my summary, whatever way you want to write it. A summary note should ideally be for you rather than copying my answer. Done? Can you proceed? There's nothing for you to copy from the screen. Ideally, you should write on your own. It's just summary notes. This is, you will have to get into the habit of writing this not only for my subject, for all other subject you need summary notes. Theory paper as well as practical paper do make summary notes. It becomes easier for you to revise. If I tell you to revise any chapter now, it will become easier for you to revise with these notes. Notes along with MCQs. MCQs will test most of the concept. Notes along with MCQ itself is sufficient. The problems which I do and all, even if you don't revise also, you will have clarity. Some problems for practice you may refer it, but notes along with MCQ itself is a very good combination. Any doubts? Can you proceed? Done. Next one is already discussed. Nothing I'm going to write. I'm not going to write any notes for, I think, the next few questions. Different systems of wage payment: time rate system, time taken into rate per hour; piece rate system, units produced into rate per unit; Halsey premium system, time taken into rate per hour plus 50% of time saved into rate per hour; Halsey where, time taken into rate per hour plus 30% of time saved into rate per hour; row 1, actual time by standard time into time saved into rate per hour. Some extra information on Halsey premium system and row 1 premium system. Under Halsey premium system, a standard time is fixed for each job or process. No saving on this time. Worker is paid only his day rate. If he saves something, he is going to be get bonus of 50%. So as an employee, I'm very happy because my basic wages is guaranteed. The basic wage part is guaranteed. Time rate is guaranteed. While there's an opportunity for increasing the earnings, I can increase my earnings by increasing the production. System is equitable because both get 50-50 saving. Incentive is not as strong as with piece rate system. In piece rate system, what happens is, if you produce more, your wages will automatically go up in the same proportion. Technically, piece rate system has something called as 100% bonus. Piece rate system technically has 100% bonus. The sharing principle may not be like that. 50-50 principle, I don't want this 50-50 principle. You give me the entire bonus. Why do you want to take 50%? In row 1, this is more better because employees cannot now work at a very faster pace just to increase their earnings. That is not possible, because if you do that, what will happen ultimately is your earnings is going to go down, because AT by ST is the bonus. Foolproof system in a worker can never double his earnings even if there is a bad rate setting. If you have not set the right correct, that the rate was not set correctly, this was one of the theoretical question which was to be done. It is suitable for encouraging moderately efficient workers. Sharing principle appeals to the employer. Bit complicated. Incentive is weak at high production level where the time saved is more than 50%. If you save more than 50%, your bonus will only go down. And saving more than 50% technically indicates some problem. If you're saving more than 50%, it technically indicates there is some issue in the company. Otherwise, saving more than 50% is not logically possible. Group bonus, again, kind of discussed it. Group bonus, we did few problem. Group bonus refers to the bonus paid for the collective efforts made by a group of worker. How will this be distributed? Some basis will be there. For example, if 10 employees are there, I'll distribute exactly equal for all 10 employees. Or distribute on the basis of hours worked, distribute on the basis of wages paid. Some basis can be there where I pay a bonus to the entire group and then you do the distribution. Accounting treatment of item related to wages. I'll write a note on this as we discuss it. First one is wages. Wages comprise various components, namely basic wages, dearness allowance, overtime allowance, sorry, production bonus, PF and ESA contribution, among others. Wage cost per hour is equal to total wage cost divided by effective working hours, not number of hours. It is effective working hours. What is effective working hours? Is total hours minus the normal hours lost. You can deduct the normal hours. You should not deduct the abnormal hours. Holiday wages. What is holiday wages? Is I have to pay salary even if an employee is not working, even if an employee is not, is not even coming to the factory, even if an employee is not coming to the factory. This is what we were doing. Whatever you are paying, it is part of my wage cost, and I was dividing by lesser hours. I was dividing by, for example, 28,000 is paid. If you divide by 20 days, it's 1,400. But you'll not divide by 20, you'll divide by 18. Because you're giving 2 days leave. You're giving 2 days leave. 28,000 by 18 is how much? 28,000 divided by 18 is how much? So in costing, 1400 will get inflated to 1555. 1400 will get inflated to 1555. And other thing is, if you are paying, this can also be treated as overheads. There are two choices. Treating it as overheads. We have not been treating it as overheads. We have been treating only it as part of the normal wages, reducing the number of hours, automatically the cost per hour got inflated. Now right, treatment of wages. Wage cost per hour is equal to total wage cost including incentives divided by effective working hours. Divide by effective working hours. Effective working hours is equal to total hours minus normal idle time. Total hours minus normal idle time. Holiday wages. Holiday wages. Option 1, treat holiday wages as an overhead. Option 2, this is what we have done in every problem. Include holiday wages as part of labor cost. Include holiday wages as part of labor cost and inflate the cost per hour. Inflate the cost per hour. In my denominator, if number of hours go down, automatically the cost per hour goes up. In your denominator, if number of hours is reduced, automatically the cost per hour or cost per day is going to get increased. Night shift allowance. Treat the same as an overhead. Listen, this also technically I can take it as part of wages also. So the ICI material says this. Your labor cost includes everything which is paid to employee, which can be even night shift allowance. Yep. Can you proceed? Last one is again a question which is already discussed. We'll write a small note on this. What is direct expenses? Expenses which can be directly and economically identified with the end product, which are not direct material and direct labor, expenses other than direct material and direct labor, which can be directly traced in an economically feasible manner. Example, royalty, higher charges, cost of product or service specific design, anything specific to a product or a service. Direct expenses are measured at invoice or agreed price net of rebate or discount, but includes duties, commission and other directly attributable costs. When we did your direct material, the term direct material does not only include the basic price, it included certain other expenses. Similarly, they are saying direct expense will not only have the invoice price. After invoice price, if you have any discount, deduct it. If you have to pay any extra duty, consider that. If you have to pay any commission, consider that. If you have to incur any other expenses, consider that. It's very simple. There's nothing new here. This is what you did in direct material. Direct expense form part of the prime cost for the product or service for which it can be directly traceable. In case of a lump sum payment means one-time payment. They're saying you'll have to distribute this over the production volume. We had one problem where in molds and patterns there was an expense given and we amortized it over 2 years. The question said amortized cost of molds and pattern. Our molds and pattern, they said life is so much. So we had to distribute that at over a period of 2 years. If the expenses are of insignificant amount, same can be treated as part of overhead. This is where I said in practical world, lot of times you will see certain items going to factory overhead, because if amount is insignificant, I don't want to break my head and bring it under direct material, direct expense. I'll directly, in fact, even for material, example, that thread in the making of a shirt, it is a direct, it's a material, but I don't want to take it as direct material. I'm taking it as indirect material and proceeding ahead. So a lot of times if it's insignificant in nature, I'll take it as part of overhead cost. I don't want to take it as part of the direct cost. Just take it as part of the overhead and close it there. All right, direct expense. Costs other than direct material, labor, other than direct material, direct labor, which can be directly and economically identified with the unit of production. If the amount is insignificant, then the same can be treated as overhead. If you want, you can bring down all those examples which are there to this place, whatever examples you wrote in cost sheet chapter, so that when you do a problem on direct expense, you are doing proper classification. Or copy the examples in this question, whatever is there in the question, royalty, higher charges. Apart from this, there can be extra examples also, like power and fuel is one example. Let me add power and fuel. Job charges. You can add more example. Power and fuel, job charges paid to job workers, royalty, higher charges, product or service specific design or drawing. Clear? Any doubts on this? Done? Okay. I'll take a break of 5 minutes and then start with the fresh chapter. Again, I think chapter 1, 2, 3, 4, this predominantly covers major chunk of the theory. Next chapter onwards, the theory questions will be very limited. This is another chapter where I have good number of theory questions. As we have been doing, I'll discuss the question and then give you the note. The first question is very simple. What is the overhead cost? Overhead cost is nothing but those costs which cannot be directly and economically identified with the end product, or which cannot be traced with the end product. You cannot identify this with the product directly. In short, it is the sum of indirect material, indirect labor and Indirect expenses are technically all indirect cost, which can also be called as production overhead, administration overhead, and selling and distribution overhead. We have multiple ways of classifying it. Let's So overheads are the expenditure which cannot be conveniently traced or identified with any particular cost unit, incurred for output generally and not for any particular work order, which have been incurred in providing certain ancillary services or services which facilitate the production process. Storekeeping. The storekeeper has to give raw material to the production guy. So he is helping the production guy, but he is not doing the production. His expense will go to factory overhead. His expense will go to factory overhead. Inspection. He is not doing any manufacturing. He is doing the assistance work. So his expenses will also go to your factory overhead, depending on whether he's in the factory related cost or admin related cost or your sales related cost. Now, right in your theory part. Theory areas. Overhead cost. Overhead cost. Overhead cost are those which are generally incurred and cannot be traced to a product slash job order. What is job order? Is customer is giving an order. Customer is giving an order. If you're going to specifically incur for that order of the customer, please charge it to that customer in the form of direct expenses. You will charge it directly to that customer in the form of direct expenses or direct material or direct labor, depending on the nature. But certain expenses which cannot be directly traced become overhead cost, which cannot be traced to a product or a job order. Just add a word, cannot be traced directly to a product or a job order. Cannot be traced directly to a product or a job order. Next thing, what are the various classification of overhead? That is, how can you distribute the, or how can you classify the overheads? There are multiple classification. I'll discuss them. Some of them you're aware, some of them could be new way of classifying. First is by function. This is what we have been doing in cost sheet. In our entire cost sheet area, we have been following functional classification of overheads. That is factory overheads, administration overheads, and selling and distribution overheads. What is factory overhead? I'm not going to explain now. What is admin overhead? I'm not explaining. What is selling and distribution? All that is known to us. The second way of classifying is fixed, variable, and semi-variable. This also you know. Fixed, variable, and semi-variable is also known to you. Third classification is when you do direct cost. When I did initially the cost classification cost sheet, I said cost can be classified as direct, indirect. Direct, we had a second classification called direct material, direct labor, direct expense. Indirect also you can do indirect material, indirect labor, indirect expense. Indirect material refers to the physical thing which goes into the making of a product. Indirect labor refers to the people who are the reward to your workforce, and indirect expenses are residuary category. Then the fourth classification is controllable cost and uncontrollable cost. Now, what is controllable cost and uncontrollable cost is there are certain expenses which can be controlled by doing a managerial action. What is managerial action? Is management can try to control that cost. Uncontrollable cost are those which cannot be reduced. Example, rent is an expenditure which Bharadwaj Institute can't do much about it. Even if you want to do something, rent cannot be reduced because rent is a fixed uncontrollable cost for us. Whereas other expenses like maybe printing and stationery, I can try to bring it down. I can try to bring down printing and stationery expenses by taking certain action. But rent, which is more of a fixed cost in nature, will go to the category of uncontrollable cost. Next, classification of overheads. Classification of overheads. Classification 1. Classification 1. Functional classification. Classification 1. Functional classification. Functional classification. Hyphen. We have factory overheads. There are different name for factory overheads. I'm not giving all that name. Okay, factory can be called production, manufacturing, works, different names are there. Factory overheads. Second is administrative overhead, and third is selling and distribution overheads. This is the first classification, which is functional classification. Factory admin and selling and distribution. Factory admin and selling and distribution. Classification 2. Classification 2. Based on nature or behavior. You can give two names. This is also called behavioral classification. Based on nature / behavior. Variable overheads, fixed overheads, and semi-variable overheads. Based on nature / behavior, variable, fixed, and semi-variable. That's the second classification. Classification 3. Classification 3. Based on, I think, element, which is indirect material, indirect labor, and indirect expenses. Based on element, indirect material, indirect labor, and indirect expenses. Classification 4. Classification 4, which is based on controllability. We've already seen this in the cost classification originally. When I explained the first chapter, there was a category in the first chapter itself. We have written this categorization based on normality, based on controllability, controllable cost and uncontrollable cost. This classification is already written there. They've repeated this classification here, and this classification was already written there. That is based on variability or behavior, which is fixed cost, variable cost, and semi-variable. So the same classification is repeated here. So based on controllability, controllable cost, and non-controllable cost. Controllable and non-controllable. Let's go to the next one. What are the advantages of classifying overheads into fixed and variable? That is, why should I know what is a fixed expense and what is a variable expense? So I'll read out the points which are there. But for example, if Bharadwaj Institute is doing their planning exercise, if we don't know how much is fixed and how much is variable, we'll go wrong in our estimation. Because what can happen is, if number of students increase for us, let's assume we are deciding whether to reduce fees by 10%, so that number of students increase. In this calculation, if I don't have this classification of cost properly, because fixed cost will not increase, even if more students are going to come, the fixed cost is going to remain same. Variable cost is going to proportionately increase. So that classification, if you don't have, you will end up making a wrong decision. You will end up taking a wrong decision. So it's very critical that we have clarity on what is the breakup. What is the breakup? If that clarity is not there, it will lead to a lot of irregular or incorrect estimation. So first is controlling expenses. What is controlling expenses? Is we saw controllable and non-controllable, where I clearly told you that controllable costs are those which are more like variable in nature. Uncontrollable costs are those which are more of fixed in nature. So variable and fixed helps in controlling. Fixed expenses are generally unavoidable, cannot be controlled. Variable expenses are generally avoidable and can be controlled. Preparation of budget estimate. I want to prepare my budget for the next year. If I have to prepare the budget for the next year, if this breakup is not there, I will end up wrong estimating. I'll end up estimating the expenses incorrect, and because of that, you will end up taking a wrong decision like price to be charged. I gave you an example that I want to reduce fees. I want to reduce fees. Reason for reducing fees is my profit is not going to go down. My profit will still be there. But why am I reducing the fees? Because more students mean my cost per student goes down. Cost per student goes down because we have more of fixed cost and less of variable cost. So if that breakup is not known, you will end up taking a wrong decision. Next, advantages of classifying. Classifying overheads into fixed and variable. Advantages of classifying overheads into fixed and variable. Into fixed and variable. The first advantage which we are going to have is on the controllability. Controlling cost. Fixed costs are generally uncontrollable, and variable costs are generally controllable. Next is, first is related to your controlling cost. Budget estimation. Accurate budgets will need proper classification of We'll need proper classification of variable and fixed costs. If you want accurate budget, you need this breakup properly. Accurate budgets can be prepared only if this breakup is there. If the breakup is not there, budgets will become inaccurate. So for accurate budgets, I need proper classification of variable and fixed cost. Decision making. Some of the decision, price to be charged. This is an example I told you. Shutdown analysis. You will understand about this in marginal costing. Shutdown analysis. Selection of alternative. You learn about all this in marginal costing. Clear? Can you proceed? Okay, question 4 is already discussed by us. I'm just going to quickly read it. I've already given the notes also for this. When I initially started with this chapter, I gave you basic notes to start the chapter. What is primary overhead distribution? What is secondary overhead distribution? This is what is going to come here. Cost center, location, machinery, individual or department for which cost is to be calculated. We have seen this in chapter 1. Apportionment means you are distributing the cost. Allocation means the entire amount will go to one department. The entire amount will go to one department. Apportionment means you are distributing it between production or among the various production and service department. Allocation means just giving it to one department. When I gave the theory, I would have mentioned about this using either allocation or apportionment. Allocation means entire amount is going to one department. Apportionment means it is getting distributed to the various. Primary overhead distribution is distributing the cost to distributing the cost to the production and the service department using a technique of either allocation or apportionment. Secondary means from the service department it has to go to the production department using no way service, one way service and two way service situation. Profit center is center which is generating revenues or profits for the company. Cost driver, what is cost driver is, again these are terms which I've learnt in chapter 1. Cost driver is basically something which is influencing a cost to take place. Rent, the cost driver is area square feet. Depreciation, the cost driver is value of machinery. So what is the cost driver for various expenses? Absorption means it is a process by which the overheads of the production department are absorbed to the end product using some suitable basis. We have learnt about 6 suitable basis: percentage of prime cost, material cost, labor cost, or machine hour rate method, labor hour rate method, or number of units. So we have seen 6 different methods. I'm not giving any notes on question 4. Okay, I'll give note on allocation versus apportionment, but technically this is also done. I've explained it, but I'll just give a line note. Allocation deals with the whole item of cost which are identifiable with one department. Apportionment deals with proportion of an item of cost. You are going to distribute the cost to the various department. This is a direct process of charging. This is a indirect process because you will distribute later on. From service it will go to production. In allocation it may directly go to a production department or to a service department depending on who is using that service, whoever is utilizing that service in the theory part. Allocation and apportionment. Allocation and apportionment. Allocation would mean allotting allotting the whole item of cost, allotting the whole item of cost to a cost center or profit center, allotting the whole item of cost to a cost center or profit center. To a cost center or profit center. Apportionment would mean distribution of expenses to various cost centers, so to various production department and service department, or you can even use the word cost center and profit center. Profit center is a production department, cost center is a service department. Using suitable cost driver, we'll have to consider some suitable cost driver and then do the distribution of expenses. Some suitable cost driver needs to be considered, and using that you will distribute the expenses. Any doubts on this? Clear? Can you proceed? Question 6 is already written in the theory part, already written in your notebook. Step 1 primary overhead, step 2 secondary overhead, step 3 computation of OAR, and step 4 is cost of various jobs. So 6 is done. 7 is also done. I had discussed this when I was discussing the theory part, or when I was doing the primary overhead distribution. 8 was discussed when we did secondary overhead distribution. 9, I'll now quickly discuss 9, 10, 11, 12. I think all are theory question. I've already given notes for this when I gave the various steps. What are the methods for reapportionment of overhead? So in your notebook you would have written at this place, methods for secondary overhead distribution. Situation 1, no service direct distribution method. Situation 2, one-way service step ladder method. You just listen, no need to look at in your notebook and all. Situation 3, two-way service, repeated distribution, simultaneous equation, and trial and error method. Basic thing is you have already written the note. I just wanted you to show this so that you have the confidence that notes are already written. I'm not going to give you notes again for this. So we have 3 methods. How does direct distribution method work? Again, the notes are there. Under this method, the cost of service department is transferred only to production department, does not transfer among service department. Sequence is not important. This is what you will see here. This method is used when one service department does not serve the another service department. Cost of service department including its direct cost is distributed to the various production. The sequence in which distribution is taken up is not relevant. Then you saw step down method or non-reciprocal method or step ladder method, where sequence of distribution is important and the same is identified using the below rules. Follow the sequence given in the question. If it's not given, go by the number of other service departments served by each department. If that is also has a tie, then you go with percentage of service provided or amount of service provided. In that the preference is percentage of service provided. Sequence is very, very critical. Once you have distributed the expenses of one service department, there is no transfer back to that service department. It's kind of, the theory is kind of revising what we did. So this is used when one service department serves another service department, in turn not served. Sequence is important. Service department which has served the maximum number of service department is taken up first for distribution. In case there is a tie, go with percentage of service. Once the cost has been served out, there will be no service back. Simultaneous equation method, repeated distribution method, trial and error method, all these I have already given you the notes. I am not repeating the notes for this. So here you have written the notes for repeated distribution. SD1 will transfer to SD2, SD2 will transfer to SD1. Again transfer will happen, again transfer. At some stage both will become insignificant. simultaneous equation, you have to form an equation where x is equal to overhead of the department, direct cost of the department, and any transfer you get from the other department. Y is equal to overhead of the department, direct cost of the department, any transfer you get from the other department. Solve x and y and you will get to the amount to be distributed. Trial and error method does a series of repeated distribution, but what we are doing is we are doing only distribution among the service department. Under this method we should get zero value for both service department. Distributable amount would be computed by doing a series of repeated distribution between SD1 and SD2. We are not going to bring other departments into picture. Okay, what are the various methods of absorbing overheads to various product? Again, the notes are already given for this. When I say notes are given, we have written here. Value based method, direct material cost, direct labor cost and prime cost. Volume based method, direct labor hours, machine hours and output produced. So if notes are needed, I'll give you, but this also notes is already written by us. The method selected for charging overhead should ensure the following, that is, whatever method I am following, I should have less under or over absorption. That is, overhead recovered should not be materially different from overhead incurred. Basically, I want less under absorption or over absorption. I don't want to recover anything. I don't want to recover extra. I don't want to recover less. Method is percentage of direct material, direct labor, prime cost, labor hour rate, machine hour rate, rate per unit of output. Explain machine hour rate method in detail. Again, it is already discussed when we have written it. In fact, machine hour rate is the most popular method of absorbing overheads. Same is calculated with the help of following formula. Budgeted overheads by effective machine hour. Step 1, compute budgeted overheads related to the machine. Step 2, compute effective machine hour. Compute machine hour rate. Variance of machine hour rate method. Maybe I'll give a note on this alone. This I've explained in the theory part, but I'll give a note. Direct machine hour rate method. Under this method, only the expenses directly or immediately connected with the machine is taken into account. Whatever problem we have solved, we have only followed comprehensive machine hour rate. What is direct machine hour rate method? Is only expenses which are directly related to the machine. Don't distribute rent to it. Don't distribute electricity expenses to it. What is comprehensive machine hour rate method is, you have certain other expenses like supervision, shop cleaning, lighting, consumables, supply, labor, rent, all this also you will have to include in the MHR computation, which is what we have been doing. We have followed only a comprehensive machine hour rate method. We in fact went ahead and included wages paid to the machine operator. Direct machine hour rate method is where only the direct expenses related to the operating of the machine. No distributing rent, no distributing electricity. If machine is running, I am going to incur 500 rupees for some material which is to be used, or some consumable, some oil has to be added. Electricity directly measured. 1 hour it is operating, 10 units of electricity is consumed, which can be directly traced. No indirect tracing saying that you want to distribute on the basis of area, square feet, distribute on the basis of value of machinery. All that is not needed. Directly, if you can find, only those expenses have to be considered. Now write in your notebook. Variance of machine hour rate method. Variance of machine hour rate method. Variance of machine hour rate method. Direct machine hour rate method. Direct machine hour rate method. Under this method, only the direct expenses related to the direct cost, not expenses, direct cost related to the operating of the machine, is considered for computing machine hour rate. for computing machine hour rate. Comprehensive machine hour rate method. Comprehensive machine hour rate method. Under this method, all costs, direct as well as indirect, are considered for computing MHR. Considered for computing MHR. We have followed this method for all problem solving. Just for your understanding, comprehensive machine hour rate method is what have been used for all problems. Clear? Any doubts on this? So we have a direct machine hour rate method and we have a comprehensive machine hour rate method. Preferable is comprehensive because it is going to consider all expenses in relation to the machine for computation. Multiple machine hour rate method is also discussed in the theory part and notes are also given for that. I'll anyway again discuss it. A comprehensive machine hour rate includes the cost of wages attributable to the working of the machine. When a machine performs two different operations in respect of which costs are consumed differently, each operation will have a different machine hour rate. Example, a printer can either do color or black and white printing. So we said compute common cost, compute specific cost, compute specific hours, compute common hours. What is common cost is? Common cost per hour is common cost by common hours. Specific cost per hour is specific cost by specific hours. And ultimately what you are going to do is MHR is equal to common cost per hour plus specific cost per hour. Now I'll give a note on this now. What are the different types of overhead rate? That is that overhead absorption rate. You use a formula for overhead absorption rate is budgeted overheads by budgeted suitable base. That is called predetermined rate. That is called predetermined. Instead of budgeted overhead, if you use actual overheads by actual suitable base, that is normal rate or the actual rate. That is the normal rate or the actual rate. Obviously, I cannot know this unless the end of year happens. So normal rate is something which will get to know only at the end of the year. This budgeted overheads by budgeted suitable base formula, if you use for entire Bharadwaj Institute a single rate, that is called blanket rate. If you calculate separately for CA Inter, separately for CA Foundation, separately for CA Final, CMA Inter, then that is called departmental overhead rate. That is called departmental overhead rate. You can calculate department wise, you can also calculate factory as a whole. Departmental wise is better because it can give you more clarity on expenses and better controlling can happen. There was one theory question in one of the problems, the segment was added, why blanket rate or departmental rate, which is better. But if you want departmental rate, you need to capture a lot of expenses, lot of additional information needs to be captured, so it is costly to maintain a department wise rates. It is going to be on the costlier side. Now right, different types of overhead rate. Different types of overhead rate. First, right, blanket overhead rate. Blanket overhead rate. Single OAR. Single OAR for the entire company. Single overhead absorption rate for the entire company. departmental overhead rate, departmental overhead rate, departmental overhead multiple or different OAR for every department, different OAR for every department, different overhead absorption rate for every department. Actual rate slash normal rate, actual rate slash normal rate, which is actual overhead by actual suitable base, actual overhead by actual suitable base. Actual overhead by actual suitable base. And predetermined recovery rate. Predetermined recovery rate, this is what you have been calculating in every question. Budgeted overheads by budgeted suitable base. The actual rate as well as the predetermined recovery rate can be computed for the factory or can be computed department wise. So an organization can have blanket actual rate, blanket predetermined rate, departmental actual rate, departmental predetermined rate. Clear? Any doubts on this? Treatment of under or over absorption already written in the notes. I'm going to again discuss it. So when I did under or over absorption treatment, I had explained you that you'll have to identify first the under or over absorption. I've given you the notes for under absorption. Over absorption, the opposite entry needs to be passed. Profit will improve. In exam, an over absorption question can come. So just because I've not discussed an over absorption doesn't mean it cannot get tested in exam. So here what happens is you calculate the predetermined rate at the beginning of the year. Actual rate is determined at the end of the year. There is obviously a difference which is possible, which leads to under recovery or over recovery. This under or over recovery can be because of normal reason. First you will have to find whether it is a small amount or a big amount. Small amount, let's ignore and proceed it. Let's ignore and transfer it to costing P&L. If it's a material amount, understand normal reason, abnormal reason. Normal reason use supplementary recovery rate. Abnormal reason transfer to costing P&L. When the under or over absorption is very small, transfer the entire amount to costing P&L. When it is due to abnormal reason, when it is due to abnormal reason, transfer the entire amount to costing P&L. When it is due to normal reason, when it's due to normal reason, amount of normal under absorption divided by units produced including WIP. Theoretically, we also have another method which I did not discuss in the class. What that method says is whatever under or over absorption happens, you take that to the next year. You take it to the next year and add that expenditure in the next year expense. Add that amount in the next year expense. Basically, what I am going to do is I am not going to write it off to costing P&L. I will carry it forward to the next year and try to recover from the next year customer, which is not a good way of doing it, but that's also one which is possible. Okay. Next, accounting treatment of admin overhead. I'll start explaining it. You just go through it. Just give me a minute. You go through what is there. Okay, as you would be aware of what is administration overheads. Administration overheads are those expenses which are not related to manufacturing, which is also not related to selling and marketing. Now, there are two, three ways of treating administration overhead. One way of treating administration overhead is, which we have been doing in cost sheet. Administrative overhead relating to production goes to the one category, and second category is whatever admin overhead is related to selling, you add it to selling. It's not exactly what you do in cost sheet, but here administration overheads does not exist. The admin overhead will either be called as a factory overhead, or it will be called as a selling and distribution overhead, depending on the nature of it. If it's more towards manufacturing, you will call it as production overhead, and if it's more related to sales, you will call it as selling and distribution. Apportion the admin overhead to the production and sales department. In this method, admin overhead loses its identity and the same gets merged either with the production overheads or selling overheads. Second option is charging it to costing P&L. What they are saying is, let's ignore this concept of admin overhead. This is a fixed expense, so you need not consider in the cost calculation itself. What you can do is, when you fix your price, this is what many shopkeepers will do. Let's assume they have bought a product for 10 rupees, they'll sell it at 15 rupees. If you ask them, they'll say 5 rupees is my profit and for recovering all common expenses. They will not separately add common expense to every product. It is very difficult to add common expense to every product. So in my profit margin, I will say I will recover the admin or whatever I'm recovering. And this is what you will learn in marginal costing, where what we do is from sales we deduct variable cost. You get contribution. This amount is called contribution because it contributes towards recovery of all fixed expenses and contribute towards profit of the company. Third is showing it as a separate line item in the cost sheet, which is what we have been doing in the cost sheet chapter, where we used to in fact write it as two separate items, not one item. One item will go to administrative overhead relating to production, which is considered in cost of production calculation, and one item used to go as general and administrative overhead, which used to go to cost of sales. Now, right, accounting treatment of admin overheads. Accounting treatment of admin overheads. Option 1, accounting treatment of admin overheads. Option 1, distribute admin overheads, distribute admin overheads to production activity, admin overheads to production activity, in bracket production overhead, and sales activity, selling overhead, and sales activity, selling overhead. Option 2, transfer entire admin overhead, transfer entire admin overhead to costing P&L. Practical world, nobody follows this. Basically, in your cost per unit calculation, admin overhead is ignored in this method. We are ignoring the admin overheads in the cost calculation. Option 3, show us a separate line item in cost sheet. Separate line item in cost sheet for computing cost of production slash cost of sales. When you compute cost of production and cost of sales, please show it as a separate line item. Separate line item for computing cost of production and cost of sales. Cost of production and cost of sales. Clear? Any doubts on this? Done? What are the ways to control administrative overhead? Again, kind of theoretical discussion we are going to do. See, any fixed expense or anything which cannot be traced properly to a cost or a product, normally that is controlled through a budget. What is through a budget is, at my home there is a budget which is given for various expenses. I will compare my actual expenses vis-a-vis the budget and ensure that there is no deviation which is happening. And ideally deviation should not happen for fixed expenses. Ideally, for example, for rent I have a budget of 15,000. You know how much rent you are going to pay. Ideally there should not be a deviation. Some of the fixed expense, some of the administrative overhead, what can happen is there can be a variable element. There can be something which suddenly comes up, because of which expenses can even go above. But normally the best way of controlling it is having a budget system. If you have put a budget, you should not exceed that budget level. Admin overhead are generally fixed in nature and hence are non-controllable. However, we cannot allow admin overhead to increase disproportionately. How can you control? By doing budgets. That is what is everything. If you see, classification analysis of overheads by administrative according to their function, and a comparison with the accomplished result, and a comparison with the results. Control through budgets, control through standard. I'm going to put a target and I'll see how much you are going against the target. If you're spending more than the target, there's a difference between the term budget and standard. You will learn that in standard costing. There's a small difference between these two terms. You learn there, but basic thing is I'm going to control it through preparing a budget system at the beginning of the year. Now, right, controlling administrative overhead. Controlling admin overhead. Controlling admin overhead. Most of the admin overheads are fixed in nature. Most of the admin overheads are fixed in nature. Fixed in nature, and hence non-controllable. Fixed in nature and hence non-controllable. Admin overheads can be controlled through a system of budgets, in bracket budgetary control. That's the technical name. You learn this in the last chapter. Budgetary control. I'm going to prepare a budget, and against that budget I'll measure the actual performance and see how much deviation is happening. That's the way to control the expenses. Any doubts on this? Clear? Next is they are talking about selling and distribution overheads and the way to control the selling and distribution. Like we had administrative overhead, we are discussing on selling and distribution overhead. Accounting treatment. Selling expenses are those expenses which are incurred for the purpose of promoting and marketing. Distribution expenses are those that are related to the delivery and dispatch of goods. Selling overheads are to be apportioned. Apportioned is distributed to the various product. On what basis can I distribute? The best basis is per unit so much is the expense, or percentage of selling price. Percentage of selling price, that is such as unit sold, value of sales, number of salesmen. It's basically unit sold or value of sales. For Bharadwaj Institute wants to distribute selling expenses, they can distribute on the basis of number of students, or they can distribute on the basis of revenue which students are bringing in, revenue which the students are bringing to us. That could be the way to distribute the expense to CA Inter, CA Final. because more revenue means more marketing would have been done for that. Less revenue means less marketing. That's a logical discussion. Practical world, there are few products which may not need that much marketing. How are you going to control? Again, the same thing. I'm going to control it through budgetary control. I'm going to control it through the budgetary control. Now, right. Selling and distribution overheads. Selling and distribution overheads. Selling and distribution overhead. Selling and distribution overhead can be apportioned to the products, on the basis of units sold or percentage of revenues, on the basis of units sold / percentage of revenues, units sold or percentage of revenues. Again, selling overheads can be controlled through a system of budgetary control. We'll have to go through a system of budgetary control. That's how I can cut down this expenses. I can pull down this expense through a system of budgetary control. Clear? Any doubts on this? Done? We have discussed what are the different forms of capacity. I've given notes on that. There is something extra here, that alone I'll explain. Installed capacity or rated capacity. I think this is what you had written earlier. Maximum or installed or rated capacity. Maximum capacity assuming no idle time or breakdown or holiday. Practical capacity post considering all of this. Normal capacity based on expected sales. Actual capacity actually used during the period. There is some extra analysis which is called idle capacity. What is that idle capacity? I'll discuss. Installed or rated capacity, maximum capacity of producing goods or services. It is also known as theoretical capacity, as the same cannot be achieved. Practical takes into loss of time due to repairs, maintenance, minor breakdown. Normal capacity is the volume of production achieved or achievable based on expected sales. Actual capacity is the capacity actually lost during a given period. Now, let's understand that maximum capacity is 1 lakh unit. But my normal capacity is only 75,000. The gap between this is called normal idle capacity. The gap between this is called normal idle capacity. 1 lakh is not possible. How can you do 1 lakh if you don't give any leave? If you cut down on maintenance, then only you can achieve 1 lakh. But it's a known fact 1 lakh will become 75,000. In actual, you did 65,000. This gap is called abnormal idle capacity. There is a normal idle capacity which is going to be there, but there's an extra abnormal idle capacity which has happened. What reason? I don't know. Normal idle capacity is because in 1 lakh I didn't want to achieve 1 lakh. I wanted to achieve only 75,000. So what is the use of this analysis is, let's assume for the machinery we are going to incur 40 lakh rupees. Assuming everything is fixed in nature. Just assume everything is fixed. If you were to do full capacity, cost is 40 per hour. 40 lakh divided by 1 lakh. But if you do only 75, your cost is 53.33. And if you do 65, cost becomes 61.54. Now, as an organization, you can recover only 53.33 33 from the customer. Just because you have not used the capacity, you cannot penalize the end customer. The room can accommodate 20 students, so I should try to get 20 students. If I'm getting less student, I cannot tell the existing students to pay more fees. So if you're wasting capacity, that has a cost attached with, there is a cost attached to this. So you have idle capacity which cannot be utilized. You cannot utilize the idle capacity, that's okay. Normal idle is difference between the installed capacity and normal capacity. This is going to happen, unavoidable. This is going to happen, unavoidable, and I don't want to avoid this also. Abnormal is difference between the normal capacity and the actual capacity. Now what is the accounting treatment? This idle, that is 75 to 65, happened because of some unavoidable reason like repairs and maintenance, changeover of job. If that happens, go to the customer and tell them to pay extra 8 rupees, 53.33 vis-a-vis 61.54. I will tell my customers to pay extra. I'll tell my customers to pay extra because cost has gone up. If you've already sold the units, forget it. If you're yet to sell it, you can recover extra from your customer. Use supplementary overhead rate to recover the idle capacity cost. Unavoidable reason like, sorry, not unavoidable, due to, just give me a minute. This is avoidable reason. This is avoidable reason. This could have been avoided. This could have been avoided, such as faulty planning, power failure. All this could have been avoided by the organization. Transfer it to costing P&L. Transfer this to costing P&L. Then seasonal factor. What is seasonal factor is, I have 1 lakh capacity. First 6 months, machine will work only at the rate of 20%. Why it will not work more? Because the raw material which I need is not available during that season, is not available. There are certain, for example, sugar cane company. These sugar manufacturing companies will work at a rapid pace during sugar season. Non-sugar season they cannot operate because sugar cane, moment it is harvested, you will have to extract sugar from it within specified time. Otherwise the sugar content will keep going down. So what normally companies will do is, during the sugar season they will operate 2 shift, 3 shift. During non-sugar season they will not operate. That is a known fact. So what they are saying is, if that's going to happen, you inflate the overhead rate. You do the inflating of the overhead rate. This is what we had done when we are doing treatment of overtime premium. If you remember, in overtime premium, if you do overtime as a policy, you will inflate the wage rate. Here also we will inflate the overhead recovery rate. Now write, only thing you will have to write is idle capacity cost. The other capacity is not needed. Idle capacity idle capacity equal to capacity not utilized by the company. Capacity not utilized by the company. Capacity not utilized by the company. Bharadwaj Institute also is not utilizing the full rooms available. We have some space available that is not utilized by the company. There are 2 reasons. Normal idle capacity cost or normal idle capacity, maximum capacity minus practical capacity. Maximum minus, sorry, not practical, normal, maximum minus normal. Normal is what you wanted to achieve. Maximum minus normal. Abnormal idle capacity, normal capacity minus actual capacity. Normal capacity minus actual capacity. Maximum minus normal, normal minus actual. Accounting treatment. Accounting treatment of idle capacity cost. Accounting treatment of idle capacity cost. idle capacity due to unavoidable reasons. Unavoidable reasons. Use supplementary recovery rate. Use supplementary recovery rate. Unavoidable is other words is normal reason. These are normal reason. Unavoidable is normal reason. Idle capacity due to avoidable reason slash abnormal reason. Avoidable slash abnormal. Transfer to costing P&L. Transfer to costing P&L. And the last one is due to idle capacity due to seasonal factors. Due to seasonal factors. Due to seasonal factors. Use inflated rates. Use inflated rates. Inflated rates. Clear? Any doubts on this? Done? Okay. I may not give a note for most of this 26. I think this is the last question in the theory part. Some of this, if needed, will give a note. Depreciation, I am not going to give any note on depreciation. Depreciation is the diminution in the value of an asset due to use or lapse of time. It is treated as an indirect cost. Depreciation can be a factory overhead if it's a factory asset, admin overhead if it's an admin asset, and selling and distribution overhead if it is sales related asset. Interest and finance charge. Interest paid on long term funds is ignored in cost account, whereas any amount related to non equity funds, if it's non equity is non long term fund, then it will come as a separate line item in the cost of sales. We have already given note on this. If you look at in your cost sheet chapter, you would have written this. Interest paid on debt not related to equity funds or long term funds. Not related to equity funds or long term funds. If it's not related, will be considered in a cost sheet as a separate line item below selling and distribution overhead. If it is not related, packing expenses, again I've already given note there. Primary packing is a separate line item. Secondary packing is treated as selling and distribution overhead. Maybe I'll talk a little bit on fringe benefits. Fringe benefits are basically allied or extra benefits given by an organization. Fringe benefits are allied benefits or extra benefits given by an organization to its employees. These benefits, if they are very large, then you treat it as part of direct wages itself. If they are not large, then treat it as part of production overhead. If it's factory related people, others can go to admin overhead or selling and distribution overhead. So now write fringe benefits. Fringe benefits. This is also called as perquisite. You could have come across the term perquisites in labor chapter. These are extra benefits provided to employees if amount is material means it is large. Amount is material If amount is material, treat fringe benefits as direct wages, as part of direct wages. Fringe benefits as part of direct wages. If the amount is material, treat as part of direct wages. If amount is small, treat it as part of factory overheads. Treat it as part of factory overheads. Example is canteen facility. Canteen facility is a fringe benefit given by a company to its employees. Any doubts on this? Bad debt. Now, bad debt treatment has two different views. Okay, few people are of the view that bad debt is an abnormal expense. It is an abnormal expense. Ignore it in cost sheet. Abnormal expense. Ignore the same in cost sheet. Another set of people are of the view that bad debt is related to sales. Bad debt is related to sales. Treat it as part of selling and distribution overhead. So bad debt can be treated in two different ways. One view is treated as selling overhead. Another view is it is a financial loss, should not be included in the cost of a job or a product because it is an abnormal item. Everyone is not going to incur this. Different views are there. Now write bad debt. Bad debt. Option 1. Treat it as selling overhead. Treat it as selling overhead. Treat it as selling overhead. Option 2. Ignore in cost sheet. Bracket, mostly we follow this. Some specific question they may tell something else, but mostly we follow this. Clear? Any doubts on this? Next is training expense. I'm not going to give any note on training expense. The only thing is, in a practical world, if the training expense is huge, if it is huge, then you may not put the expense in 1 year. You may want to distribute this over a 2-3 year period. Why you want to distribute? Reason is very simple, because you have incurred this for training new employees, which is one time expense. The benefit will come till the employees are there in the organization, and it has to be traced to the appropriate function. It can be a factory overhead, it can be a admin overhead, it can also be a selling overhead. Canteen expenses, again, it is like your fringe benefit only. So canteen expense is part of fringe benefit. Again, they are saying you distribute according to the appropriate function, which is factory overhead, administrative overhead, and selling overhead. Carriage and cartage expense, I have given this in the cost sheet chapter, where if you remember in carriage, I would have said carriage inwards, carriage outwards. Carriage inwards is related to raw material. It's related to raw material, which is part of direct material cost. If it's related to finished product, it is a selling overhead. Here there's one more item which is given. If it's related to indirect material, indirect material is a factory overhead. Carriage related to it will become a factory overhead. So carriage, there if you remember, I have given direct material and finished product, related to raw material and related to finished product. Raw material is an allied expense, incidental expense. Finished product goes to selling and distribution overhead. In between you have indirect material which can go to factory overhead. Just write this: carriage and cartage expense. Carriage and cartage expenses related to raw material, related to raw material hyphen direct material cost. Direct material cost related to raw material direct material cost related to indirect material related to indirect material indirect material factory overhead and related to finished product related to finished product selling and distribution overheads related to finished product selling and distribution overheads. Raw material will go to direct material, indirect material will go to factory overhead, and your finished product will go to selling and distribution overheads. Clear? Expenses for welfare activity, I don't know why again a separate analysis, that is your fringe benefit. Incurred on welfare activity are part of general overheads and should be distributed between factory, office and selling on the basis of number of employees. Night shift allowance, this is an extra payment which I am going to make to the employees if they are going to work during night. So there is a day shift and there is a night shift. Workers in the factory which operate during night time are paid some extra amount known as night shift allowance. If it's due to normal reason, the treatment is exactly same as what you do in overtime premium. If it's due to normal factor, treated as part of direct wages. If some specific customer is asking, charge it to that specific customer, and if it's abnormal reason, take it to costing P&L. Now write night shift allowance. Night shift allowance. Normal reasons. Night shift allowance, normal reason. Part of direct wages. Part of direct wages. Request of specific customer. Request of specific customer. I'm telling my employees to do night shift because some specific customer wanted something urgently and he says I'm ready to pay that. Charge to specific customer. Charge to specific customer. Abnormal reasons. Transfer to costing P&L. Abnormal always will go to costing P&L in any of the analysis. Abnormal will always go to costing P&L. Why you need to be aware of all of this is an MCQ can come in exam where they'll give you 4 options and ask you the treatment. So unless you are aware of all these, you will find it difficult to answer the MCQ part. Research and development. Research refers to the expenses incurred for searching a new or improved product, new application of material, new or improved method. Research is treated either as production overhead, administrative overhead, selling overhead, depending on the function for which research is undertaken. This is not very critical at this juncture because ICI in their cost sheet format have given a separate line item called R&D cost. This notes were useful when this R&D separate item was not there. They have not revised this part of it in their material, but technically R&D cost is a separate line item in our cost sheet. Development expense are incurred in connection with a particular product and should be charged directly to the product. It will be treated as a deferred revenue expense. What is deferred revenues? You will apportion this over a period of 3 years, 5 years, 7 years, whatever number of years you want to do. Expenses on removal and re-erection of machine. What is removal and re-erection of machine is, I want to remove the existing machine and put a new machine on its place. Reason, the old machine life is almost over, so you want to take out the old machine and put a new machine. If you are incurring any expense on that which is not significant, then it is a production overhead. It is a production overhead. If it is significant, again it's a production overhead, but you distribute it over a period of few years. You distribute that over a period of few years, and if it's due to some abnormal factor, charge it to costing P&L. Next, expenses on removal and re-erection of machine. Normal reasons in bracket small amount. Normal reason in bracket small amount. Normal small amount. Hyphen factory overhead. Factory overhead. Normal reasons large amount. Factory overhead in brackets spread over multiple years. Spread over multiple years. I'll treat it as a factory overhead, but I want to spread it over a multiple year period. Abnormal reasons transfer to costing P&L. Abnormal transfer to costing P&L. Clear? Any doubts on this? We'll transfer this to costing P&L account. Okay, I'm kind of done with this chapter. We'll start with a fresh chapter in the next class. Any doubts on this chapter, let me know. There are a lot of problems we have done. Theoretical discussion is also over. If there are doubts, let me know, else we end the session.